to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
when the headlines move fast. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open right here on NDTV Profit on a day which may look slightly different than yesterday, but guys, you could almost argue that yesterday too, that recovery looked slightly different than what was anticipated. But the big story of the day, guys, to me, I don't know what the two of you thinking about, but the Iran stock market opening after 80 days from the time that the conflict started, the first time that the market will be open. Now this is a very actively traded market or whatever, but it's something.
Hopefully it's a sign of normalcy returning.
And you have Trump who's going to sign an executive order on Tuesday. That's today, 3 a.m. if I'm not mistaken, 3 p.m. EST, ET, sorry, 4:30 p.m. ET, Eastern Time. You don't know, I mean...
Well, he's postponed the attacks for now, right?
Yeah.
So
He's stopped, exactly. So, no, with all of this, I think maybe it's on the positive side where Trump is looking at. So, I think 1, 2, 3, 3 sets of positive news. Let's see how it goes for our markets.
Yeah, let's get straight into it, in fact. And US President Donald Trump, what Hiral was referring to, says that he paused planned attack on Iran. That attack was paused to allow for negotiations to continue. The US military, however, he said in a social media post and in fact in a televised bite, that the US military is to be fully prepared for a large-scale assault of Iran. In that social post, Trump claimed that leaders of Qatar, Saudi Arabia, UAE had all requested that he hold off on the attack. Meanwhile, Iran remains defiant, and Iran has issued statements warning US and its allies against making strategic mistakes or miscalculations in attacking Iran. Iran's latest peace proposal, apparently delivered by Pakistan and different from the one that was sent last week, is similar, in fact, to that earlier proposal, and Trump had, remember, rejected last week's proposal and called it garbage. So what has happened with global markets? You have Brent crude that remains elevated around that $109 per barrel mark. I'm talking about the futures, and rising bond yields around the world are causing a risk-off sentiment that is pervading all markets pretty much. So the US 10-year Treasury is at 4.6%, the 30-year is at 5.13%. The 30-year Japanese bond yield is near all-time highs as well. And so Wall Street mostly saw declines on those rising bond yields. The S&P 500 ending flat with a negative bias. You had the Nasdaq that dropped about 0.5%, and the Dow Jones Industrial Average that climbed about 0.3%. 4 of the S&P 500 sectors declined while 7 rose. Now in Japan, this is interesting because you had the Japanese economy that grew faster than anticipated in the first quarter at an annualized rate of 2.1%, and the forecast had actually pegged it at 1.7%. But remember, just as you're looking at earnings in the fourth quarter and thinking, look, that feels like an age back, even Japan is faced with a similar conundrum because inflation is rising and there's expected to be an impact of higher energy costs for Japan in the first quarter as well on account of the higher crude oil prices. In Asia, you have the Japanese Nikkei that's trading with cuts of about 0.4%. Hang Seng's up in the green, and Shanghai is down about 0.5%. Let's listen into what Trump said exactly when he mentioned holding off on the plan to attack Iran.
Well, other countries have come to me and they've said we were getting ready to do a very major attack tomorrow. I put it off for a little while, hopefully maybe forever, but possibly for a little while, because we've had very big discussions with Iran, and we'll see what they amount to. I was asked by Saudi Arabia, Qatar, UAE, and some others if we could put it off for 2 or 3 days, a short period of time, because they think that they are getting very close to making a deal. And if we can do that where there's no nuclear weapon going into the hands of Iran, I think, and if they're satisfied, we will be probably satisfied also. We've informed Israel, we've informed other people in the Middle East that have been involved with us. I was called by these three countries plus others, and they're dealing directly with our people and, right now, Iran. And there seems to be a very good chance that they can work something out. If we can do that without bombing the hell out of them, I'd be very happy.
Yeah, so would everybody else. Wouldn't you agree? James Knightley, Chief International Economist, Global Markets Research at ING Financial Markets, joining us this morning. James, if a resolution is found without further escalation, that is ideal, of course. The only question is when? Because in the next couple of days, we're entering the 4th month of the conflict that a lot of people anticipated would take weeks to get over. So what is the cost, in your opinion, at this juncture?
Yeah, you're right. We're just stuck in this stalemate where nothing seems to be happening at all. And the longer this goes on, the more stress that puts on, in particular, European and Asian economies that are net oil and gas importers, pushing up prices, the greater chance of higher prices that spill over into other components of inflation. And of course, it's eating into spending power. It's eating into corporate profits as well. So it's bad news for growth, bad news for inflation. And as you mentioned earlier, it's putting up borrowing costs, and that adds an extra headwind to global economic activity. So hopefully we will get something, but we've been here for weeks now, it feels like, and there's still some way away, it seems, right now. Although we've got some positive headlines, it's possibly today. The proof is in the pudding. We still need to actually see a deal. We still need to see those boats transiting through the Strait of Hormuz.
James, from the perspective of India in that larger Asian context, what's the view from where you're sitting? Because I would think that if risk of is pervading in the US itself, that has to do also with emerging market equity. So how do you view India in that larger context when you're looking at risk assets?
Yeah, I think you have to group India with most other emerging markets in this fact, facing the same stresses. It is a problem when you are a major net oil and gas importer and you're having to pay up, and it's making tough choices. What do governments do? Do they start subsidizing energy? Do they pass it on? And it is a challenging growth environment, and it means, as I mentioned earlier, the risk is we see higher borrowing costs which weigh on growth, higher energy costs which weigh on growth itself. And of course, more inflation. And that is just not a good combination for risk sentiment at all.
Got it. James, the quick other question is that if the conflict were not to end, yields stay high, crude stays high, this stagflationary scenario that the world seems to be hurtling towards, what does it do to appetite for risk assets? Does money move squarely to cash as it was for the better part of March, or what happens? Any thoughts there?
Yeah, well, I think even if we get a swift resolution, we are going to be faced with high energy costs through the rest of this year.
Yeah.
For one thing, we know that European and Asian countries are going to have to rebuild inventory, so they're going to keep a bid on energy prices. That's going to keep them elevated. We still don't really know the damage to infrastructure in the Gulf. And of course, also we've got to remember, thirdly, that shipping firms are going to be very reluctant to send their vessels back to the Strait of Hormuz. They've been stuck there for the last few months. They've not been making any money. They're very, very reluctant to go and put them back in the danger zone if we get any reinflammation of these tensions. So there's still a lot of concern that we could get very elevated prices right through the end of this year, even if we do get a relatively swift resolution to the current situation. So that is not a great story, I think, for corporate profits more broadly. And as I say, it keeps putting that pressure, that squeeze on spending power, that is just going to mean that risk assets, I think, could come under a little bit more pressure. And yes, as a result, when you've got bond yields continuing to rise, there may be a little bit of nervousness about holding longer-term treasuries and longer-term borrowing, longer-term bonds of other countries as well. So cash may well be the venue that gets a lot of the benefit in the near term.
Got it. James, one last question. Economists, by virtue of the job, are, my version is, looking at a glass half empty as well, simply because you got to point out the risks at all times. So I'm going to ask you to do the reverse. What is it that may happen, or where is it that you find the silver lining under the current landscape?
Well, both sides need a deal. Iran needs the money, and of course the US has got elections this year as well. Well, I think something will have to happen very soon because primarily in the US we've got elections this year, and Donald Trump's ratings are not very high, and the Republican Party is looking vulnerable to some heavy defeats, particularly in the House of Representatives. And that means there's going to be growing domestic political pressure in the United States for a resolution.
Okay, James, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Well, guys, we need a deal soon, for sure, for our markets as well and our macros as well. It is very, very desirable. But yesterday, Hiral and Alex, the markets
rebounded.
Did something.
Yeah, there was some bit of short covering as well that happened in the second half of the trading session. How it pans out today is also going to be interesting because there is that little bit of uncertainty that prevails. You are seeing volatility that is absolutely high because yesterday, if you see, you touched an intraday low of 23,317, and this is an early trade. After that, a strong recovery of more than 300 points from lower levels, as Neeraj was just pointing out, helped the index actually regain the lost momentum as well. And we eventually closed above the 23,600 mark. If you see in terms of the Sensex, a mild 77 points uptick is what we saw in terms of settlement. Nifty as well, absolutely flat if you have to talk about closing levels. But among sectors, it's interesting to see how IT did emerge as the top outperformer amongst that strong buying interest that did come in. You had pharma and private banking stocks that provided that mild positive support to the benchmark indices. And there was broader selling pressure that persisted across the other sectors. So media, auto, PSU banks, consumer durables, all of them actually ended as major laggards of the session. In terms of broader markets as well, they remained under pressure, but there was a recovery that did come in there as well. Your mid-cap 100 declined marginally by about 0.2%, and your small cap, which ended with cuts of 1.3%. Though in the first part of the trading day, you had the small cap index, which was down nearly over 2%. So there was that little bit of recovery that did come in. So yes, there has been that short covering that we're seeing in terms of markets. But from here on, it's interesting, as Neeraj is saying, a deal is something which is actually imminent now.
Well, hopefully it is imminent because we badly need it for sure. Yeah. So, the picture on the trade yesterday was very, very good. The question only is what happens today. Now, we already spoke about how, to my mind, at least for me, from a curiosity perspective, I think the Iranian markets opening up are really good. But I would suspect that the intraday directional move, thus far, or whether the move that happened yesterday seemed to be a bit non-directional, simply because if you see the broader end of the spectrum, which has been strong thus far, actually saw some profit booking and kind of stayed lower, the small cap end of the market, right? In some sense, second consecutive day of corrective move for the small caps. So that is a bit of a bummer in trade yesterday. And I think the elevated bond yields tell the story more than equity markets do. So crude is high, equities do their own jig, but if the yields are higher, then the bond markets are literally telling you that there is pressure right now. It might not be a great investing zone, maybe a good trading zone, if you will, unless of course you know the story behind the companies that you're betting on, and I think a lot of industries are doing that. Now, but think of it this way, right, guys? I was looking at some of the last few days, what Somit has found out on what trading rooms are saying, what some of the people are telling me. There's a lot of bearishness, for example, not just on tech, but also on QC companies, the internet companies, right? And primarily because there is inflation, what could happen to these stocks because the order values, etc., will go down. I was trying to think about it because there is pressure there. That one, the volume growth trend may actually remain undeterred because of the customer base. I mean, our co-anchor who's missing today swears by it, orders by it, left, right, center every day. So do I. Oh, so do you? Yeah. Okay, so we have two co-anchors. I have two co-anchors who kind of do this, and therefore that ordering value or the propensity is not coming down, and the higher NOV per order would actually offset some of those higher fuel costs that come in. Okay. And in a lot of cases, for QC at least, they move to electric mobility. So in some sense, the higher fuel cost doesn't quite hurt them. Part two, and food delivery actually could benefit by down trading. So customers may actually not order from the quote unquote hi-fi restaurants, but from cloud kitchens, which actually benefit the food delivery apps a lot more because their margins out there are much higher. So in some sense, the bearishness around Zomato and Swiggy in particular, but even in the private markets at the other places, may not necessarily
pan out
as much, and I think the results will be interesting to see.
Yeah, no pun intended.
No pun intended, agreed. But in terms of other factors, both your indices have staged an impressive intraday recovery, as we were just talking about, and the underlying momentum, however, has continued to remain bearish. So that's the worry right now. If you talk about Nifty and Bank Nifty, they're trading below their key exponential moving averages. So the VIX has jumped nearly 4.5%. We're still above those 19.5 kind of levels. And we're approaching that critical 20 mark, which is signaling rising fear and erratic swings. Now, in terms of the short-term trend, weak to range bound is what you're looking at, with stock-specific opportunities that do emerge. Nifty range, you're talking about 23,250 to 23,800. And if there is a sustainable recovery, and if it sustains above crucial levels, then 23,800 may open up the doors for 24,000 and 24,100. On the downside risk, if the market sustain below 23,400, you can see Nifty being dragged towards 23,250 to 23,100. In terms of Bank Nifty as well, 53,670 is the first key resistance level, and in terms of support, you're watching out for 52,990 as the first level. If they are broken, you can see the other levels on the screens as well. So it's going to be interesting to see how markets pan out, but let's see what the F&O data is indicating today. Puneet is standing by to tell us more. Puneet, good morning. What are the cues indicating today with the kind of recovery that we saw in the second half of the trading session? It seems there was good amount of short covering that did come in.
Well, most certainly it was a good session that will lead to some of the key triggers that we're watching out today as well, because we're back above that 23,600 mark, and while we've consistently highlighted that there's essentially only supports at 23,500 and 23,700, so we continue to monitor these key levels at this point of time. For the Bank Nifty as well, we've slipped back below that 54,000 mark, 53,500 odd, which continues to be a long-term support for now. And we haven't breached to those lows seen back in the month of March yet, as well as at the start of the year as well during the war. At 51 and 52,000. So 53,500, we've touched this level a couple of times and bounced back again. And hopefully this time around the case is also the same as well. But very interestingly, as you highlighted, yesterday's second half saw a major buying, and in the foreign investors, also in the cash market, 2,800 crores being bought in by the FIIs. Also in the index long, almost 1,100 crores being bought in the F&O market also by foreign investors, and hence that index long ratio has now gone at 12.49%. Versus the low of 9.9 at the end of last week. Today, of course, will be a volatile trading session because of the expiry for the Nifty 50 as well. So that is another trigger to watch out for. But across the open interest distribution level, this has been, very mixed in terms of reactions, because at 23,000 also, you're seeing a consistent increase in open interest for the calls for the puts actually at this point of time, while 23,500 continues to be a key level monitored by all the investors who are long in the markets as of now as well. And in terms of stock-specific action also, to round this up very quickly, you saw Amber Enterprises being one which was under pressure yesterday, down 15% in trade post the con call. So short build-up seen on this counter. Godfrey Phillips was the other one and will be in focus yet again today. While amongst the others you've seen in the open interest losers, Aurobindo Pharma and Power Grid, seeing longs being unwinded on both these counters. So overall on the benchmark, seeing limited moves as of now, but continue to monitor what happens, and if we can see a second round of buying again in this very interesting session as we close out the month of May.
Yeah, absolutely. Thanks so much for that, Puneet. Still another 10 plus days for the close of the month. Let's see how that pans out. But let's talk about stocks. Indian Oil Corporation stands out for me with regard to earnings and some of the factors that came into play, because on the EBITDA front, it was a significant beat compared with the consensus estimates, and that is likely on the back of higher inventory gains. And those inventory gains, of course, owing to a sharp surge in crude oil prices that was seen in Q4. Now, bear in mind that for similar reasons you saw HPCL rally on the day, so watch out for IOC. The refinery throughput stood at 19.73 MMT, and that was at 113.8% utilization versus a lower utilization in the previous quarter. The Petchem EBIT was also strong at 1,210 crore rupees compared with a loss of 360 crore rupees in the previous quarter. And a few things that you should watch out for on the management con call, which is what do the marketing losses stand at post the price increase, and bear in mind that there's another price increase that goes live today, that is 90 paise for petrol as well as diesel on the back of the previous 3 rupee hike that was already taken about. And beyond that, the crude sourcing strategy will be looked at. So take a look at the numbers. Revenue uptick of just about 2%. That's not where the magic came through. You had the EBITDA that came in at 20,716 crore rupees. It was significantly better than expected. Margin standing at 10% and the PAT down as much as 6%. Astral stands out as well, and this is on the back of a pretty good set of numbers. There's a recovery in PVC and polymer prices that have improved realizations in the fourth quarter. A strong plumbing demand and market share gains supported growth. In fact, that business delivered an industry-leading 24+% volume growth despite the weak PVC industry demand. What's more, you had the Kanpur plant ramp up that boosted sales in Uttar Pradesh and nearby regions as well. The weak PVC industry demand overall is something to pay attention to, but Astral has significantly outperformed peers, and that could reflect in the stock price today. Revenue growth of 24%, EBITDA growth of 29%, and a margin expansion of 70 basis points. All good sets for Astral. Citi has weighed in, maintained a buy with a target price hike to 1,900 from 1,800. Says strong volumes and low cost PVC have benefited. Inventory benefit has come through. CPVC resin backward integration project is on track. Finally, GE Vernova stands out, and this is something that Neeraj had also looked at. I stole it from him. Strong execution led to that 42% revenue growth. EBITDA margin expanded by as much as 530 basis points on a year-on-year basis. Important that it also stayed steady on a sequential basis. The board has approved a 55 crore capacity expansion, and that is for disconnectors and drives for 362 kV dead tank circuit breakers. Engineers who are listening in, please write in and explain what this means. That capacity is set to be created at the new facility in Tamil Nadu. Take a look at the numbers. 42% revenue uptick, EBITDA increase of as much as 77% or 76%, and the margin standing at 27.2% compared with 22%. PAT number up 89% here.
Okay, these are interesting names on my list. I'm looking at an Afcon Infra. Now, that stock was in focus yesterday as well on the back of the orders that have been cancelled. Now, what the management has indicated is that slower ordering and activity across multiple segments and the delays in project conversion is what has impacted business this time around, and hence a weak set of numbers. However, in spite of this weakness, the order inflow is very strong at 4,125 odd crores. Your revenues are down nearly 20%, EBITDA down 85%. Margins have probably gone into like lower single digits at 1.6% versus 9.1%, and they've actually reported a net loss this time around at 88 crores versus a profit of 111 crores. So that's a downtick coming in there. The second one on my list is Waaree Renewables. Now, I initially took this one up, but this is going to be a related party contract, so I don't know how much the stock is really going to see the benefits, but this is a landmark EPC contract for 350 megawatts, and this is a connected battery energy storage system project. This will be one of the largest private sector utility scale storage wins in India to date, and the target completion is slated within financial year FY27. It is structured as a related party transaction at arm's length with Waaree Forever Energies Private Limited. So watch out for this one as well. You have a GNFC as well, where they've actually reported their numbers, and it has been a turnaround quarter for them, where revenues have seen a growth of 7%. But if you see operationally, the EBITDA number has come in at 482 crores versus 240 crores. Margins have nearly doubled, 21.8% versus 11.7%, and the profits have jumped 87%. 396 crores is what you're looking at. So interesting numbers from a GNFC as well, Neeraj.
Yep, certainly. And once again, by the way, just one disclaimer or one submission. The two of you are allowed to steal stocks from me any point of time you guys want. Okay, let's talk about the stocks on my list, the Adani Group stocks and Adani Enterprises in particular, but look at all of them because after the US SEC settlement, the Department of Treasury's OFAC has settled allegations of Iran sanctions violation case against the Adani Group. So this is a very important development. Alex, I'm surprised you didn't pick about it because you spoke about it at length
because I was going to
yesterday.
speak about it separately. So I'm glad that you did pick it.
So just inform our viewers, what does this imply very quickly?
So it is separate, first of all, very importantly, from the SEC case that was settled last week, and this is related to certain transactions that took place between 2023 and 2025. This is through a middleman that was apparently selling Omani and Iraqi oil to Adani Group. At the time, the Adani Group did not know that this particular middleman was actually selling Irani oil. So when it was highlighted or found out, there was a reporting that was done, self-reporting that was done by the Adani Group to the OFAC, and there was a cooperation done with the investigation that took a little time to come to a conclusion. So that $275 million of levy of penalty is actually significantly lower than the maximum permissible penalty, which stands at $382 million.
Got it.
So the statement from the OFAC is that it was reduced because there was active cooperation and fixing of certain compliance issues with regard to the sanction process.
Interesting.
So it's important that is a major overhang. As you know, there's a capex program that heads to 2030 because the group has said that it's not dependent on foreign investors, but it always helps.
It always helps. So yeah, this is a nutshell. We'll probably talk about it in detail as well, but this is a big deal. I would suspect that Adani Enterprises could be one very key name to watch out for in the session today. CMEC, Q4, small company, but Q3 was amongst the best ever in its history, and Q4 has actually been a revelation as well. Look at the numbers there. 63.8% revenue growth, EBITDA margin at 48.7 versus 40.7, net profit at 103 crores versus 43 crores. So after a solid Q3, an amazing Q4, I think the street will be happy with it. We'll talk to the management at 12:30 p.m. today, and I think the commentary from the management about what happens next could be important, but keep an eye out for CMEC. Very interesting name. Keep an eye out for their interview as well, by the way. Could be interesting to know from them. Last but not the least, tomorrow I'll do a small piece on chemicals, but today I'm pointing out one or two chemical names. Deepak Nitrite is the one. Now the numbers came out, the stock didn't react too much, but look at what brokerages are saying about this one, and which is why I was highlighting it. MK, for example, is upgraded to a buy from a reduce and a target price of 2,000 versus 1,800. But the argument that both MK and Nuam are making are important. MK says that it remains well placed with 2 quarters of raw material in stock for Deepak. The company expects better sequential performance in Q1 owing to improvement in spreads and better volume pickup as well with raw materials in place. They raised their FY27 and 28 EBITDA by 12% and 6% respectively. Nuama does the same. They were hold, but they raised the target price to nearly 2,000, 1996. They are raising the profit after tax estimates by 11.6% and 13.6% for FY27 and 28 to factor in better FY27, 28 spreads respectively. Watch out for Deepak. Could be an interesting one today. And Chemplast Sanmar started a production of R32 refrigerant gas. Could be very interesting for this one as well.
All right, very interesting updates. And let's shift and talk about the four-wheeler space. In fact, the OEM space, original equipment manufacturer space. So four-wheeler makers have given a strong demand in FY27, and that guidance is based on optimism of robust growth led by healthy demand. But what could play spoil sport, and what should we watch out for in the space, and why is this robust demand still penciled in with so many headwinds on the horizon? We've got Puneet joining in to tell us more. Puneet?
Well, thank you for that. Just 2 key points. What has been actually announced in terms of growth guidance by the companies, and especially in the four-wheelers passenger vehicle space. So we can pull up the table, and that shows you the growth that we've seen. So for Maruti Suzuki, penciling in a growth of almost 10%, while the others, including Tata Motors as well, some have given guidance for the industry, and Tata Motors also expects to achieve that of 10%. Mahindra is the highest, as you can see, and this is the first column talking about the growth guidance of a mid to high teens that they've highlighted, highest among the space. And for Hyundai, very change in tone essentially in this quarter in terms of growth guidance of 8 to 10%. Launches is the other one. Now we've given launches for FY27. Maruti doesn't give that, so we've highlighted that they're targeting 7 new launches by 2030. For Hyundai, 2 new launches in 2 different segments into this year in FY27, and overall 26 by FY30 as well. Mahindra also, very interestingly, no new nameplates that they're launching this year, but there will be 2 refreshes as well as 2 new nameplates by Tata Motors, as well as 4 new refreshes. So it's a year of launches that continues from what we've seen last year. And finally, on the EV launches, given what we see in the current geopolitical landscape, lot more focus continues to be both on two-wheeler scooters as well as on the EV side ramp up. So Sierra will be a key one year for Tata Motors, while for Hyundai specifically, they're launching a new compact SUV. So that will be very interesting. That will go head on with the Nexon as well. And for Maruti, they are slow at ramping up the e-Vitara, but that's something to watch. But 3 key highlights of what could be the spoilsport. One, of course, is the very high growth that you saw in H2 of FY26 because of GST rate cuts. That will be something to watch. And increased in the first time buyer demand was driven because of the GST rate cut as well. So Maruti highlighted 51% first time buyers versus 42% pre-GST. So incremental growth, well, that'll be come from. And finally, on commodity costs as well, all expecting impact in Q1 and Q2, but how much of the price hike will be taken, that's something to watch as well.
Okay, thank you, Puneet, for that. In fact, we have Mumuksh Mandlesh, our research analyst at Anand Rathi Institutional Equities, joining in. Mumuksh, good morning and welcome to NDTV Profit. This is Hiral on this side. You know, an interesting year in terms of FY26 when you talk about auto as well as auto ancillary companies. But now you're talking about supply chain concerns that could be coming in. However, in spite of all of that, you've seen all of the companies who've given out a very strong guidance for FY27. How are you reading into it, number one?
Yeah, hi, good morning. So for FY27, I think very interestingly, PV space, we estimate a 7.5% growth for the whole year. And all the OEMs are talking about 10% kind of a range for this year. So what it indicates is the high competitive intensity in the whole space. As of now, demands are holding well. Even post-war dealer checks suggest that demand is fine, and the growth could be a good high single-digit growth for the full year. But I think the headwinds are for the first half is the commodity inflation pass-through. Like now we are into 5th month of the calendar year, no price hike yet by Maruti. And very small hikes by likes of Hyundai and Tata. So what we definitely see is the competitive intensity being quite high. Players like Hyundai, Maruti want to regain market share. Maruti has lost market share for last 6 years. They want to catch up post this GST. So definitely the intensity becomes so high for this space. There will be more challenges in the margins if you consider in the whole OEM space.
Mumuksh, hi, Alex here. So the question that I have though is that you have a number of headwinds that we have to contend with as an industry, right? If you're talking about the automotive OEMs, you have a situation where energy costs are going up, so petrol and diesel prices are going up. You have a situation where there's likely to be an El Nino, a pretty bad one this year, where monsoons may not be good, particularly the spatial distribution. And so both urban and rural demand could get affected. So this is, despite that, you're saying that you're looking at a robust demand?
Yeah, so there could be a near-term challenges, but what we are seeing post GST, like first-time buyers demand, in CV side, a lot of small transporter demand. So that is really creating a pull in the demand. And for second half with the base catch-up, there would be some moderation. But we still don't see yet a challenge on the demand. I think the challenge is more on the margin side, while demand continue to be well, except for tractors, the base is too high. and the El Nino could be a more spoil impact for that sector, and say more not in FY27, more in FY28 with the impact on the reservoir levels. I think among all the segment, tractors could be a little muted for next 2 years, while we still see two-wheeler, PV, CV to be continue to doing well. Obviously, for a month or two with this war scenario, there could be a little challenges, whether on the production side, and also we are seeing challenges on the labor cost with the minimum wages hike in Haryana. So there are definitely a lot of challenges, and there are supply challenges as well. We are seeing some OEMs also facing some limitation on the supply. So I think it's more for few months of impact, and then I think we should be back on the demand side.
Okay, so Mumuksh, on the demand side, probably after 2 months of some bit of lackluster moves, you're expecting it to come back. If you have to look at FY27 as a year for the auto majors, let's divide it: passenger vehicles, CVs, and two-wheelers. Who do you think will have the best run, where valuations are also reasonable right now and could be good investment opportunities with the kind of corrections that have already come in the markets right now?
Yeah, so how we look at the for next 1 year is there are basically two companies in whole OEM space which can negate the challenge of margin pressure, which are Bajaj Auto and TVS Motors. Bajaj does 40% of the exports, and TVS more than 25% of the revenue is exports. So the INR hedges will be the key offset there for these two companies to negate the margin pressure. So these are two names where we are particularly positive, and Bajaj Auto is remain a comfortable valuation. So that could be one pick clearly. We like the name. And also in this scenario where crude prices are going up, a lot of markets for these two OEMs in Africa, like Nigeria, Latin America, can get a boost because a lot of those economies depends on those currencies for the currency through the crude exports. So I think rest of the OEM space will see a lot of challenges, and we are more comfortable on two-wheeler side, then followed by CV, and then the PV. PV basically the intensity is what is concerning where the whole competition scenario is there.
All right, Mumuksh, on that note, thanks so much for taking the time and pleasure speaking with you. Certainly something to look forward to. Now, I have to slip into a very quick break. On the other side, we'll talk about a lot more stocks and the strategy that you should employ at the start of trade today. Stay tuned.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on
Back with India Market Open right here on NDTV Profit. Pull up the implied open for you. And much like any other day, it promises to be a flat start. The question only is that the way we saw a bit of an intraday recovery, can we see more of that today as well? Difficult to call, and which is why we are not making that call. We are asking Kush Bora to make that call. Joining us is Kush Bora and Parag Thakkar. And you know, Parag Bhai has become a bit of a tactical player as well, at least in his commentary. He may not do it in his portfolio. That's a separate thing altogether. Gentlemen, both of you, thank you so much for joining in. Kush, to my mind, it was a surprising intraday recovery yesterday. Maybe you anticipated it, but I clearly didn't, or be that as it may, which is why you are giving the calls here. Does that have any implications for what happens today from a short-term trade perspective?
So first up, a very good morning. This is what I call a storm in a teacup. इतना कुछ हो रहा है, but we are not going anywhere. Like, you know, 1 step forward, 3 steps back, what have you. But कोई directional play नहीं है, and that's why if you see for the last at least about 5 to 7 sessions, if not more, I've been saying index तो avoid ही करो. Stock specific action है, focus on that, right? See, it's a very encouraging move yesterday. Don't take anything away from the fact that, you know, we recovered, what, about 200 points, a little more from the low point of the day. Very encouraging move. But does it give you a clear directional play on the Nifty after that also? Not really. So mixed cues, mixed views, you know, on that front. The mixed cues are also aided by the fact, I think even you, Hiril, you know, mentioned this in the opening commentary, that the broader markets, they were a bit of a surprise, you know, when the Nifty gave you this kind of a recovery, the advanced decline ratio of nearly 1:3, you know, in favor of declines, obviously, not something that you would have expected. And that is why a mild caution on the indices is still warranted. Right, just a couple of factors though. A continuation of what we highlighted yesterday. FIA positioning is still at 88% short, but that trend continues where they reduce the number of contracts on the short side. So yesterday, I think about even 7,000 or more contracts covered on the short side. We spoke of how the number of stocks below the 20-day DMA on NSE 500 was 310. Now they are about 365. Once they cross that 400 threshold is when you get into that oversold territory, and the rebound trade becomes that much more probable, you know, if you can call it that. So right now the view remains no trade on the Nifty in a positional way. Intraday you can keep playing the trend. 23,800 the 50-day moving average, and then about 24,000 the 20-day moving average. Still resistances for the Nifty.
So you're speaking about the Nifty 50, but in trade yesterday you had the private banks that came back to the fore, right?
Yes.
And those State Bank of India was one of the big losers. The question is, do you treat the Bank Nifty separately from the Nifty 50?
Very interesting observation, very interesting question, because you know how we've been speaking about the lack of leadership in the markets. Bank Nifty नहीं चल रहा, IT नहीं चल रहा, Reliance नहीं चल रहा, तो कहाँ से Nifty चलेगा, right? To my mind, Bank Nifty is actually starting to set up beautifully for a positional long trade. There are a host of technical factors, let me just name a few. First, you've got these heavyweights, at least on the private banking side, which are beaten down and are due for a rebound, right? That is one. There are green shoots that I'm starting to see on the weekly setup, not on the daily setup, mind you, on the weekly setup, where the downward momentum is starting, at least the strength in it is starting to wane. So that is another factor. PCR for Bank Nifty is at 0.8, very close to those oversold territories. Also, if you see that the 50 to 700, 800 gap that we've been speaking about, very nearly filled yesterday, missed it by about, I think, 5 points or so. We'll take that, right? So that technical overhang also moves out. Any positive cue from especially the geopolitical side will make for a very sharp short covering rebound on the Bank Nifty. Nifty IT also, mind you, but I'm still studying that, so maybe I can come back, you know, with the stocks and the detailed view on Nifty IT tomorrow. But right now Bank Nifty is setting up beautifully. If 50 to 700 is held, you could see an up move on the Bank Nifty. So view is starting to turn constructive on Bank Nifty.
Okay, that's interesting. But if you're seeing, you know, the setup for Bank Nifty, which is becoming stronger versus Nifty, because that was the reverse that we've been talking about. So in terms of your top picks, do you still have financials which come in today?
Financial, yes, not a banking call though, but yes, I do have a financial, and today, by the way, all three calls on the long side. So Ganesh Housing, SCI and Ipca Labs, these are your three calls, all of them on the long side. Ganesh Housing, by the way, we've discussed in the recent past, because of market volatility, it hit the stop loss and then it's again starting to move up. So just on a lighter note, सिर्फ आपका ही नहीं, हमारा भी stop loss trigger होके stock ऊपर जाता है, right? So Ganesh Housing 725, 747, are your targets. 690 is where you keep that stop loss. SCI, again the shipping space has been doing well. By the way, GE Shipping is something that we pointed out yesterday also after market opened, that it's an area to go long on if you want to. 354, 364 targets, 334 is where you keep that stop loss. Ipca Labs, again for targets of 1680, 1720 with a stop loss at 1600. And just to quickly mark Marksons Pharma, yesterday's weekly pick, the first target hit very close to the second target. If you have it, keep holding it.
Okay. Parag bhai, good morning.
Good morning.
And a lot of large caps in focus, right? So I want to talk about two with you before we get in, Somit. One of them is yet again the Adani Group and one more resolution that has happened.
Correct.
Two, JSW Steel and the block that GQG's name has come in along with SBI Mutual Fund, if I'm not wrong, which has done this. So let's start with JSW Steel.
So JSW Steel remains one of the clear commodity plays, and now net debt is just 54,000 crore. This quarter EBITDA was 8,500 crore. So net debt to EBITDA concern is out of the way. They have clearly said that they are going to invest 30,000 crore per year, right? And they are going to raise their capacity to 78 million tons from 38 million tons right now. So in short, they are doubling capacity over next 4 to 5 years mostly from internal accruals only and through partnerships with JFE and POSCO. So you are saying that this 78 million tons means they can do a bit of 85,000 crores. And right now, for example, they are trailing, I'm saying, is around 11 times EBITDA. So I would say that even if you don't assume the multiple to expand, the earnings itself will grow at 18% CAGR and net debt will not go out of the way. Plus yesterday China has said that they want to remove the capacities which are not profit making and not lucrative out of the system. So everything is coming together for this company. And I would say that, it's a clear 15 to 18% compounder.
The beauty about JSW Steel as well, much like you talk about, not in the same way as Airtel, but the beauty about JSW Steel as well, that it is kind of compounded through, even though you call steel as a cyclical industry, JSW Steel's 5-year chart, if you look at it, or a 10-year chart, will show you it's actually had a near linear move. It's very unlike what a typical commodity play would be, and that's the beauty about this one. Okay, the other one, Parag bhai, Adani Group, and yet another resolution. Alex spoke at length about the importance and why this thing is what it is, the nuance of what has happened yesterday. But one more feather in the cap, if you will. Does it aid the sentiment more? What do you do?
No, the overhangs are going completely out of the way now. So now it is business as usual, and that is why we have seen more domestic institutions, FII like Capital International, SBI Mutual Fund now coming and buying Adani Group stocks, because now the overhang is getting removed. The EBITDA is coming to the fore, that real operating profits are now showing up. Like Adani Power today, for example, now they have a lot of lot of capacities which are tied up in long term. So your long term visibility of cash flows is improving in every company. Earlier it was only Adani Ports, which was coming to the, I would say, real textbook buy from cash flow yield perspective and all. But now many others are now coming in. So I would say that yes, positivity keeps.
So the several of these stocks, though, Parag bhai, and you keep very close watch on the valuations as well, right? So if an Adani Enterprises fell below 2,000, and now it's come back quite significantly from that mark, then if you look at the various listed entities on the group, which stand out to you when you look at the cash flow yield, various other metrics, the potential as well as the valuations?
I think Adani Ports is always there. It is a great buy on dips like JSW Steel or Bharti Airtels of the world. A great buy on any dip you get. Adani Power is now coming up in terms of the predictability of the revenues, because all these power plants are getting PPA for long term, and these are profitable PPAs. So this is the other thing which I would say. Adani Enterprise, of course, the new Mumbai airport will aid to EBITDA in next year, and of course I think I am also looking out for something like Adani Airport IPO over next 6 months. So.
Okay, so that's what we should be watching out for in terms of Adani Group of companies. In fact, we'll have a detailed discussion about the stocks with our guest at 9 a.m. as well. But moving on, it's that time of the day where we do, where we get Somit Sarkar with all the chatter from the dealing room. Samit, good morning. What are the dealing rooms telling you?
A bunch of stocks that dealers have highlighted that one should keep an eye out for from Brazil's perspective. BL, Nykaa and Page Industries. Now, dealers indicate that there are buy flows on the large HNI desk in all the three names that they're expecting strong Q4 numbers. The numbers could be much better compared to what the street has been anticipating. For JSW Energy, obviously yesterday the positive news flow was the stake sale in JSW Steel. But apart from that, dealers have specifically highlighted that there are buy flows on the FII desk for JSW Energy as well, and delivery volumes are seen on the higher side. And lastly, when it comes to a cash counter called Nitco, there are buy flows on PMS desk. Dealers are expecting a large land deal to be announced very soon by the company. So keep an eye out for Nitco as well.
So interesting stocks, Soumya, thanks so much for that. So a few of those stand out, and BEL, Nykaa, Page Industries certainly buy flows on large HNI desk. JSW Energy is interesting, and Nitco as well. So if I list out all of these stocks, particularly from a technical standpoint, Kush, which of these stand out to you?
Very clearly, JSW Energy. The stocks had a good run, mild correction, 200-day moving average is acting for the past 5 sessions, right? And last couple of sessions, there's been an uptick in volume as well. So, with this profit booking round done in JSW Energy, support kicking in and fresh buying in the last couple of sessions, I think this is one stock that you should have on your radar. 545 and about 560 plus kind of levels very likely on this one. Positional support on the 510, 515 zone, where the stock's been taking support and rebounding from in the last 5 sessions.
Okay, so that's with regards to JSW Energy. I want to talk about the fuel price hike, but I know it's just a drop in the ocean yet again. The second hike in 4 days is what you're seeing. So probably IOC, BPCL, HPCL will be in focus because prices have gone up by a mere 90 paise per litre. The first hike was around 3 rupees per litre on Friday. We all know what the reason for the hike is as well, and the kind of impact it could have in terms of the EBITDA of the company. Before I take a fundamental question, on the charts, are you seeing any green shoots there?
None whatsoever, and I think RPK discussion mein maine suna tha ki whatever is being done is just not enough, and that itself is playing out, right? It's playing out in the price action as well. I wouldn't really go long in some of these names. Short le sakte ho, but again, the momentum on the downward trend is also not as strong. So for me, this still remains on wait and watch or perhaps an avoid list.
Parag bhai, having said that, within a span of a few days, we're now talking about 3.9 rupees per litre, right? So at least it is not as bad as it was last week, right? So was that in the price? And from that perspective, anything that happens from this point, and you also saw IOC numbers. So there were inventory gains that have come through. EBITDA was significantly better than expected. So how do you view that?
See, first of all, I would knock off this inventory gains part like treasury losses in banks. It is all one-off, right? So let's focus on core. So we know that before the price hike started, if crude is at say above 100, they need a minimum price hike of 15 rupees. Out of that, 4 is taken now. Right, so as you rightly said, the pain is getting reduced, but I would say pain is still there. And unless, but yeah, why I will stay away from these stocks, not go, I would say not sell or not buy, both, is that once this geopolitical tension eases, crude oil falls, then they'll be the first one to rally. So there is no need to sell also, and there is no need to buy also, because if the situation remains like this, you need further more price hikes, significantly higher.
Correct. So I think it still becomes a status quo on that. Two companies, Godfrey Phillip and ITC, Parag bhai, will be in focus, where BNK has come out and said that Godfrey's pocket Marlboro prices have been hiked from 70 rupees to 85 rupees, and ITC's Gold Flake Superstar prices have been hiked from 70 rupees to 79 rupees. Now, both of these will be almost 8 to 12% of the overall sales volumes of both of these companies respectively. Your views in terms of Godfrey and ITC? I mean, ITC I know has been one of your favorites, is this price hike which could probably be enough? I mean, we've already seen a price hike in the past. This is a second one coming in here.
So there'll be a staggered price increases, as the chairman has said on ITC. It will be a staggered price increase to take care of their margins and all, and not, at the same time not to pressurize consumer too much. But the price hikes again has to be very high, right? On an average 30 to 40%. So it's a still, I would say, a complete relief is still some time away. But at this price with 4.5% dividend yield, it's a, so like, you know, some stocks you buy like, you know, like you are, at this price ITC is like cash for me.
Exactly. So another value investor has bought Parag Parikh FlexiCap Fund has added stake in ITC and a few IT companies in the month of April. So.
So IT is also doing well, right? Last 2 days we have seen Cognizant. Yesterday Cognizant was up 9%. Infosys ADR was up. I think that trade is also changing now, and IT might see a good recovery. And just to say, TCS is 15 times trailing earnings. Yes, it's amazing to see that. So now market has priced in that there will be very, very low growth. So the expectations are very low, and that is the time when rally starts.
Okay. All right. On that note, let's turn to Eicher Motors. It's in focus on account of the company receiving government approval for a large land parcel in Andhra Pradesh as part of its next phase of capacity expansion. Puneet is joining in to tell you why this approval is significant and what this capacity expansion is for. Puneet?
Well, thank you for that. It's definitely a big capacity increase that the company has announced, and the 2,500 crore number is also very crucial as well. So as you rightly said, 216 crore land parcel in Andhra Pradesh, the first plant outside Tamil Nadu for the company, and the capacity is very interesting because post Q3, company had announced that the capacity is almost 12 lakh units per annum. They had already announced brownfield expansion for another 2.5 to 2.6 lakhs. So essentially going into Q4, the capacity was 14.6 lakh units per annum and announced the further expansion to 20 lakhs. Now this was interesting because where this would go is now being answered, that a lot of that capacity increase could go to Andhra Pradesh as well. This is almost a 66% capacity increase that the company has announced from the 12 lakh base at the end of Q1 or Q2 as well of FY26. Now, very interestingly, this 2,500 crore amount is in focus because after Q3, the company has actually stated 958 crore capex. So the number has increased. If it's interesting, in some clarification there, if this included the land capex as well, but that's something to watch. So 958 crores has now gone up to 2,500 crores as well. And this capacity increase earlier was planned in by Q3 or Q4 of FY28. So it will take 8 quarters to come in incrementally at this point of time. But with this, the company is expected to announce results on Friday, 22nd of May. So a little more clarification as well for this deployment of 2,500 crores in terms of time frame, but a very big update coming in for the company.
All right, thanks so much, Puneet, for that. Parag bhai, what's your view on Eicher Motors? Royal Enfield ultimately is the play. Even if, Eicher has a commercial vehicle play as well, but you primarily speak about Royal Enfield, right? So if there is a situation where there is new capacity that's going to be created, the question marks on demand don't go away though.
Yeah. So basically, you see, auto OEMs, even yesterday, TVS Motors corrected by 5%. I don't know whether some people have sold it because they invested in that Jana small finance bank, and it is kind of, capital. But I would say that, so many auto OEMs, right from TVS Motors, Eicher Motors, Maruti, Hyundai, are coming in the value zone of buying, and they have corrected nicely now. So we are looking at it, but the point is that, see, there are two things which are not going away. The near-term pressure on margins is clearly there on all auto OEMs because steel, aluminum, copper, zinc, everything has rallied. And plus petrol, diesel prices are going up. So there can be some demand destruction also. So that's why we are just keeping a close watch on this pocket, still not buying into it.
On the charts, Kush?
For Eicher in particular,
yes.
See, from a near-term perspective, there's very clearly pressure. It's holding on for dear life around the 200-day moving average, and could slip further. But if you look at it from a long-term perspective, including the COVID lows, right? Very strong upward trending bias on this one. So if you do get it, in this kind of a dip, fall anywhere close to the 6,600 mark or thereabouts, from a positional standpoint, this becomes a very strong buy. So yes, I would have it on my radar, not a momentum play, but closer to 6,600, maybe even 6,700, that zone becomes a very interesting buy from a long-term perspective.
Okay, just a quick one. I'm coming in over here because we're talking about Eicher. As we did speak to our auto analyst in terms of the FY27 guidance, but the companies have been very vocal about important that it will be strong. However, there are deterrents that one needs to take into consideration because passenger vehicles have given out a very good performance in FY26. FY27 guidance is strong, but you're talking about GST benefits which go away in FY27, so your base somewhere is already becoming high. Secondly, if you talk about El Nino, that could be another deterrent that one should be watching out for as well. In that kind of a scenario, Parag bhai, how are you looking at the passenger vehicle space? I know Tata Motors PV, one of your top favorites, but apart from that, if you have to look at the segment.
So, as I said, for example, Hyundai is going through this MSCI rebalancing, so there's going to be a forced selling in Hyundai. So, we are keeping close watch on all these counters. We like them at these prices, but we are just thinking that if near term is too bad in terms of margin pressure and demand destruction going forward, then we should wait out a little bit more.
Okay, so that is one more aspect on autos for sure. A lot of, like we said, chemical names which I do well. Kush, quick 30 seconds though before the market's about to start. But any of the chemical names on the charts for you?
Not really.
Deepak Nitrite. I'm giving you a specific example with a lot of brokerages. 20 seconds.
No, not really. It's seeing some sort of a selling pressure, maybe closer to about 1675 thereabouts becomes an interesting buy. Right now there is pressure with volumes.
Okay, pressure with volume. So bear that in mind, viewers, that some of these were anticipated. The mid-cap rally that happened from April 1st propelled everything along with it. So you might want to be careful when you kind of try and do this as well. But, well, 9 a.m. about the time when the markets will start. The key only is that will there be some movement into specific pockets like IT, the Adani Group might be in focus, and lots more may be in play. Alex, the implied open suggests what, about a 5-point downtick, so nothing too dramatic out there, I would suspect.
Yeah, absolutely, Neeraj. And in fact, that remains the question to see what is going to drive the moves today. We'll know soon enough what the reaction to the Adani Group stocks is going to be, because there was a significant development last night, and some of you may be aware of this. If you're not, let me take you through it. The Adani Group has settled with the OFAC of the US Treasury Department, and this is our Treasury Office. What is the OFAC? It's essentially the Office of Foreign Assets Control. What do? They ensure that the sanctions that are in place around the world are followed. Now, the context is important to understand. First of all, the payment of penalty is $275 million. It could have been higher, and that is why the context is very important to understand. This relates to the purchase of LPG that was conducted by the group between 2023 and 2025, specifically November 2023 and June 2025. This was done through a middleman that was apparently selling gas from a couple of regions that were not sanctioned at the time. And so from the perspective of the Adani Group, they were buying gas that they thought was legitimate and that was above the board. It came to light later that this middleman was actually selling sanctioned Iranian gas. And as soon as the group came to know about this, there was a self-reporting that took place, and there was an investigation that was conducted by the OFAC. There were counsels that were representing Adani Group and that were sharing relevant information over the period of the investigation. All of that has come to the fore in this settlement that has come through. $275 million was paid out, but $382 million was the maximum permissible penalty that could have been levied, and the OFAC stating very clearly that that penalty was reduced because of the cooperation that came through from the Adani Group and certain changes that were made to the compliance process to ensure that such slip-ups do not happen in the future. So it's important to note that this could have proceeded in a civil case. It has not taken place. It has been settled. It is different from the SEC case that was settled earlier, that is last week. That is the second thing. Third thing, it could have been a higher penalty. It was settled for less. And most importantly, it's also clear from the fine print of this that the Adani Group is saying that this is not an admission of wrongdoing. It wants to settle this matter and move forward. And why is that important? That's where the context comes in. it is important from the perspective of the capex program of the group that heads into 2030, a lot of physical assets being created, and of course internal cash flows and domestic debt is perfectly fine for that, but they do access the international market, and the moving away of these headwinds are a significant step in that direction. There should be a lot of interest from the global market now to invest in the group. So that is the long and short of it, Neeraj, and that's how things stand.
Yeah, important. And Devin Choksi Johnson to talk about this. Of course, Parag Thakkar with us as well. We'll kind of weigh in on that too. But just bring up, maybe there are some initial reactions, maybe there aren't. Because remember, there has been a bit of a rally into some of these stocks already. So some bit of it has been maybe priced in, but look at that. For now, looks like they'll start off well. Let's see if they settle down. Devin Bhai, thanks so much for taking the time out and being with us. One more overhang away. In some sense, some people are saying this was probably the last overhang, if you will, on that side, and that going away enables the group to be able to raise capital globally as well, which is important in infra business, and therefore people are viewing this constructively. Are you doing the same? Is there more optimism out there?
Yes, Neeraj, good morning. In fact, I think I remember a couple of days back in the last week, I think we discussed this subject, and I was pretty sure that I think this particular thing is also going out of the way. Because I think the group had initiated the entire process of disclosure to OFX, and that's where probably we all were believing that I think the things are getting settled down. With this thing getting settled down, 2 or 3 important outcomes I think as we see it, I think likely to happen. First, they are talking of demerging their assets, road asset to begin with, airport thereafter. And for that, I think capital raise program, you definitely require this overhang to go out of the way for sure. Repricing of the debt is a second aspect, I think, which the group is probably trying to do, largely because of the fact that the current environment in which they are expanding the size, capacities in each and every area of activity. And that is where probably I think you require to bring down the cost of the fund wherever possible. And particularly because of the higher amount of EBITDA that you are generating, giving larger confidence to the lenders in this kind of situation. So I guess I think the situation is getting normalized. Good time beginning, I believe, for most of the group stocks. The cap is probably, I think, getting out of the way, and you are likely to see the implementation of some of the larger projects which they have been conceiving for long now. So overall, a good sign, I would think so.
Okay, Devin Bhai, that's an interesting take there. In fact, I would want to take that conversation forward with Parag Bhai as well. Parag Bhai, as Devin Bhai is mentioning about reduction in cost of capital, you're talking about the capex plans that get accelerated as well. Do you think this would actually warrant an automatic upward revision when you talk about target multiples, or even if you have to talk about the EV to EBITDA for the group as a whole then?
So the stock prices have already rallied. That is one thing. But I would say that yes, as I said, the institutional interest for the company, for the group companies, from equity market perspective as well as debt perspective, will increase significantly due to this. So you are right. In a medium to long run, definitely, I would say that multiples will expand for sure. And as we know, EBITDA is already moving up very swiftly. So yes, there is a long, but in short term, absolute short term, the stocks have rallied significantly. For example, we discussed Adani Enterprise at 1850, now it is 2750. So already there is a 50% rally.
Yeah, that's a fair point. In fact, that's a good note to get Gurmeet Chadda on for. He's managing partner and CIO Complete Circle. Gurmeet, good morning to you, and thanks so much for taking the time. Hope all well. The question to you, and what we're talking about right now, is the latest removal of a legal setback for the Adani Group, and seemingly the last in a line of problems that they had been contending with for some time. How do you view this, one, from the perspective of all of these legal hurdles now going away and the focus now shifting to growth and capex and physical asset creation?
So good morning. With a disclaimer, I don't own majority of the Adani stocks. I think, of course, this is sentimentally positive, but as Parag Bhai also said that the market was expecting it, and the price action was reflecting it for some time. Maybe a little positive within the for more for the power portfolio for Adani. So Adani Power is still, I mean, I'm not saying 30 to 30 times is cheap, but considering the way entire energy pack has moved, there could be a bit of a impact. And then, I agree to that point also on cost of funds. And more importantly, directionally, it also signals more normalization in trade relations with US. And I think that to me is the larger takeaway than just discussing one or two things. I mean, we've had few more rounds, even during the Iran conflict, with our team going there and discussions happening. We have, I think, few visits also lined up. So I think it's more also important more from an overall, normalizing of ties, but of course positive. And I think that, this would help you lower the cost of funds. The capex plans would now be more assertive, and it's a very large market, both from a, capacity enhancement as well as from a fundraise point of view.
Got it. Okay, Devin bhai, and fair points. Just one last question to you on this one. What's next now? Are you looking at execution? Are you looking at scale? Are you looking at cash flows?
Well, fortunately, the cash flows are supporting big time. Capex discipline is at the best level. EBITDA to the debt ratio is around 2.25, 2.5 times, so which is not bad at all. So that is a very, very positive thing. And should this capex discipline continue, then in my viewpoint, I think the execution ability is proven as far as the group is concerned. I believe that I think target that they have set for 2030, they are probably talking of completing those targets by 2027-28. So that is something which I think I would like to see how soon, how fast it happens. And probably I think with this embargo going on, it should help them in raising money and implementing the project at a faster speed.
Got it. Okay. Devin bhai, we'll leave it at that. Thanks so much for taking the time out and being with us. Really appreciate your time. Some of these stocks are starting off well. Just before I get in, Gurmeet, on some of the other points as well, Kush Bora. By the way, viewers, standard disclaimer, of course. You're watching NDTV Profit, and NDTV is owned by the Adani Group as well. So with that clear disclaimer, it's important to highlight this. And some of the stocks are revving up a bit, Kush Bora. Is there a trade in any of them, on the long side or on the short side?
It'll be more of a book profit trade, Neeraj.
They've run up,
They've run up quite a bit. The medium-term structure on Adani Enterprises, Ports and Power has turned beautifully bullish. But you might want to book profits and buy again at declines. So right now, on this news and this kind of price action that the gap up, that the pre-open is showing, you might want to book profits in the near term. And like I said, consider again on declines.
Okay, fair call. Gurmeet, been a while, but good having you, and at this active time of the market. The results season, Gurmeet, and some of those companies have delivered some fabulous numbers. I was looking at, this morning I was looking at some of the chemical names and what they've delivered, from a Styrenix to a Deepak Nitrite to the amine companies, Balaji Amines, etc. That cohort seems to be delivering numbers, and in select cases like Deepak Nitrite, the brokerage notes say that they have raw materials for the next couple of quarters, and therefore there is some visibility of earnings as well. How do you look at these stocks? Do you like anything here?
So Neeraj, I think one good thing, obviously, I think there are selected chemical companies which have done really well, including Navin Fluorine, not this quarter, from previous quarter. SRF, Deepak has been building a lot of capacity. We've had multiple discussions around that. And also what has happened is that the China backdrop changed. So yuan has appreciated 15-20%. China is not dumping the way it used to be. There were a lot of rebates which have been taken back effective 1st April. So the macro headwind improved, and the operational performance picked up, and the valuations were at a all-time low. So it just became a perfect cocktail of everything that could go right, and very sharp movement. Just see the way Deepak has moved from 1200 to 1700-1800 levels. Look at some of the other names. We've recently added one more name. So we were a little contra here. We've added JG Chemicals, which are basically into zinc dioxide, which actually goes into tire, which is 70-80% tires. It's JG Chemicals, and then it also goes to pharma, etc. So they actually had a bit of a volume growth, and the price hike gets passed on with a bit of a lag. So the revenue growth was very good, and the margins obviously had a bit of a drag. And I think April onwards, the price hikes have been done. They're also adding new capacity, which should come operationalized in this month, which will add, 20-30% more volumes in the medium term, and valuations are reasonable. So this is something we've added, and we are also now looking at some of the agrochemical names, relooking, let's say, PI industries, etc. We believe that there could be some juice here, considering the disruption which has happened, in the global supply chains.
Gurmeet, you might have missed your calling as an anchor of markets, but of course you're doing what you're doing as a CIO. If you ever get bored, maybe we should do a show together, because you've got a knack of keeping one eye on the screen and taking a look at the stocks. But having said that, JG Chemicals, let's look at the share price and take a look at the technicals as well.
I was actually happy when he made that, or at least when the production team brought up JB Chemicals, right? Because that's the call that I had about a week or so ago. That's been doing. I was like, okay, Gurmeet Chadha ke saath call match ho raha hai. No, but JG Chemical also is doing well. It's not seen as sharp a profit booking as some of the other names have. It's consolidating around the 200-day moving average. I would definitely keep it on my radar. Perhaps a buy near the 370, 375 zone from a technical standpoint would give you a good risk-reward ratio. And yes, JB Chemicals also is in a good stead, at least when it comes to the technicals.
Okay, so that's with regards to where the chemical space goes. A couple of other names that I want to talk about is EMS. Let's see what is happening to Amber Enterprises, Dixon, for that matter, if they are seeing any bounce back from yesterday's session. Absolutely flat. A quick one in terms of the charts, Kush?
Not really. There is persistent pressure on some of these names. The only one that stands out is, of course, Sirma, but even that has seen a sharp gash of profit booking. So I wouldn't really venture a trade in this space for now.
Okay. I know that Gurmeet is of the opinion that you should use opportunities to buy frontline companies. Gurmeet, for the private sector banks, they've been languishing for some time. Is this still a good opportunity?
So one clear distinction has been large private sector banks and mid private sector banks. I think there is a clear difference in performance. And if you see the FI outflow data of last 3 years, the bulk of the FI outflow has happened in banks. HDFC alone, the FI weightage has gone down 4.6, 4.7%. So if you see the top companies, 100 companies, the FI
Gurmeet, I'm sorry. We time this. We'll time this better when we ask you after the markets open about your view on frontline banks, because the markets are just starting. So hang on to that thought. We're starting off marginally in the green. Building on, maybe. Let's wait and watch. Mid caps are doing okay. The breadth is not too bad. IT, which was the big winner of yesterday, would love to see what IT is doing today. Let's bring up Nifty IT as well on the screen. Another 2%. This has been some start to the week for the IT sector, and Parag Thakkar got it right. I mentioned this, right? He's becoming a good tactical spokesperson as well. But let's get the heat map up on the screen and see which of the IT stocks are lighting up the screen. Or is it something else which is top of the line? No, Infi it is 3% higher. Adani Enterprises close behind 2.6% higher. Tech Mahindra, TCS, HCL Tech, Wipro. Boy, the number of IT names the last couple of days which are doing so well is really good. Yes, we have one good happy portfolio manager in the studios today. Bajaj Finance is up 1%, ITC, SBI Life are amongst the others. More green than red, which is other good thing. What is not doing well? Titan, Hindalco, yet another day of pressure points for Eternal. The pressure seems to be eternal for Eternal right now. ONGC is down, Nestle, Power Grid, etc. But yes, what takes the breath away is what IT is doing. Alex, so as I hand it over to you, on a flat day for the markets, it's very interesting as to what IT is doing, much like a repeat of what it did yesterday, and Adani Enterprises is shaping up well too.
Absolutely, and there's half the screen in green, so that's a good sign, at least breadth-wise, right? So let's pull up the sectoral heat map as well, just to see what's buzzing and what's not. IT, of course, on the top of the screen with gains of 2.8 or 2.7% at this point, at the high point of the day. PSU Banking Pack is up and about, and remember, it was under pressure in trade yesterday, so maybe maybe to a certain extent there's a little bit of a bounce back from that point. I'd be curious to see what State Bank of India is doing. I hadn't seen it in the heat map, but you have small cap index that's up about 0.4%. That's where the breadth is being showcased. You have oil and gas that's up about 1/3%. FMCG that's also up about 1/3% or so. Not too much in the way of big sectoral losers, just about 0.2% for the consumer durable space. SBI is up about 0.5%. All right, so not too much. It was down 2% in trade yesterday, so not too much of a bounce back. Let's talk about individual counters, and Astral stands out, and there are several on the back of earnings. So let's look at Astral. Let's look at IOC. Astral is down in trade about 3% or thereabouts, despite a pretty decent set of numbers. In fact, it's beaten its peers, but maybe the concern about what's lining or what's lined up ahead is what's playing out. IOC is up about 2% or so. IGL on the back of numbers, operational beat in a tough quarter. GE Vernova, let's pull that up. GNFC as well as CMEC. GVTND is also losing ground, just about 1/3% despite pretty decent execution coming through and a sizable increase in the margins as well. GNFC and CMEC up and about. JK Paper, Sun Pharma, Advanced Research and Puravankara are all doing particularly well. Actually, JK Paper and Puravankara more than anything else. It's a turnaround quarter for Puravankara, which is why you're seeing gains of about 14%. DOMS as well as Shivalik Biometal and Afcons. Afcons on the back of a bad set of numbers is seeing the brunt of selling right now. Shivalik is doing particularly well. Bimetal EBITDA margin is up 29 basis points. Now take a look at certain other developments, the Adani Group stocks as well. We've talked about the key developments. Adani Enterprises, Adani Green are up and about. These are primarily those entities that get affected by global investors coming in. You have OMCs, the second price increase that has been taken. So HPCL is up and about. IOC also reacting to its earnings is up about 1.5%. We were expecting that. Chemplast is probably up. It's up about 0.9% on the back of commercial production started at its R32 refrigerant gas plant. Vascon Engineering has gotten a sizable order for its size, 132 crore or thereabouts. And finally LIC, the shareholder nod coming through for the bonus issue, not moving too much. Let's face it, it doesn't really often move the needle too much. But I'm wondering if Hiral, you're spotting anything else from the broader markets?
So yes, Alex, in terms of broader markets, a few movers but not too much. I mean, you have a Cohance which today is seeing gains of nearly 6%. Tejas Networks, JK Paper, I think you spoke about, and Deepak Nitrite. The fertilizer space, as Alex was mentioning, the chemical space, I would say, as Neeraj was mentioning, is something which is in focus as well. And on the losing end, you have TD Power, Uno, Minda, few of the other names. But again, no major moves that are coming in so far. Absolutely remains, very narrow in terms of the breadth as well, and no sharpshooters that we are seeing right now. Kush, anything that you're picking up on the charts right now as the way markets have opened, where you're seeing some buying opportunity?
I think a quick word on the index, where today's the weekly expiry for Nifty options, and you can very clearly see the 23,700 straddle at play, and the total premium is about 140. So the range is about 23,800, 850 on the upside, 550 on the downside. That's the range that anyway the market has respected. So I don't think this is going anywhere up until the range is broken. So remain cautious on the indices. Yes, as far as stock specific action goes, IT obviously steals the show right now. Maybe I should have brought that IT discussion forward to today, but for now, Ganesh Housing doing well. Ipca Labs had a good start but giving way, and reiterating that call on Marksans Pharma. Although I would say that the second target of 225, if in momentum it does hit that, you're better off booking profits and taking money off the table.
Got it. Gurmeet, I unfortunately didn't time my question well enough. I was asking you about the private sector banks and you were making a point. What was it?
So I was saying, Alice, if you see the performance of top private banks have been slightly soft, whether it is ICICI, HDFC, Kotak HDFC in particular. And if you see FI holding in India, the top 50 stocks, their weightage has gone down from 40% to 20%. 5% is just HDFC combined. And then you have Reliance around 4%, IT Pack is about 3% each, Infy and TCS, Kotak is about 1.5%. and then it has broadly gone into stocks beyond the 100. So their holdings are now gone up from 900 to 13, 1400. So they've added a lot of energy stocks like Polycab, where you have GE or Nova. Then you've added new age businesses more like Eternal, Paytm, Cartrades of the world. And they've added something on the healthcare side. So it's clearly moving towards growth. And this is where it hasn't done well and reflected in flows. And I think the tier two banks have been a outlier, including PSU. So look at Bank of Maharashtra, look at Federal Bank, look at some of the deal flows which have come. So I think it's very clear wherever the earning is where whatever FI money is chasing. And I think with this Korean market softening, a little bit of an AI trade getting stretched, maybe at some point of time, maybe for the last 2 days, FI flows have been marginally positive, but maybe at some point of time the flows will shift because larger money usually rotates more. And at that point of time, probably some of the undervalued names in banks may get a bit of a respite.
Okay, so probably bank could be emerging in terms of the financials as well to that extent. Gurmeet, stay with us. We have Jefferies, which has maintained a buy on Adani Power. Sharad joins in with more details. Sharad, what is the rationale?
Well, yes, Hiral, largely Jefferies has maintained buy rating and the target price is set at 255 rupees per share. Now, interestingly, they have stated that the company will turn free cash flow positive by FY 2030. Also, the India's sizable private sector pure play, it's a company especially on the thermal power generation, and we have seen a lot of interest and up move coming in the power related stocks over the last 2 to 3 odd months. Now, the company itself is expanding its capacity by almost 1.7 times to 31 gigawatt by FY30 on a comfortable balance sheet. Also, the broking house has stated that the risk profile right now is diminishing for Adani Power as lower merchant share as the capacity is being unlocked with profitable PPAs. These are the power purchase agreements to be precise, and they believe a 23% EBITDA CAGR over the next 4 years should see the company generating almost 15,500 crore worth of free cash flows.
Well, yep, some of these goings are going on very, very well. Thanks for that, Sharad. Gurmeet, from amongst the results that have come out thus far, in some cases the market has reacted to the numbers positively and the outlook may not be that strong. In some cases the market has reacted negatively to some of the numbers, but the outlook is slightly different and positive too. Have you noticed any anomalies like this? Anything in the results or the commentary that has stood out for you?
So one in terms of I think energy space, like for example, just to give an example, I think Bari numbers were good, but the aggressive capex plans and fundraising probably had a bit of a impact. The stock softened, but in this business you have to look at full stack players. Companies who are moving from, let's say, polysilicon to ingot to wafer to cell and finally to the module. Very few companies are really able to do that. And they're also now getting into battery energy and storage. So if you see the nature of contracts needed is changing from that fixed contracts to FDRE and round the table contracts led by battery energy storage. So a lot of it is changing very, very fast. And I think a lot of reports have come. I think there's a very good report. I think you had an interaction, if I remember correctly, with Value Pairs. I think beautiful report on solar. So I think the numbers are good. Maybe some aggressive fundraising plans. I think there's got a bit of a dampness. So I think that's we are seeing. We're also seeing that trend in auto ancillaries. Numbers are good, but maybe labor costs going up, more disruptions in supply chain is creating that bit of an impact. So, for example, in wiring harness, Samvardhana is also getting into aerospace, and EV needs far more wiring harness, than the normal one. But the response so far has been, pretty muted. So there are divergent trends. One trend which is positive is I think some of the food-focused FMCG names. I think the kharif crop hasn't been impacted, so food prices are going up. And I think a lot of branded food players will gain disproportionately, starting. And we saw that in the commentary of Nestle, Dabur, some of the other names for the first time showing decent volume uptake and decent guidance. So I think some of the, Tata Consumer again had a decent number. So I think this is one space, the food space, because of the supply chain disruption, you will see hikes, inflationary hikes, and better pass on, and more branded foods taking over. So that's one space I'm tracking very closely because it's been a bit of a soft performer for some time and may give you a bit of a upside the way other names like in power equipments and chemicals have given.
Okay, so that's with regards to a couple of FMCG names that we're tracking right now as well. But apart from that, let's just see what's happening with overall market trends, you have OMCs which are in focus, IOC, HPCL, BPCL. In consonance to that, names like ONGC as well seeing some moves. But Gurmeet, your views when it comes to specific oil marketing companies? I mean, it's a 90 paise price hike. It's still a drop in the ocean that we're talking about. How are you looking at it?
No, I would avoid till the time there is a very meaningful price hike. There could be some, 1 or 2 day movement because see, the loss is more like 18-20 rupees. What we've seen is around $4. So if you add 3 and let's say 90 pips today, so I think the losses would be still substantial. You may get a bit of a bounce. I think refiners are a better space to be in. We got benefited on Chennai Petroleum last year. It was available at about $600-700, and Indian refining capacity now is critical in times like this, and that actually negates the impact we have to some extent of the oil shock and oil prices we are getting. So I would be keen on refiners more from a structural point of view in terms of sustained earnings, and considering that at some point of time there will be more heavier fuel coming from Venezuela, Mexico, and others, and our refiners have an amazing ability to do that. The other space you should track is the government has just announced the coal gasification and how the syngas done because of that aggressive allocation will have an impact on ammonia and fertilizers and LNGs of the world. I think that's one value chain one needs to study very closely. And to me, that's one of the biggest reforms we have done, at least on the sector-wise, industry-wise, in some time now.
Got it. Gurmeet, thanks so much for taking the time out and being with us. Really appreciate your time. Great talking to you today after a while. Kush Bora, very quick, 20 seconds. Anything that stands out for you?
Yet again an update on Marksans Pharma, and the only reason is because 225 was the target too. दो दिन में 8-9% मिल रहा है. Book profits, not a bad trade.
Book profits. Thank you so much on that, Kush Bora, Parag Thakkar, for your time. Let's focus on Astral and first get in Puneet to talk about the results and the setup. Puneet.
Well, thank you for that. Well, quarter 4 was a good quarter for the company, and expectedly so with the rampant rise in PVC prices. So inventory gains has been recorded in this quarter, and that's reflected in the 24% growth in revenue, EBITDA up 28%, and the profits also up almost 19%. Why the company might be down in trade today and the stock might be down in trade today is because quarter 4 was expected to be a runway growth in that sense, and now that is over, quarter 1 will be very, very volatile, especially since PVC prices have started to correct. So inventory positioning will be something to watch, and hence a lot of volatility. So the results, news, and the positivity getting sold into at this point of time, but also that quarter 1 expected to be very, very volatile in terms of PVC prices, both globally and in India.
Right, let's get in Mr. Hiranand Savlani, and ED and CFO at Astral, to talk about the numbers and the outlook ahead, more importantly. Mr. Savlani, thank you so much for taking the time out. How difficult has it been to conduct business in this volatile environment with the PVC and CPVC prices being so volatile?
Yeah, you are right, absolutely, because this is a very challenging time, not for Astral, but for entire industry and the globe per se. Because the way volatility is increasing, the way currencies are behaving, it is really painful for any company to manage that number, whether it is the top line growth or whether it is the bottom line growth. So same thing was there with us also in the last quarter also. All of a sudden, January, February was going good, and then March, all of a sudden the polymer prices started going up after this 28th incident of Iran. And then the speed of going up was so sharp that it is very, very difficult for anybody to understand. So because of that, definitely industry get a gain in terms of volume growth, because whenever prices are going up, every dealer and distributor rush to stock that thing. And similarly, there was an old inventory. To some extent, it helped into the margin improvement also. But again, in the month of April, it started again reverse trend, completely reverse trend. So it is very, very difficult for anybody to understand what's going on in the system. Now, again, we are expecting that the polymer will start again going up, because now the crude is again up and the supply shortages is also there. So it looks that now from here on again, the polymer will inch up. Rupee has depreciated substantially. So that is also going to contribute to that. So yeah, definitely it is a very, very painful time for the industry. And that is why we request our investor, don't look at the quarterly number, always look at the yearly number, because on a 12-month basis, most of this fluctuation can be even out, and that will give you the right number. Otherwise, quarterly basis, you may be misguided and you may be taking a wrong decision also. So we
Got
can only say that whatever we have given the annual guidance in the beginning of the year, we have exactly delivered accordingly, even I think slightly better than what we have guided.
Got it. Yeah, Mr. Savlani, what was the volume picture in quarter four? Did volumes come lower than what you were anticipating before the start of the quarter?
So I think volume, if you see, we have delivered 24% volume. We are the highest in the industry. If you see the presentation of Reliance, they have clearly in a public domain, they have disclosed that the polymer was down by minus 10%. And again, this minus 10%, we have delivered 24% plus volume. And none of the industry has delivered, industry player have delivered 24%. So we are the highest in the volume term. And not only in the volume term, but in the margin terms also, we are the highest in the industry.
Got it. Okay. Talk to us about the margins, Mr. Savlani. I mean, people anticipated inventory gains to work for all players. They didn't materialize as much for you.
That is true to some extent because we are more of the CPVC player than the PVC. Our bread and butter is CPVC, and CPVC price rise was not that there in the last quarter too much. Whatever the price rise took place, took place in the month of April onward. So because of that, the inventory gain related benefit was available very little to us compared to the other player where dominance is PVC. While our dominance is not that to the PVC side. So to that extent, yes, our inventory gain was very, very limited.
Okay, but will margins start to look better once your backward integration is complete? I believe it is sometime this year.
Absolutely true, Neeraj, that if you see that the backward integration which we are going to complete by December and Q4, you will see that will be reflected into the number. We are expecting that is going to change the complete dynamics of the margin. It is too early to predict how much improvement will be there into the margin because still the plant is not commissioned. So I don't want to unnecessarily give it too much of hope on that side. Let us first we complete the plant and we run efficiently by 1 quarter or 2 quarter, and then we will be in the right position to give the guidance. But whatever the existing players are there into the similar industry, the other listed players are also there in the, and they are working somewhere in the range of 20 to 25% kind of EBITDA margin. So I think a pretty decent margin is there. So let us keep finger crossed. Once plant will be operational, that will be the right time to guide the guidance. But definitely it is going to help us to improve margin, not only into the improvement into the margin, but out of that margin, if we something we sacrifice and pass on to the market, we can gain a big volume. So that is going to be a big beneficiary in the favor of Astral. So Astral is already leader into the CPVC side. Once this plant will be operational, we can gain a more market share into the CPVC side. So that is going to be a big benefit to the Astral rather than only margin.
Okay. And what about demand trends considering the volatility that we are seeing in PVC prices?
That's true because initially it was looking very, very scary when this happened in the month of March. But again, once the declaration of ceasefire, then a lot of cooling factor took place. So a lot of polymer prices have come down, even chemical prices have come down, which has supported the industry to grow. Otherwise, if that kind of price could have been maintained, then this was a really challenge for the industry to grow. But that has not happened. Future, very difficult to predict for anyone that from here on what is going to be the chemical trend or what is going to be the polymer trend. But as of today, the prices are very much affordable zone. So we don't see any big challenge into the market. And we are confident that this year also, if nothing abnormal happened, we will keep growing at the similar pace what we have delivered the last year.
Okay. Mr. Savlani, while the going may have been good, but the adhesives and the paints business, the margins, if I'm not wrong, have compressed quite a bit. Will they recover?
So see, let us start one by one. The first adhesive business of India operation. I think India operation had delivered 20% kind of top line growth. Margin has little bit compressed to, normally we are in the range of 15-16% EBITDA. This quarter it is 12.6%. So there is a compression of almost, you can say 2.5-3% kind of compression into the margin. But in that, there is a one-off expenditure of 16 crore rupees, which we have incurred on a branding campaign, which because we have signed Mr. Brand ambassador. So because of that, 16 crore rupees one-off expenditure is there. So that contributing roughly about 4-4.5%. So because of that, the margin compression is there into the India operation of adhesive. Otherwise, if I remove that part, then we are at a 17% kind of margin, 16 to 17% on this. And that is what practically we have guided for the full year guidance of 15 to 16%. And the full year we have delivered 15.1 after putting up the 16 crore one-off. So I think we are very well on track. But yeah, reported numbers are low because of this one-off event of 16 crore rupees on the brand endorsement of Bondtite. So coming to the second point of this adhesive business of UK. You remember last year was continuously painful for us for the UK operation. We were making losses into that operation, and we guided last quarter that from here on the pain will come down substantially. That is because we have done a lot of correction. We have changed the CEO. All these things have now completed. Now that is the history. Now from here on, you will see some improvement into the UK business. And that is what exactly reflected in this quarter. This quarter, we have delivered a top line growth of 22.9%. In a country like UK, 22.9%, and an EBITDA of 6.5%, which was almost negative earlier. So now improvement has already started, and we are confident that the next year also we will be confidently delivering double-digit growth, and EBITDA also in the range of 8 to 10% kind of range we are targeting. That is what we hope plan. Maybe a little bit here and there, but more or less it will be like that. So that business which was derailed to some extent, I can say now it has come to the again on the track. Now coming to the third business, that is the paint business. Paint business, we have done the highest run rate in this quarter. We have delivered 73 crore rupees of revenue, which normally our run rate is in the range of quarterly run rate of 50 crore. So this quarter we have delivered a growth of 31%. So I think that business has also given us a fantastic number, and there some challenges are there on the EBITDA level because we are spending a lot of money right now on the opening up the new depots, opening up the new geography, appointing a lot of new employees. But I think by year end we have completed now everything. So from the next year onward, our focus will be on the growth, and we are confident that we will be able to deliver 25% minimum growth next year also, and with a positive EBITDA also. So I think whatever the pain was there also we have now come to the end cycle, and from here on it will be going to be a positive. So the next year UK and adhesive or paint both are going to give us a fantastic number on the EBITDA front, and that will add to.
Mr. Savlani, sorry for cutting you there, but so therefore, what's the overall guidance that you're leaving us with for FY27?
We will be somewhere between 10 to 15% minimum volume growth next year, and value growth will be more than 15%.
Well, Mr. Savlani, thank you so much for taking the time out and being with us. That's Astral first on NDTV Profit after the numbers delivered yesterday. Okay, now a conversation that I was looking forward to, which is KIMS, because some of this sector has delivered, and KIMS has been no different. It's delivered on the growth numbers in Q4. For KIMS, though the margins maybe had a bit of a blink. Now, strong patient inflows are driving revenues. The question only is, with the expansion-led costs, etc., will operating leverage come under pressure because of lower occupancy? I think all of that will be asked. But before we get the management on these plans, Varsha Johnson with more details. Varsha.
Well, there was a good revenue growth, though. Yes, you rightly pointed out that there was a dip in margins. So the revenue growth remained strong, which was driven by higher patient volumes and expansion. And the margin dip was, due to ramp up of new hospitals and lower occupancy in new units. New geographies like Kerala and Karnataka are still in loss phase, dragging margins, and the occupancy levels, if you see, maintained low at 50%, impacting operating leverage. Maharashtra revenue nearly doubled in FY26. Occupancy over there improved sharply. And lastly, Kerala and Karnataka are in investment phase. Kerala operations started scaling from October 24 and Karnataka operations has been begin from August 25, and both markets are currently impacting profitability. So we need to know how all these geographies will have a good ramp up in future.
In fact, let's ask Dr. Bhaskar Rao, who is the Chairman and Managing Director of KIMS Hospital, joining us right now to talk about some of these aspects. Dr. Rao, as always, an absolute pleasure speaking with you. I must ask though, and this is something that has occurred to me with regard to healthcare providers in the country. Before we get into certain other aspects, there was a trend that was being seen of medical tourism. Has that taken a bit of a backseat in light of the crisis and the fact that people are maybe pushing back on travel and maybe pushing it down the road?
Yeah, it happened in the beginning when the war started, and later on, I think it improved, but not the extent of it's supposed to used to do. But there is a 50% improvement is there when compared to the war starting day. So that's why now when the war started, there are so many patients who are taking treatment here. They continue to take the treatment, and then once the restoration of the flights, I think they have been gone back. So it's not on the whole, it may not be affected too much. Yes, in the beginning, 50% affected, but now it has come back to 80%.
So, and that seems to have driven your performance as well. The revenue growth is driven by volumes as well as the expansion that you have undertaken. So, can you give us a sense on how much of the contribution came through from the expansion?
So, basically, what we have anticipated, we have done much more than what our anticipation is. I will explain to you. As long as the mature units, that is our nearly 2.5 decades old hospitals also, had shown some growth of 5 to 8%. That means the margins, the revenue growth is improving 8 to 10%. Even the EBITDA margins also has increased as we anticipated, and it is maintaining around 29-30% of the profit margins. Whereas the new assets which we are anticipated, if you take it and unit by unit, when we took over about 4 years back about Nagpur and Sunshine, they have been already done wonderful job, and they have been come under the category of matured units. Those two also keep growing. And later on, we added the Nasik, Sangli, the Thane. Thane unit has been about 2 quarters operations. It is almost come to EBITDA zero. So that is a great achievement because a new place and the new territory. Nasik has also showed a little bit dragged than what we expected about couple of quarters. What we didn't anticipate is usually it will be 20-25% of the insurance business, whereas these areas, the insurance business is much more than what we anticipated. And because of a lot of things that is happening in the insurance side, that also taking a little longer time to empanel. Once that empanelment comes, then we can also do both Thane as well as Nasik will do definitely more than what we anticipated. Coming back to Karnataka, Karnataka has opened about 2 quarters back in Mahadevapura. There are 2 hospitals. 2 will have about 350 beds each. So the Mahadevapura, within 7 to 8 months, it has been turned around, doing good job, and then the EBITDA is also zero or a little bit of positive. Whereas 3 months last December, we opened the Electronic City. It actually supposed to open about 2 quarters before, but it got delayed 1 quarter because of the permissions and other things. So that also now opened, that also ramping up very well. And in the next 2 to 3 quarters, that also will become better and even EBITDA positive. So on the whole, if you look into the next 2 to 3 quarters, Karnataka will become EBITDA positive. Kerala is doing very well. From day one, there is not much of a loss funding or required as we anticipate.
So Dr. Rao, my question to you is, yes, there have been, certain delays when you talk about new commissionings that are happening. However, for FY27 as a year, will it be a transition from capital deployment to commercial stabilization, which will also help you improve your margins, number one, and improve your profitability? And if you could just help us understand from the new facilities that are coming up, which of the facilities will actually be break-even in the first half of FY27 versus the second half?
So actually the Mahadevapura in Bangalore and Thane is already, and Nasik, all these 3 will break even positive EBITDA, a single digit in this next 6 months, first half. The second half, Mahadevapura, Electronic City will also be turnaround. Maybe we are starting one in Pampalli that will also come into the second half of this one, show positive EBITDA. And third is we started in Telangana, Kondapur facility, which is already having a 250 bedded hospital. Now we are moving on to a new facility of 850 beds. In the 1 quarter, we may have to run both the facilities. That might give a little bit of 20-25 crores down, even though hospital do well and there may not be any negative thing because of the extra burden of recruiting manpower and running both the hospitals. As you see that when we are doing the same thing in Sunshine, it also took about 1 quarter to ramp up. So after second quarter, that also will show much better than what we are anticipating. As far as Kerala is concerned, all the units from day one, it is a asset-light model, and we don't have much of a loss funding as on today. We have started a little bit of Kollam, the Palkad, that will be able to take another quarter to turn around. These are all important things as far as Kerala is concerned.
Okay, so these are, commercialization strategies that you have, Dr. Rao. And in terms of where average revenue per occupied bed goes, where are you seeing that move from where you ended in FY26? If you have to look at FY27, what's that growth that will come in?
There may be, actually, if you see in the 26 itself, the movement when we started the Karnataka and Thane, the average revenue operating bed has gone up to nearly around 10%. And once the ramp up happens, both the transplant program, complex cases in both the Maharashtra and Karnataka, then we may expect this year also another 10% increase in that.
Dr. Rao, so based on what you're saying, the occupancy is going to increasingly inch upwards, but what is internally that expectation? If you see it progress through FY27, where would you like to end FY27 at the occupancy level?
See, the occupancy levels will definitely improve another 70. See, the basic problem here in the occupancy is, whereas in nearly 1,500 beds has been opened in this quarter, in this year. This 1,500 beds may not able to fill at a time. So it will take its own. Now, out of that, we have been put only 500, 600 beds. In these 600 beds, there is around 30 to 45, 50% occupancy is there. Whenever we touch the 70, 80%, then we keep on adding some more beds. During that time, we don't need any capex. It is only the manpower of any extra 100 beds we need to utilize in all three places. That only will supplement. As we look at it in this year, the revenue growth, we are expecting around 25 to 30% growth. In the bottom line, on the consolidated base, as on today, we are doing around 20% of the EBITDA margins. That also can able to increase around another 10 to 15% up in the next year.
Okay, I'm glad that you gave us those answers without us asking, Dr. Bhaskar. Always a pleasure speaking with you. Wish you all the best for FY27. Look forward to speaking to you again.
Okay, thank you.
All right. Well, there you go. Yeah, it's always great when the management throws the numbers forward without you having to ask for them. Neeraj?
Candid management always helps.
Always a pleasure.
Okay, well, that's one more management. Then an interesting transaction that happened in the last 48 hours is TVS Venu buying a small stake, about 9.9% in Jana Kalyan Bank, that financial services business. I mean, remember, it's grown about 20% for the last few years, and they have now taken that one more step there through a combination of warrants and equity ownership. Sudarshan Venu, chairman at TVS Motors Johnson, to talk about the same with us. Sudarshan, great having you. Thanks so much for taking the time out and being with us. This investment in Jana will allow, I believe, for mutual collaboration in various areas for the long-term success of this thing. But why Jana specifically?
I think I should start by giving a little bit of a brief of our whole financial services strategy. I think with the way India is digitalizing, the middle class is emerging as we move towards a Viksit Bharat, and with the huge amount of steps taken for the digital financial ecosystem, as a group, TVS Venu is very excited about financial services and has been investing significantly in this area over the last 15 years. Our NBFC TVS Credit serves over 44 million customers. We bought home credit as well. So together we are targeting to reach an AUM of 50,000 crores. In addition, you would have seen that one of the promoter entities of the group did sign an agreement to buy 100% of PGIM India Asset Management, which as Indians save, the savings are also getting financialized. And I think there we see a very good scope for asset management. So we have the lending on one side, we bought home credit, we have the asset management as well. So we are broadening the offerings and the products in financial services, which we as a group operate in. And I think as part of this, we felt that having a stake in a bank is something that we believe has a great opportunity for India. It strengthens the financial services vertical or division of TVS Motors. I think Jana is a very good bank. It has built a successful retail and MSME-led franchise with over 850 branches and over 12 million customers. It has advances of over 35,000 crores and a fast-growing current account and savings account business. And I think TPG, Ajay and the team has taken a lot of effort to stabilize and start growing and grow Jana and to bring it here. In addition, I think the pricing and valuation is also very good at nearly one-time book, and in fact at a better price than the market today. So this is a factor too. And I think when we see this opportunity, we felt that given this opportunities for synergy and collaboration with TVS Credit, as also with some of the businesses like PGIM, which we are trying to buy under some of our group companies, the promoter entities also stepped up and we're taking this stake in Jana. And we really believe in the financial services sector and the possible partnerships.
So would you want to, in some fashion, in some possible way, increase stakes, make it an even more core part of your portfolio over time, or is this it?
I think you know the RBI rules very well, and we must all respect that. And I think that is, we must view it also within those contours. I think broader, when you look at financial services, that is TVS Credit and home credit on the lending side, opportunities for new products like home loans and gold loans, which we have discussed, and cross-selling to many of these customers as also mutual funds and further products within that category. There is a huge opportunity, and this is part of that opportunity.
Got it. So what happens next? I mean, to this entire portfolio, and what does this entire portfolio strength mean for Jana?
Jana itself is on a very good trajectory in terms of growing faster, improving ROE, and building itself up as a respected bank in India. So we are glad to support that journey. Of course, as if there are any strategic synergies within the guidelines that we can do, we will definitely explore them.
Okay. And sorry if I lost you there, maybe tech glitches, but how do you plan to utilize the recently approved crore warrants issue amount, the NCD plan, etc.? Organic growth, acquisitions, or strengthening the capital base post-acquisition?
I think those details are better answered by the team at Jana. I should focus more on TVS Venu and the group's financial services plans, which we are pursuing, which we are excited about. And especially as so many Indians start using greater financial products, both saving products, lending products, health insurance, which is an area we have invested in, mutual funds. The combination of that opportunity across retail, across the MSMEs, and in addition to, of course, the prime customers, which has played out well. The combination of this opportunity is something that TVS Credit and Home Credit are doing, then also looking at insurance asset management particularly. It all comes together very well. And that is why we are excited about it. I think the value is also attractive, and we believe in the path of Jana, as of course, the exciting things that we are doing in our other financial services business, where of course, which are subsidiaries or whatever.
Okay, fair call. Now, Sudarshan, since you want to talk about strategy, I'm asking you about strategy, right? Jana's earlier application for transition to a universal bank was written by the Reserve Bank of India. What's your view on reapplying? Would you want Jana to do that?
I think we are focused on the TVS Venu Group's overall plans for financial services. Jana is on its own good path. And I think TVS Credit, Home Credit, and hopefully PGIM will also be on their own good path with synergies possibilities as well.
Okay, so maybe I'll ask the Jana specific questions to the management of Jana Kalyan Bank, but then let me ask you, since you are with us, you are one of the doyens of India Inc., what's your view on the current economic activity in India, the impact of the conflict, capital outflows, and what does it do to businesses?
Looking at it from the vantage point of all our businesses, we believe very much in the Indian consumer growth story. Two-wheeler sales, book growth of the loans, all continue to grow very well domestically. Of course, we are in an uncertain macroeconomic environment and we have to keep that in mind. But I think fundamentally, India remains the fastest growing large economy with hundreds of millions of customers moving up and getting more affluent. And this is somewhere where TVS Credit has 45% of its book from new to credit customers. And there is an opportunity as these customers get deeper into the financial ecosystem to sell them many other products, whether it's home loans, gold loans, education loans, and various other such products. And of course, we also very much into digital financing in terms of consumer loans, cell phones, and then car loans, truck loans, all these products. So I think the opportunity for these customers to be with them, to delight them in line with our values of customer delight, to leverage technology to delight them, give them an intuitive experience is something that we are really investing behind. And I think as customers mature and become more affluent, and this is happening quite rapidly in India's journey, there will be opportunities for so many other savings products, mutual funds, and insurance, of course, where we have a stake in Galaxy Health Insurance.
I hear you. Well, I would have loved to talk more, Sudarshan Venu, but we call it a day here. Thank you so much. I understand you are in a rush. Thank you so much for taking the time out. Time for a very quick break. On the other side, more news lined up. A very special market guest, Sameer Arora, joins in. Stay tuned. You don't want to miss this conversation.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Welcome back. You're watching India Market Open, and joining us on this leg of the show is Sameer Arora, founder and fund manager of Helios Capital. Sameer, thanks so much for taking the time, and we're looking forward to you coming over to our studios when you come to Mumbai. But having said that, let me ask about what you think about the current situation, right? More to do with the currency than to do with the equity markets, and more to do with the macro than anything else. How are you reading things right now?
No, there are, of course, many factors responsible and they're all connected. So it is not that the currency market is independent of the stock market or that the stock market is independent. They all feed on each other in that sense. It's just that maybe they have gone on too far, and now we are obviously hoping that there is some improvement in the Iran war, and therefore a little bit oil falls. It's not necessary that India cannot handle $100 oil, because in a macro sense, the dollars involved are not as much as the panic that we are seeing. So if you just do maths, say on a $35 per barrel difference in price, India is having, say, importing 5 million barrels a day, so $150 million a day we have to pay extra. It is a lot if you attribute it to three companies and oil companies and say, oh my God, these guys are losing 1,000 crores a day or 750 crores a day. If you take it as that is really India's loss and can be shared by 3 or 4 parties, which includes that company, it includes the oil producing companies, it includes government, and a little bit to the consumer. It is not the end of the world. There have been much higher level of oil prices we have seen as recently as 22. It is not great, but it's not the end of the world. That is how I should look at it. It's okay.
But I would argue that it maybe takes away from what the government might have spent on something else. So that maybe is one concern. Having said that, I do want to ask about this theory that is being propounded globally that bond yields might actually be the precursor to an end to the conflict, because they're reaching untenable levels. You look at the US 30-year, it's at over 5%. The JGB is at record highs. So something has to give.
No, but therefore, what are they saying? That therefore that will be an end to the war because of that? Because they can afford it. Even I don't think even otherwise they want to do a war right now. Do you think they want to do the war? I mean, the war is over, except that they don't know how to get out of it. For example, when Iran recently attacked a few ships, the US said that this is below the threshold of war and we will not be taking actions. So it is clear that with or without, or maybe because of that, there is no energy in that energy to fight for energy anymore. But both sides need some face saving. And today, President Trump, previously he was attributing this ceasefire extension or whatever to Pakistan. Now he says it's because of Saudi and UAE and all. They don't seem to want to fight, but in the end, who knows? As of now, I would not think that there is going to be a war. This kind of stalemate can continue till one of the two guys burn out.
Okay. Well, Samir, good morning, Neeraj here. And I'm looking forward to see if we have a robot Mumbai, because frankly, based on your tweet, I realized that there is some massive madness for some IPOs across the world.
That was a micro cap. That was just a micro cap in Hong Kong, I guess.
Yeah, I guess so. But Samir, I was talking to an FII from BlackRock about 3 days back. And while she's constructive on India, because she's saying that India's macro hasn't disappeared, but she's saying there is a proverbial proven pot of gold or likely pot of gold at the end of the AI trade, and therefore world money will continue to gravitate there even if the conflict were to end. Would you concur? Would you believe?
I don't know who she is, and I should make fun of fund managers, but she has no idea, because you should have asked a simple one line that just show big picture, that if you spent, each company has spent $200 billion in 1 year on this infrastructure of whatever, data centers and whatever. First of all, everybody knows that you are paying 30, 40, 50% extra from a year ago just because the prices of these memory chips and the prices of these everything associated with it has gone up, which is why the semiconductor rally is going on. So first of all, you blatantly wasted, say, 20, 30% of it. But if you do collectively, that is, say, nearly $1 trillion or 800 billion in 1 year. And that is, we are only counting these big 4-5 names. So let's you add another downstream, whoever is adding, so maybe $1 trillion. And now you want at least a profit of 10, 12% over time. So $120 billion profit should be made from this directly. And the guys who will be earning that revenue primarily are Anthropics and OpenAI, and all these other guys will be saving a little bit of money and making May. So to make a 120 billion, $150 billion profit on that capex, what should be the revenue? And where is that revenue? We have learned one thing, because I don't talk to people, I only read books. And I will recommend for the 120th time this book. Now I've forgotten the name. The Engines That Move Markets. So this book has about 150, or not 150, but maybe 50, 60 different technologies. One chapter on each technology, maybe not 50, then maybe whatever, 30, 40. And how at that time was the news and who was the lead. And in not one could you identify the winner. You could only identify the losers. So when steamship came, and after that the rail came, you knew that the steamships won't work. But you didn't know which rail, which company, which track. When mobile came, you knew that landline is gone, but you don't know which mobile fellow will win. Same thing goes on and on in every sector. So I don't think you know the winners and whether there are winners, but in their path, there will be losers.
Sure. But would money continue to chase this AI trade for the time being, even if the conflict were to end?
For the time being, depends on the time. Yeah. I mean, if you say 3 months, who knows? Can it continue for a year? I don't think it's continuing, just because, you look at the semiconductor index. The index is up 70% this year. And obviously after being up some 100, 200%. So, generally, and by the way, these are, what should I say? These are basically capital intensive, but actually technically they are commodities. So you can double up, you can invest more. This is not like AI. I'm talking about the semiconductor rally and all that. That is basically a commodity in that sense. Of course, not necessarily that we can do it, because the investments might be 30, 50, 20 billion or whatever. But ultimately, it's a commodity. So you can make it 1 year later. Plus, all these companies are trying to figure out how to use less memory, how to use less this thing. Even in the chips of NVIDIA now, Google has, now Amazon is about to launch or has launched. So everywhere in these things, there'll be competition. You will know the losers. I'm telling you, the winners is not easy. For example, do you think Anthropics will beat OpenAI, or OpenAI will beat Anthropics? That is a big issue. I think Anthropics will beat. So then OpenAI does not do well, then what happens?
Yeah,
Currently, if you see any models, Anthropics beats OpenAI in most of them.
No, correct. And that's the dilemma everyone has as well. Samir, good morning. Hiral here. The question I have for you over here is, what happens to the FIs? I mean, I know there is a lot of disappointment with FIs with regards to India. But do you think there is fatigue also coming in terms of the crisis, the impact, and how Korea's pain could be India's gain? That was a note that I was reading by Nuvama, where they've highlighted that Korea has actually seen, one of its biggest foreign sell-offs on record, and this is worth $13 billion outflow from Korean equities. And they've cited that this is something which could be a moment for the Indian markets, which could be India's gain. Would you play ball to a statement like this?
So I am anyway otherwise also thinking, because I was in US 2 weeks ago, that nobody has got 100% in AI. So let's not think AI versus non-AI. We are talking about the money which is not in AI stocks in the US, say for emerging markets. So Korea, Taiwan together have maybe 50% weight, 28 or so for Taiwan or whatever, something like that. And in that, I think about 60% of that, so some 30 odd percent will be these 3-4 companies only. Samsung and TSMC and all, and maybe add some more unknown companies that I don't know will be there. So let's say 40%, and China doesn't have so much listed, but add another 10% there. So 50, 60% is total theoretical AI, and nobody's putting 100%. Just for diversification, for knowing that these trades can quickly. So let's say there's 40 left, 30 left. Now in that 30, you are only trying to buy non-AI stocks. In that, why are our stocks not better than similar Chinese or similar Korean stocks, which our stocks have more history, more this thing, they have not gone up for 2 years. So the problem today is that out of $100 that somebody is putting into emerging market, where we are supposed to, in theory, get 12% as the index weight, we can get 10, 8, 5. It's okay for us for now. Right now, it is negative for us. But recently, it's been negative for everybody. Even Korea, as Nuama is saying, is right. Even Taiwan has had negative flows this year. This year, everybody's had negative flows. For them, maybe because they made too much money, and for us, because of frustration or whatever. And in general, but it's not that Indian money is going to these markets as of at least this year.
Samir, do you think India is sitting cheaper than it has been in relative terms if you have to compare it to emerging markets? And because of that one reason where we're trading at a meaningful discount to their own history, there is a valuation gap if you have to compare to broader emerging markets, which is widening in our favor probably. And the rupee levels where any stabilization adds some bit of currency alpha. If you have to take a summation of all of this, there is a probable case where we might slightly look better for FIs at this moment.
So nobody's looking at all this. This is only explanation that our premium is so much, this and that. Half the guys I met say we normally don't take country bets because country bets are very difficult. As of now, our premium to emerging markets might still be high at 60% because, these big stocks whose weights have become very big. Are actually at 6-7p because these are cyclical stocks where earnings growth is of the order of 500 to 600%. So if that is the kind of growth in earnings, their P's have actually become, maybe they are the same as before, but the weight of these low P but otherwise technology cyclical companies has gone up. I'm saying look at it more simply than that. That India has had this long history prior to this last round of doing well. And now there are 2, 3, 4 reasons why we have done badly. And some of those reasons are going away. For example, last year, what could be the big picture reason last year? The big picture reason last year could have been India had a war at around the same time when the flows into international markets started, which is after April, after the Trump tariffs were rolled back or changed. After that, the world got a little bit, upset with US, but there was massive flows into non-US markets, and then India had that real war. And after that, India got isolated because of tariff war. And that was blatantly different from others. And then when that was ending and, we became bullish in Feb thinking that this tariff deal is done. And after that, anyway, the tariffs were brought to same for everybody. Then we had the Iran issue. So I don't think that beyond a point, we can be written off because oil is 100. My only point is that India has to do its own things and not say that this is because of AI, so what do we have to do? Or this is because India has, weak currency, so what can we do about taxes? Or why should we worry about taxes? Because, something else is the reason. There are 5 reasons, and every morning, everybody in government and everybody in private and every company should say what this little bit I can reduce. From my point, every day we market India to the world. Last year also we got some $300-400 million from FIs in a market which had negative flows. But every morning we don't say, because the other guy is having redemption, what can I do? I have to every morning present my version of what is there. And according to me, $5 billion a month for 5 or 6 months of losses is nothing. It is zero. Because just in the last 12 months, the Reserve Bank of India on its dollar reserves, on its gold, which is held in the reserves, would have made a $30 billion profit. You don't have to sell gold to, it's like a portfolio.
It's on the books. It's on the books.
Losers. Who cares? And you can give that as a dividend later on. But every day to attribute it, no, this is because of oil companies. So we are in deep trouble. No, we are not.
Sure.
Don't make it deep trouble. It's okay.
But it must be said though, Samir, and I think you have said it, that it's getting harder for you than it was maybe a few years back to sell India.
Because I need a few reasons. You give me one reason, I will.
Fair enough.
Run with it. I will run with it.
When you look at your India strategy, and I've spoken to you about this in the past, and you've said that the exclusion, at least from my perspective, the exclusions and what you're avoiding is telling, right? And you've stated in the past that IT continues to be something that you don't look at positively. I'm wondering...
Even after today.
Even after today. And so therefore, in May of 2026, as you look at your strategy, has anything materially shifted in terms of exclusions, both new additions to the exclusions or things that you are reconsidering or you might reconsider?
Actually, it's not that every day we can look at exclusions other than something which are related to valuations. Because some things we don't like, some things we don't like permanently, and some things we don't like for now. But for now is not every day.
Yeah.
For example, we don't like IT for now, but we can't say we will never like it. But that for now has continued for more than a year and a half and on and off since 22 because I don't do extra work. I read books, I see movies, I travel. The companies are coming and telling me my growth target is 2%. I say, no, it must be higher. No, why? They are not telling you 3%. The companies are, companies came on channels. I won't say it was not your channel that I saw it on, but one of these companies came that day on TV and said that our order book is a leaking bucket. Now, what more do I need? I don't need for him to come home and tell me that our situation is bad. So the companies will tell you, the market will tell you, the employees hiring will change. Somebody right now they are saying that every customer is asking for productivity or AI related savings without those savings having come through. This has been said less than 20 days ago or whenever these results came. So in 20 days, what has changed? And the stocks have maybe down 4-5% from there. It's not that they are down 30% from the time when these companies came and gave their guidance or outlook and said that we walked away from this business because somebody else competed for it and the discounts they're asking for too much. I said, no, I know. Nothing I know. When you tell me, I will know. And that day the stock will be up 10 more percent. Then we'll see. But in the meantime, if our overall portfolio is beating other guys, we are okay. We don't have to chase unless we were like last in then we will worry.
Yeah.
It's okay.
Yeah, I can imagine. Actually, the other thing, Samir, since you're on the topic of tech, just this whole pessimism around QC, internet companies, because inflation might hit the consumption patterns, etc. You concur there?
No, please. What? These things are not going to the whole of India still. They are still being going middle class and more. True. And so there is a lot of India in it. Secondly, half these people are hooked now. They don't know how to cook. What can they do? People said, oh, gas is not there. What will they do? They'll just go to another. So one more thing. If these stocks don't do well or this market prices don't do well, how does the next guy go public? And if the next guy doesn't go public, how does he raise new money? And if he doesn't raise new money, how does he burn more money to fight with the guys who are not burning money? This is all a big picture thing. And even in aggregate, if you say how much percent is the penetration of quick commerce, you see it's not so much. They are expanding both geographically, products, everything. And main thing is you are hooked.
It's true. We are hooked. Most certainly. I can say it safely for everybody on this table.
I go to Delhi every month. And my flight reaches at 9:30, 10. I mean, by the time I'm home, it's 11. I am looking forward at 11 in the night. Now I can order 3-4 things. I need some shampoo, some shaving cream, all coming at 12 in the night. I mean, which other part of the world are you going to do all these things?
I agree completely. By the way, if you make it to Bombay the next time, Samir, please let us know. We'd love to have you here. I don't think you've come to the studio, so it would be lovely to do that.
Thank you.
Just a couple of other questions, Samir, at least one that I have, and which is the fact that markets are discounting things very, very rapidly. Like, in some sense, when there was buying in the Adani Group stocks by capital, right? When about a month and a half ago, and you thought, okay, what's happening? And then the two resolutions have happened, but the stock prices have bounced back quite tremendously. One, that behavior of the market, and two, I don't know if you have a thought here, but the fact that two large clearances for one of the premier infrastructure groups of the company or corporate groups of the country, what does it mean?
So the thing is, at least for the Adani Group, where we always had Adani Port in our portfolio, even from those days when this whole thing started with whatever that guy's name was, Hindenburg, whatever it was. So since then, because I met many FIIs and a few mutual fund guys, and it looked to me that these stocks were put into the no list kind of thing. And although many of these guys knew that at least Adani Port is a very good asset and Ambuja is very easy to understand that it's a good asset, although I don't own it, I'm just saying in those days, they would say, no, we can't buy because this guy will ask, our board will ask, blah, blah, blah. Now you have got the clearances officially, but more than that, you've got the umbrella of the biggest mutual fund in India and one of the biggest FIs in India, buying it in such quantity that it is public immediately. I think that will give room to the other guys who wanted to buy it in their firms, that they can go and ask whoever had stopped them or this thing. So I think now it will be considered as a normal stock. And if you consider it as a normal stock, everybody will own one or two of these stocks.
Got it. Samir, just the follow-up is to this, that the fact that from April, the markets are discounting a lot of stocks very, very rapidly wherever there is a whiff of good news. Where do you think there is a mismatch, that the good news are not quite discounted from April bottoms till now, if you will?
I know, very difficult to say like that, but what I have liked as a recent report which I read, which I don't know how to use it, but it is useful to have read it, is this report from ICICI Securities 2-3 days ago, which was showing that what was the FII holding in individual, because according to that report, which I now accept because it's been presented like that and it's logical, that if you see the top 10 holdings that the FIIs had, which were HDFC and HDFC Bank and these IT companies and Asian Paints and maybe Bharti, although I don't remember, but all these top 10 companies, the ownership of FIs has gone from 40% to 20%. Whereas in in some 1,200 other companies, the FIIs have become 1%, which was previously 900. So that means the FIIs are also only selling the large and expanding this thing, sort of breadth. And that's why I was saying no to this, one question before that was asked, that FIIs are looking because of valuation. No, there is no such thing, because the valuation is the cheapest in IT compared to our history, and cheapest in banking and all. Our history means the Indian history. But these guys are selling those stocks and buying the new age and smaller companies, which are not at the lowest valuation that they've been. People are looking for growth. People are not looking for great companies which will go up 2% and 3%. That is the story, according to me.
Okay, so Samir, you're looking for growth right now. New age companies is what you've always spoken about as well in the past right now, where you're seeing, good value come in there. But apart from that, a couple of other sectors, you talk about power, utilities, cap goods. There is some steam that's building up there as well. Would you be a buyer in any of these?
Yes, all of them we have. If you see the local disclosures of the mutual fund, you can see this is where the new money has gone. Even defense even we have bought in our global fund. Global means offshore fund. It's still in India fund, but offshore fund. Yeah. Basically, the idea is that we are not looking for stocks which will go up. Not go up, where earnings guidance or expectation is 3 and 4 and 5% in rupee terms, whatever be the valuation. I am not interested. People have come to India for growth and not for 3% and 4% value this thing, because you can lose that in currency in one day. If people are coming to India with a certain objective, now those guys are growing 500%. We say we will buy companies which are guiding for 3% growth or 0 to 3% growth, because the P has become 16. Those P's in other markets will be 5. No, there has to be some angle that this can go on 20%, 15% earnings growth for 3-4 years in rupee terms. And then you hope that you don't lose as much on the currency, so you still make 10%. But we are not looking for 3-4%. And the good thing is, in the large cap, it is easy that the IT guys guide like that. The consumer guys guidance is 4, 5, 6%, 7%. I have no interest.
Samir, the thing about good conversations is that you lose track of time. And so we must apologize from our end for having taken more than
I still haven't gone to office because there was a fire this thing today.
Oh God.
A fire drill.
Oh, okay.
So I said, I'm not going and listening to their noise for 2 hours. Now I'll go.
Okay, we're glad that we haven't caused you to be delayed. But thanks so much as always for taking the time.
Bye.
It was, wasn't it? I lost track of time. But by the way, the market's doing okay at this point, particularly the IT index. Surprise, surprise, gains of 3.5% for the IT index, and it is the best performer of the day, building on some of those gains, and it is the frontline stocks that are doing well. I wonder if that steam lasts to the end of trading day today, though.
2 days on a trot now, we've seen this happening, so pretty interesting here. Let's see.
The broader market's doing well. That's where the breadth is looking good.
Yeah, and if Hiral's premonition, not premonition, premonition is for a bad thing, but Hiral's prophecy of if there is some positivity at the end of the day today as well in terms of signatures turns out to be true, who knows? We might actually have a good day as well. But on that note, we are out of time completely on this leg of India Market Open. From all three of us and the team that put the show together, thank you so much for watching. Stay tuned. Ask Profit is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. My name is Puneet Zaveri. With me, as always, is Mahima. And over the next hour or so, we'll try to get all those stock-related queries answered. So do start sending them on the number that's flashing on the top of the screen as well. But before we do all of that, a very quick check of how the markets are doing, because after yesterday's buying in the second half also by foreign investors, it becomes a very crucial session for today as well. So looks at the heat map as well, above the 23,750 mark for now. So that's a key positive as we head into this fag end of the earnings seasons, and today you're seeing buying across the IT pack. So you've seen Infosys, Tech Mahindra, TCS, HCL Tech as well as Wipro being in the top 6 gainers for today as well. Tata Motors PV is also gaining on as well. So is Adani Enterprises as well as Eternal at this point of time. And largely almost 33 to 34 stocks continue to be in the green for now for the Nifty 50. The sectoral heat map also gives you that perspective where of course the Nifty IT will be a one-way winner, up 3.7%. You're also seeing Realty up 1.7% as well. So is the others like FMCG up over 1%. And then the list thins out a little bit between 0 to 1%. Maximum of the other sectors gaining in trade today. But of course, the advanced decline ratio is the other crucial parameter that we continue to monitor at this point of time. You've seen that the broader markets have actually been very interesting. There are some days where you've seen a screen like we're seeing one today, 4:1 in favor of advances. There have been days where the broader market has also borne the brunt of the market correction. But overall, Mahima, a good positive screen for today.
Absolutely. I think, right now we're just waiting and watching at least as to how the second half will pan out, because things changed yesterday, like Puneet mentioned, right? But overall, I think in the broad end of spectrum also, there is a lot of green. The mid cap 150 and the small cap 250 both are seeing an uptick of almost 1% each, and both of them trading at its day's high point. So 186 odd points uptick is what we're seeing in the small cap 250, and almost 240 points uptick is what we're seeing in the mid cap 150 as well. Quickly, the BSE 500, if you can try to pull that up and see as to where the action is. Well, you're seeing a lot of earning specific action as well, especially in something like a Spark, seeing an uptick of 7% on the back of its Q4 numbers. Something like Tejas Networks is also doing fairly well. Latent View, Tanla Platforms. By the way, this is the second or the third day where Latent View is also seeing gains. But on the flip side, there's Astral, which is down by about 6.4%. Triveni, Turbine, Sterlite Tech, Uno Minda, etc. also seeing some pressure. So that's with regards to where the markets go. But let's start taking your stock related questions. To answer them, in fact, we'll be joined by Rudra Murthy BV, who's the founder and director of Vachana Investments, and soon we'll also be joined by Nirav Seth, who's the CEO Institutional Equities at MK Global, joining us. Welcome to both of you, gentlemen, and a very good morning to you. The first question that we have on the show today is coming in, and this is on BSE. Vivek from Delhi says that he's holding 200 shares of BSE at an average price of 2,800. Wants to know from a slightly long-term perspective if he can continue to hold this, and what should be the targets going forward. Rudra, I'll take this up with you. Your view on BSE?
Mahima, good morning. Thanks for having me in the show. Definitely this one stock has so much of strength, and irrespective of market, it is just moving on the upside. So these are similar looking stocks one has to have in portfolio, and for me BSE is a definite hold, and any dips to levels closer to 4,000 will be a buy. Looking at medium to longer time frame target of about 5,000 to come. Keep a stop loss of around 3,850. So every dips to 4,000 is a buy. Stop loss of 3,850 on a closing basis. Look at targets of 5,000. A very strong stock, definite hold in one's portfolio.
All right, okay, so that's the view with regards to where BSE goes. The next one that we have is on Reliance Industries, as well as HDFC Bank. Sanjay from Bengaluru. By the way, I have kept on mentioning this, that no two stock related questions, so I'll just take Reliance for now, Sanjay. He wants to know as to which, what is the right entry price for something like a Reliance, and if this is if the current levels are attractive enough, then what should be the target price that one can expect? So on the charts again, Rudra, what's your view on Reliance?
Reliance is in a downtrend. So if you see this stock post results, it gave a good move towards levels of 1,400, 1,450, where it sees repeated resistance, and again from those levels the stock has corrected back. So for me, the final support for Reliance, which is the long-term support, is at around 1,290. So as a trader, definitely the 1,290 on a closing basis, one has to keep a stop loss and hold on to Reliance. I will not advocate averaging this because it's like catching a falling knife. Let it make some amount of time-wise consolidation
position at least at around levels closer to that 1300, 310, show some strength and bounce from those strong support area, and then one can look at buying Reliance. If you have it currently, hold on, keep a stop loss of 1290 on a closing basis. Watch for how Reliance will pan out at around 1300, 1310 zone. Any bounce from those levels, then only a fresh entry can be done.
Got that view, Rudra, and welcome to the show. But let me also welcome in Nirav Asher now of Head Equity Research at Latin Manhalal Securities. Nirav, a very good morning. Thanks so much for joining in. Let me pose the first question to you, and it continues to be on what we've discussed throughout on HDFC Bank. Sujata from Bengaluru has 200 shares at 932, asking if she can add on at these current levels to 200 more shares. Would you recommend that?
Well, yes, taking into account the performance and the medium to long-term prospects, it is advisable to add.
Okay, all right. The next one that we have is coming in. This is a fairly small company. It's called JITF Infra Logistics Limited. It's a 700 odd crore market cap company. Our viewer has bought 60 shares at the levels of 818 and wants to know as to whether he can continue to hold this from a slightly long-term perspective. Rudra, any view on the charts for this one? It's a fairly very small company, but if at all.
Mahima, this stock is in a clear downtrend, and the last support for this stock comes at around 270 zone for very near term. So I would advocate to have a stop loss at 270 on a closing basis. If this stock closes below 270, then yes, definitely I will get out. No averaging or catching the falling knife at current market price, but hold on with a stop loss of 270.
Got that view, Rudra, but the next question, coming in, that's on BEML, bought at 2,187 by a viewer, Aditya, who's writing into us from Hyderabad. So he's currently sitting on a loss, asking if he should continue to hold on to his 12 shares, or is it a good time to average down or sell out of his current shares as well? Nirav, what would you recommend on BEML?
I think it would be better to shift from BEML to BEL.
All right, so that's the view coming in on BEML as well as BEL. But the next one that we have is on SEDMAC. Now, this is from, okay, we don't have the name of the viewer, but our viewer wants to know whether to take a fresh entry from a slightly long-term perspective on something like a SEDMAC. Rudra, your view on this one?
See, stock is definitely in a clear uptrend, and yes, every dip is a buying opportunity in this stock. So now a fresh entry for this stock, if you want to look at levels closer to 1,950, will be a good entry point. If someone has it, definitely a hold. And if you are looking for a fresh entry, any dips to those levels of 1,950 will be a good level to enter.
Got that view, Rudra. But the next question coming in now, and this one's on Ratnavir Precision Engineering, and our viewer Jeet from Kolkata is holding to 1,400 shares, bought at 178. So it's currently sitting in some profits at this point of time. Rudra is asking a 3-month view on the stock. What would you recommend?
Very clear hold, and I will say stock can move towards levels of around 200 to 220 for that 3-month kind of a horizon. Keep a stop loss of 170 on this stock and hold on. Look at targets of around 200 to 220 to come on Ratnavir.
Okay, all right. So that's the view on Ratnavir Precisions. The next one that we have is on Happiest Mind. Sunil from Kuwait has bought Happiest Mind from a long-term perspective. He's bought about 1,000 plus shares and says that he wants to continue to hold this for at least about 3 odd years. Do you think, Nirav, that's the right decision right now, considering the way IT has been volatile in the past couple of months? What would you recommend for Happiest Minds?
Well, IT has been volatile during the last few months. There has been the AI scare trade also. But if he has a medium to long-term horizon, then he can continue to stay invested in Happiest Minds.
Got that view. But let's go across and take our next question now. This one's on Uno Minda. Stocks down today in trade. We I think had a downgrade from MK on the stock post earnings as well. And he's bought it. This is Prashant, who's bought the shares at 1,140 rupees per share. Asking if he should continue to hold on if there's a bottom being formed in. Rudra, would you recommend that?
Definitely no. This stock for last 2 days has clearly shown a down move in price, but volumes have been on the rise. So the down move is supported by volumes, and this is not a good sign technically. So for me, Uno Inda, any bounce if you get on Uno Minda, I will definitely look at an exit opportunity. And if you are a long-term investor and if you want to hold the stock, just see whether will it hold the last support which is there at around 990. So once it breaks 990, you will see further fall in the stock. So that will be the last support with which one can hold, or else any bounce in the stock is an exit opportunity. Don't at all average this stock.
Okay, all right. The next one that we have is on Wockhardt Pharma. Kiran wants to know the right entry point. She says she wants to buy around 2,000 shares in Wockhardt Pharma, and what could be the entry price and the target price as well for this one. Rudra, we've seen that overall pharma as an index in the past 6 weeks has seen green streak, right? Overall, the sector looking very bullish, but what about Wockhardt Pharma?
See, for me, Mahima, definitely pharma is one of those outperforming sector, and it is one of the sectors to get into in this market. So for me, Wockhardt Pharma looks very strong, and on chart, every dips from current market price to those levels of 1,500 will be a buying opportunity. So I'll be a buyer at current market price, and on dips to 1,500 I will buy. Keep a stop loss of 1,450 and look at targets of 1,800 to 2,000 to come on Wockhardt Pharma. And if you give me a blanket permission and to pick any other stock, definitely Glenmark Pharma also looks very strong to me. Granules looks very strong to me. Divi's Lab looks good to me. So there are a lot of good stocks still available in pharma. Glenmark will be my top pick, and even Wockhardt Pharma looks very strong to me.
Okay, all right. So that's with regards to where the entire pharma space goes. But I think we've Anita who's waiting by. Anita, very good morning to you. What's your query about?
Yeah, very good morning to you, ma'am, and all of you also. Thanks for taking my query. I wanted to buy fresh quality power. So what is the price to enter, and what is the long-term and short-term view on this?
Anita, if I'm not wrong, did you call us for the same query yesterday?
No, ma'am. This is my first call.
Okay, all right. Okay, okay. I got your question. I take this up with Rudra then. Rudra, with regards to where the daily charts go for this one, we're seeing a downtick coming in. But overall, do you think this is the right entry point, or should she wait for some time for entering into quality power?
See, for very short term, this stock has already done good correction from levels closer to the 1,400 to 1,450. The stock is now trading closer to the 1,000 mark. So for me, this stock definitely looks strong for a medium to longer time frame. But then this correction is a buying opportunity. And at current market price and on dips to levels closer to 950, I will be a buyer. The breakout point for this stock came at around 930. So dips to levels closer to 950 from current market price will be a buying opportunity. So at current market price and on dips to 950, I will be a buyer. Keep a stop loss of 920. And yes, this stock for medium to longer time frame can go back to those all-time high levels of around 1,400, 1,440. And once it breaks those levels, it can still further move towards 1,800 to 2,000 for a longer time frame. So at current market price, it's a hold. It's an accumulate on dips to levels closer to 950. Look at targets of 1,400 first and then 1,800 to 2,000 and keep a stop loss for this stock at around 900.
Got that view, Rudra. That's the view coming in on quality power. And what Anita should do is the recommendation as well. But let's go across and take the next question. This is from Mr. Rao. Very interesting one. He wants to take a fresh entry into Ather Energy for the long term and asking if this is something that he should do. Now we've seen decent results. Nirav from this counter has run up most certainly, but that the Q4 results was something to watch out for, right? I mean, almost 2,000 basis point margin improvement from a company as well as something that you can't miss. But what are you currently seeing for Ather Energy? They have a new platform coming in into next year, capacity expansion also. Is this a good time to look at this counter for the long term?
Well, clearly EV is the way forward. So I think there is a lot of thrust on electric vehicles, electric scooters, etc. And the listed players, the established players are also focusing on this particular segment. So the competitive intensity is high, but I think still, if one were to look at the space, it's looking quite interesting, and there is clearly a lot of upside potential over here. So I think he can enter even at the current levels, although the run up has been quite decent, but we are seeing the prospects begin to improve again for both for Ather as well as Ola Electric.
All right, so that's the view on Ather Energy. The next one that we have is on Eternal. Our viewer Siva says that he's holding 1,000 odd shares at the levels of 248. So he's probably just purchased it around this time. And he says that he can hold this for the next 2 to 3 months. Wants to know if, as to first of all, what are the charts indicating? Should he exit and re-enter at a later stage, or should he continue to hold? Rudra, I'll come to you on this one. Eternal, what are the charts indicating?
Mahima, for me, from current market price, yes, a bounce towards 260, 265 is possible. But unless this stock decisively crosses 265 and closes above that, the medium to longer time frame chart patterns are still bearish. So for me, yes, for a very short term trade, this stock can move towards the 260, 265 zone. So what our viewer can do is he can hold on to the stock, look at exit at around 260, 265, let the stock decisively close above 265, then yes, all hurdles for medium term are gone, and then you can look at entering this stock once it crosses 265.
All right, so that's the view coming in on Eternal, but it's time to take a look at the FNO space, and we have Sharad joining by as always to give us a perspective on what the setup is looking like. Sharad, yet another day at least for IT, where all of these IT stocks are leading the pack.
Well, yes, you're right, Mahima. For second straight day, we are seeing a good recovery, or you could say a technical move in the IT stocks. That's why the top gainers over here, HCL Tech, TCS, Infosys, Tech Mahindra, all of them going past that 3% mark in the day's trade. And overall, the sentiment also, there seems to be a little bit of pullback. But remember, there is an expiry at play as well. But no major sell-off happening, but no support coming in from the larger private banks as well. But net, the technical reversal is still at play, but definitely take things with a pinch of salt. We might be a range bound move in the day's trade today as well. But stock specific, let's see what's happening here. Long build up interestingly happening. Already we have mentioned about the mid cap IT stocks. Today also Coforge is up 6%, but Angel One, after you could say a pause of 7-8 trading sessions, the interest is back in this counter. The stock is up 5% as well. Fresh position building up. Short build up for Astral. Of course, the earnings impact is there, and Gale also, but not so much as compared to Astral. When it comes to the volumes, long unwinding, we have Uno Minda and Avenue Supermarts also making it to the list, but it's still a very narrow range kind of a movement in the FNO space. Lastly, I'd like to point out the short covering. Of course, over here also there is no clue for guessing. It's the IT stocks, especially the mid-cap IT space, that has been doing well for the last 2 to 3 odd trading sessions. So largely, apart from IT, it's a very range-bound day of trade.
थैंक्स सो मच फॉर दैट शरद. बट अगला कॉलर हमको गुजरात से आ रहा है और कार्तिक जी ज्वाइन करे एक सवाल के लिए. कार्तिक, वेरी गुड मॉर्निंग टू यू. क्या है आपका सवाल?
गुड मॉर्निंग सर, कार्तिक साहब फ्रॉम अहमदाबाद. मेरे पास 150 शेयर है CDSL के.
ओके.
तो 3 या 6 मंथ के प्लानिंग से मैं ऐसा सोच रहा हूँ कि मैं उसको होल्ड करूँ या फिर उसको ग्रो या ICICI AMC में शिफ्ट कर दूँ. मैंने 1 साल से होल्ड करके रखा.
अच्छा, 1 साल से होल्ड करके रखा है. और आपने उस वक्त कार्तिक जी चार्ट देखे थे या फंडामेंटल्स और रिजल्ट्स देखे थे?
नहीं, फंडामेंटल्स देखे थे.
फंडामेंटल देखे थे, ठीक है. नीरव, लेट मी कम टू यू बिकॉज कार्तिक 1 साल से CDSL खरीद के रखे ऑलमोस्ट 1500 रुपीज़ पे. अभी 1200 का भाव चल रहा है. क्या आप रेकमेंड करेंगे इस भाव पे एवरेज करने के लिए, या वो स्विच कर सकते हैं कोई और स्टॉक पे?
I will not recommend to average at this price, but I think he should continue to hold on to his position.
Okay, all right. So that's the view on CDSL. The next one that we have is from Vanita Bala, who's holding around 10 shares of RR Cable at the levels of 1950. Wants to know if she can accumulate at the current levels, or is there another pick from the same sector which is at a better valuation, is what she's asking from a long-term perspective. So Neerav, your view on this one?
Well, most of the shares in this particular segment have run up, whether it is Polycab or RR Cable or KEI, etc. So I think the most advisable course of action would be to hold on to the shares.
Got it. Well, the next question actually is, another caller from Mumbai itself, and Jigar is dialing in for a stock query. I think, Jigar, good morning. Welcome to the show. What's your query?
Hi, Puneet. Good morning. Good morning to Mahima also. Very lucky day. I got in with one ring.
First attempt.
Yeah, first attempt really. My query is on Sedemac Mechatronics. It's a recent listing.
Right.
I have shares at the IPO price. I want to know what is a good time to sell it, and or if I can hold on and add more, then how do I add more?
Got it. Well, thanks for calling, Jigar, and we are glad to get you in on the first attempt itself. I think we took a view from Rudra earlier. So, Nirav, let me come to you because client concentration actually was one of the key issues at the time of the IPO, but the growth has been quite stellar, right, over the last quarter that we've seen the results as well for Sedemac. Is valuations justifying that, or is it a good time to add, or would you recommend Jigar to hold on to at 1350 and be happy with his gains of almost 700 rupees per share?
I would advise to hold on at least for the next 3 to 4 quarters, because a lot of companies are showing exciting prospects in terms of growth. So the valuations always keep on moving ahead of the growth. Because the market is always expecting more. So there is a possibility to extract more out of this, at least at this point of time. So the advice is to hold.
All right, so that's the view coming in on Sedemac. The next one that we have is from Anita, who's writing us from Vijayawada, asking about TVS Motors. She's bought 75 shares at the levels of 3733. Rudra, I'll come to you on this one. What are the charts indicating for this one? Buy, sell, hold?
See, for very short term, Mahima, it has broken that crucial support which was there at around 3,300. And that's not a good sign. But if she is a long-term investor, you can't sell stocks like TVS Motor or even SBI. If you saw the recent result from SBI, that was bad. And again, technically, the stock looks very weak. But if she is a very short-term trader, then I will definitely tell her to exit from TVS Motor. But however, if she has a longer time horizon and she is an investor, look at averaging this stock another 10-20% down if you get. TVS Motor and SBI both looks good for a portfolio pick and for long term. But if she is a very short term trader looking for momentum, she has to definitely exit.
Okay. All right. Okay. It's time for our rapid fire round now. Rudra as well as Nirav, you both know the drill. Try to keep your answers as short as possible. The first one that we have is from Aparna, who's writing us from Singapore. She's holding Moltec Packaging at an average price of 700 from a long-term perspective of 2 odd years. Can she continue to hold, Nirav?
Hold. Good. The next one between MTAR and NetWeb. Either of those counters that you like, Nirav, for the long term?
MTAR.
Okay, Marksans Pharma is the next one. Our viewer Ramesh has bought 300 shares at the levels of 224. From a short-term perspective of 3 months, can you continue to hold, Rudra?
Hold and buy.
Next one's coming on HCL Tech, bought at 1822 by Almas from Dubai, and asking if it's a good time to, liquidate or hold these shares. Rudra, what would you recommend?
Liquidate and shift to either Coforge or Tech Mahindra.
Okay, Grow bought at the levels of 196. Sumana from Dubai is holding 600 shares. From a short-term perspective, is the good time to add more, Rudra?
Definitely add more, hold, stop loss of 180.
Navendu Sharma from Patna is writing to us for Rashi Peripherals, bought at 270. Now asking what is the long-term view here, Nirav? What would you recommend?
Hold.
Okay, Inox Wind, is this a good time to average? Our viewer Satyan's average price is around 180. From a medium-term perspective, Rudra, what's the view like on the charts?
Hold.
The next question coming in from Ramya from Muscat, and she's holding on to Raymond at 429, asking if it's a good time to sell out Rudra or continue to hold. What would you recommend?
I will recommend a hold.
Okay, NBCC, good time to enter, Nirav, from a 5-year perspective?
Yes.
Next one's on Meesho, bought at 210 from Harsha from Vijayawada, and she's holding on to 1,000 shares, Nirav. What's the view on the long term for this counter?
Hold.
Shakti Pumps, 200 shares bought at the levels of 544. Gopinath wants to know whether to hold or exit. Nirav?
Hold.
LTM, which is of course LTI Mindtree earlier, Nirav, bought by Krishna from Hyderabad at 4764. She's saying she's been holding on for the last 4 years for this counter. What should she do now?
Shift to Coforge.
Okay, Ashok Leyland, 2000 shares bought at the levels of 170. 3 years view on this one, Nirav?
Hold.
Next one's on HDFC AMC, bought at 1046. Ram wants to know what's a good recommendation on this stock, Rudra?
Definite hold.
Nestle or Marico, which one is a better long-term investment? Abhiraj from Palakkad wants to know, Nirav?
Nestle.
Maheshwari from Chennai wants to know if SBI Life is a good short-term investment. Would you recommend that, Rudra?
Yes, hold. Buy at current price.
Okay, SBI 840 shares bought at the levels of 1095. Happy to hold this for the next 3 years. Is that a good strategy? And should I look at some levels to enter further? Nirav, your view?
Definitely yes, and enter on dips.
Zydus Life, Vijay wants to know a good target for this one, Rudra, in the short term. What would you recommend?
So stock at current market price is a hold, and yes, it can further go up. Look at exiting at around 1100.
Okay, Raymond, 50 shares bought at the levels of 429 in December 25. Good time to book profits, Rudra?
Hold.
Akash is holding on to Grow shares at 158, holding 250 shares. Nirav, he's asking a 2-year view on the stock. What would you recommend?
Hold and add on declines.
Okay, LG Equipments holding at the levels of 548. 200 shares is what our viewer has been holding. Average down for the next 1 year, Rudra?
Hold.
Urban Company bought by a viewer Yogesh at roughly around 120, asking if 152 could be the next target. Rudra, what would you recommend? He wants to know if he can book some profits at that level.
Definitely yes, the stock is not so much strong on the chart, so if you get that opportunity and any rise, you have to exit.
Got it. Well, that is the end of the first round of the rapid fire as well as the first half of Ask Profit. But stay on. We have a lot more stock related queries on this other side after this very short break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either give us a call or send us a WhatsApp query on the number that's flashing on your screen up there. I think Parab from Pune has been waiting by patiently. Parab, a very good morning to you. What's your query about?
Happy morning to all. My question to fundamental analyst. In present rising crude and rising dollar scenario, which sector he find less affected with the moderate growth, and what is his outlook on the power sector and especially about the ABB?
Sure. Okay, Parab, so I got your question. I'll take this up with Nirav then. Nirav, basically he wants to know first of all as to which sectors can he kind of consider safeguarding crude plus the rising dollar prices, and a specific view on power as well as ABB. So he's combined three queries in one question. That's smart, Parab, but I'll give you a leeway this time. So Nirav, your view on everything he's asked about.
We had strong performances coming in from the auto sector, metals and mining space, and the power sector. But I think considering the fact that what has happened with crude oil, I think the auto sector has come under some sort of pressure at the moment. And we are now seeing some sort of sector rotation which is happening in the market. We are seeing some signs of pullback as far as IT is concerned. So I think IT is one space to watch out for, because there is a possibility of a pullback. Then I think there is a possibility of decent gains from the current levels. At the same time, mining and metal is looking quite exciting. We have had some good numbers coming in, especially from the steel majors. So that is a space to watch out for. And the third is the power sector. As you rightly pointed out, last year there was a modest demand throughout the year. Demand growth was just around 1%. But this year, FY27, the first quarter has started off with a 4.6% increase in the power demand. So that's quite huge. And I think that should augur well for the power generation companies going forward, because we have the likes of Torrent Power or JSW Energy or Adani Power, which could do well on account of certain company specific developments also, as well as the sectoral positivity also. If you were to ask me about some more intricacies, then I think the T&D space, the power T&D space is looking particularly more attractive. We've seen very good results coming in from Siemens Energy, and yesterday followed up by GE Vernova T&D. And Hitachi T&D results are still pending, but that is also expected to pose a strong set of numbers. So these are some of the sectors which you could keep a focus on going forward.
Got that view, Nirav, and thanks so much for that detailed answer as well. Hopefully, Para, that answers your question. But the next question, Rudra, is coming on Cupid. Sushila Billeri is holding shares at 127, asking a view on the stock. What would you recommend?
So for me, this stock, if you see the chart patterns, definitely very, very strong. And the stock has seen a clear breakout at levels of around 105. So every dips to those levels will now be a fresh buying opportunity. Hold on to the share, whatever you have. Keep a stop loss of around 100 and buy it on every dips from current market price to 110.
The next one that we have is on LG Electronics. Dilip from Kolkata is holding 90 shares at the levels of 1541. He wants to know whether he can continue to hold this from a long-term perspective or not. Nirav, your view on LG Electronics?
He can continue to hold.
Okay, all right. The next one is on Credit Access Grameen, and this is from Tony Pereira. In fact, he's asking about whether to enter Credit Access Grameen right now, or something like a Spandana Spurti, and if this is the current levels to make an entry into any one of these counters. Rudra, your view on the charts?
Definitely at current market price, I will buy into Credit Access, but you have to keep a strict stop loss for this stock at around 1,250.
Got that view. The next question coming in now. This one's on Pace Digitech. Our viewer Venkat Ramani is holding on to shares at 202 and holding 600 shares. So just a tad bit into the losses right now. Asking if there have been some recent order wins and if it helps the company build their order book. What would you recommend? Yeah, Nirav, it's an EPC company, but one of the recent listings in that sense, and the opportunity when we've spoken to the management has been positive. But any view that you might have on the company now?
Well, it's in an exciting space. The company is into EPC for BESS, which is battery energy storage system. Now, this is looking an exciting prospect. So I think he should keep the patience and hold on to the stock from a medium-term perspective.
Okay, all right. The next one that we have is on latent view analytics, and this is from Jigar, who's writing us from Mumbai. He wants to know whether he can continue to hold this for the next 1 year or so. He's been already holding this since the past 3-4 months. Buy more, continue to hold. Rudra, on the charts?
See, for me, this stock after a clear downtrend is making some base formation at current market price, and stock closing above 325 is very positive. So at current market price, definitely I will average and I will buy more. For that, I will keep a stop loss of around 315, and this stock can go towards 380 to 400 first, and further up move from there can also be seen. So clear buy at current market price and have a stop loss at 315 and look at targets of 380 to 400 to come first.
Okay, all right. So that's the view coming in on latent view. We've got Aruna who's calling us from Hyderabad. I'm just smiling because yeah,
latent
view coming on latent view. But anyways, Aruna is waiting by. Aruna, a very good morning to you. What's your query about?
Yeah, very good morning to all of you, sir. Actually, my query is regarding Oracle Financial Services. I'm having 110 shares at 8,250 average. I want to check with Rudra, sir, what is the long-term and short-term view on this? And what is the point to sell? And if I get an opportunity, what is the point to enter?
Okay, all right. Got your question. I'll take this up with Rudra. Rudra, your view on Oracle Financial Services?
See, even though IT has not performed well for now a medium to longer time frame for like last 1 to 2 years, no doubt last 2-3 days bounce has been very swift in IT. Look at stock like OFSS. It is close to its all-time high levels when the entire sector is not performing except for the last 2 days. So these are types of stock you have to pick, and a definite hold at market price. And I would advocate a buy into this stock on any dips to levels closer to 8,100, where the next strong support comes. So I don't think so you might get it at 8,100. Definite hold at current market price, and if you get it there, you can enter or else hold on. I won't be surprised to see this stock even move towards 14,000 to 15,000 to come. So this is a stock which can give you that 20-25% kind of a compounded return every year. A definite hold and the best stock to buy from IT sector.
Got that view, Rudra. Now, very interestingly, we have 2 questions on Keynes Tech, and the reason being that Jyoti from Hyderabad actually bought these shares at 5,400, which is very away, and might have bought it 12 to 18 months ago, as a matter of fact. So she's currently sitting on losses of over 4 lakh rupees. And on the other end, Manoj from Mumbai is holding shares at 3,550, and unfortunately, even from those levels, the stock has slipped down below. But Nirav, just in terms of Keynes Tech, the result Q4, the guidance was missed and cash flow was a big concern. So the next 2 to 3 quarters might just take to get back to the break-even level. What would you recommend to either? Because of course, very different target prices, but the stock's not performing in that sense. And on the other end, we're seeing the other players like Sirma or Amber do recently, when Amber actually got corrected yesterday as well. So the cash flow issue is now starting to be visible for all companies. Would you recommend either of them to exit this counter now, or should they average? What to watch out for?
Well, I think the EMS companies have been struggling as far as the margins are concerned, and there have been certain issues. One of very stretched valuations, very high expectations, sky high expectations as far as the performances are concerned. So I think there is no room for disappointment as far as the expectations are concerned. But I think most of these companies have fallen short of expectations as far as the Q4 performance is concerned. Barring, I think, Dixon, which has also disappointed, but because of the proposed JV deal with Vivo, the stock has been holding on. But rest of the companies have all failed to meet the expectations. So the advice would be to exit this stock and this space as soon as possible.
All right, so that's the view coming on EMS. Yes,
very brutal.
Puneet here is very sad about that because he tracks the space.
Yeah, but the point that Neera makes is so pertinent, right? Because the valuations, of course, are not cheap at this point of time. But most certainly, I think now it's becoming more clear on which side you want to be at this point of time.
Exactly. Anyways, the next one that we have is on Aeroflex Industries, which is from Atul, who's writing us from Delhi. He's bought it at the levels of 182 and 532 shares is what he's holding, and wants to know as to whether he should continue to hold or not. Rudra, your view on this one?
100% hold, and if you get any dips to levels closer to 350, it will be a buy for me. So definite hold.
Definite hold. Got it. The next question, Rudra, also to you is on Eicher Motors, and Padma from Bengaluru is holding shares at 6930. So very close to the current market price. Of course, we had a fundamental reason where they've investing 2,500 crores in a new plant in Andhra Pradesh. Results on Friday as well. But Rudra, we've been looking at that. There's been a bounce from 6,600, and that is a key crucial level. Would you agree? And what would you recommend Padma to do now?
See, Puneet, again, this stock support for very short term is at 6,600 zone. So any bounce to those levels, from there only you have seen the bounce, and again dips to those levels will be a good buying opportunity. But if you see TVS Motor, if you see HR Motor, even M&M, these are all stocks which are just correcting for very short term. But however, only if you have a long term horizon and if you are an investor, then only look at stocks like M&M, HR Motors, or else for very short term. And if you are a trader, I will definitely avoid autos as a pack.
Right. Okay. The next one that we have is on Cohen's Pharma. Vikram Khanna has purchased at the levels of 532 and he's holding around 1,560 shares. Says he wants to continue to hold this for the next 6 months. What should he do? Rudra, your view on the charts on Cohen's Life Sciences?
Definitely a buy at current market price and hold on to what you have, but you have to keep a stop loss of 380, and even at current market price and on dips to 400 I will be a buyer. 380 should be the stop loss with which you have to hold on to all your positions.
Got that view, Rudra. But the next question coming in now, and this one's on KEC International, and it's on, this one's bought by Jogeshwar at 508. So stock slipped to a new low now. I think it might have hit a new 52-week low as well. And he's down almost 17,000 rupees. Rudra, actually a quick one to you as well. Is the trajectory continuing to be downwards on the charts for this counter?
Definitely yes. 500 was the last support the stock had, which it has broken now. So I will definitely exit if I have KEC International. Market doesn't know at what price you have bought. There is no anchoring bias. So at current market price for me it's a sell. And even Keynes, whatever my analyst spoke, I will definitely vouch with him. And even stocks like Keynes looks very weak to me. Forget where you have bought, save the money, whatever is left out. I will even exit Keynes also and even KEC at current market price, irrespective of where you have bought.
About Idea Forge then, Rudra, because the next one is on that, because Neha is holding 120 shares at the levels of 590 and she wants to know the targets for the next 3 months, strategy as well as the stop loss for this one.
See, for very short term, this stock definitely looks good, but only thing is it has moved up so fast from levels of around 470. Now you are seeing 780. If I'm not wrong, in last 3-4 months, the stock has given a return like 80%. And can it further go up from here? So for me, yes, hold on to the stock if you have, but a definite stop loss for this stock at around 730 has to be kept, and then only you can hold on to the stock.
Got that view, Rudra. But on data patterns is the next one. Uma from Bangalore is holding shares at 3958. Nirav, asking a 2-year view on the stock, what would you recommend here?
Well, I think this quarter has been mixed in terms of results, and this company has been catering to the BrahMos missile, and there are some media reports which are indicating that there has been a sharp decline in the production of BrahMos of late. Having said that, this could be a temporary factor, but in the short term can expect near-term headwinds, but I think from a 2-year perspective, still looking very attractive.
Okay, all right. So that's the view on data patterns. The next one is coming in on CESE. Our viewer Venkat Reddy from Hyderabad is holding 1,000 odd shares at the levels of 176. He says that he's already sitting on a loss, but wants to know if he can continue to hold, add more, or exit. Rudra, on the charts for CESE?
So I will add at current market price, keep a stop loss of around 170, and at current market price and on dips to 175 it's a buy, but stop loss at 170 is a must. And yes, this stock can bounce back from these strong support zones of 175. Medium to longer time frame chart patterns are really strong.
Got that view. But the next question is from Balwant Modi on GMDC. Now, Nirav, it's this counter is up almost 80%, and I think that one of those rare earth plays as well, but in the space that it operates, it's kind of very rare as well, right? There are not too many companies that have that exposure. So would you still recommend, I think, similar to an Ather, right? Because it's done very well in the last year, and do you feel that the momentum is enough to buy into this counter even now?
Yes, definitely. I think still a lot of upside potential as far as the stock is concerned and the business is concerned.
Okay, all right. The next one that we have is on TCS. Our viewer Rakesh Gupta says that he's holding 100 shares of TCS at the levels of 2949. In fact, he's already holding Infosys, and he wants to know whether he can continue to hold or sell this one. I know that both technically and fundamentally right now IT is looking weak, but we've seen 2 days of straight gains in the sector. Rudra, any view on both of these counters?
See, I will definitely switch from TCS Infosys to stocks like either Coforge, Tech Mahindra, Oracle, Financial. So these are some of the stocks in IT where you have relative strength. So TCS and Infi does not show that kind of a strength to me. So if I have TCS and Infi, I will switch from there to 3 other stocks which I mentioned now from the same sector. Look at Coforge, look at Tech Mahindra, and also look at OFSS.
Got it. Well, the next question is from Sumit from Delhi. It's an interesting one. Nirav, he wants to know between Eicher, Maruti and TVS, what's a better pick for the next 1 to 2 years? All 3 doing capacity additions, Nirav, but I think the street didn't like that capital allocation decision by TVS into Jana Small Finance Bank, even though if it's 5%, larger scheme of things also wouldn't impact in terms of that number. But how are you viewing either of those counters? Are you actually bullish that TVS has corrected, given that it's an expensive stock? But let us know what you think, either of those plays.
There is a huge disparity in the valuations of two-wheeler companies, and I think TVS trades at around 55 times price to earning multiples. So these are definitely not cheap valuations, but the market has given it a premium. So definitely the prospects are strong for the company going forward. So the advice would be that it's a portfolio stock and should not be sold. As far as Eicher is concerned, there's already a brownfield expansion which is happening, which will take the capacity to around 2 million. And to top it, we have yesterday the Andhra Pradesh government has allocated land for a 2,500 crore expansion. So this again is a premiumization story, which I think we should continue to hold. And as far as Maruti is concerned, then I think we have a strong capacity addition which has been done yesterday, the commencement of commercial production, which should take the capacity to around 2.65 million units. So again, all these are growth oriented stories and all these warrant a hold.
All right. The next one that we have is on Sagility India. Shankar from Bengaluru is holding 1100 odd shares at the levels of 41.6. He wants to know if he can average at the current market price. His target is for the next 3 months. Rudra, your view?
Yes, at current market price, I will definitely look at averaging the stock, and it has just given good time-wise consolidation. And keeping a stop loss of 38, I will be a buyer at current market price. And yes, this stock can go towards 50 zone, and beyond that also, yes, a move towards 60, 65 is also possible. So at current market price, it's a great risk reward to buy. 38 should be a stop loss on closing basis. Look at initial target of 50.
Got that view, but let's go across, take another call now from Bengaluru, and Prashant has a stock query for us. Prashant, very good morning to you. What's your query?
Yeah, good morning, Mahima and Puneet. Always pleasure talking to you both and to the panel. So my question is basically on a long-term portfolio building. At the current market valuation, I wanted to understand which is a good stock to add, Titan, Bharti Airtel or Hindustan Copper.
Okay.
In that, what would be the one pick or two pick that they would suggest, and what could be a good entry point on the stocks?
Got it. Well, Prashant, I think, you also sent us a query on Uno Minda, which we've taken today, but I think you got lucky enough to get your call accepted as well, but a pertinent question, so we let this one go at this point of time. But Nirav, between Titan, Hind Copper and Bharti Airtel, I think, we covered the news yesterday that Bharti Airtel briefly, breached HDFC Bank in terms of market cap as well, so has been a rank outperformer. Is it an easier choice between the three? How are you seeing it right now?
Well, I think after what has happened with gold, I think Titan remains the best bet as far as the gold retailers are concerned at this point of time, considering the prospects going forward. Bharti Airtel has been in a range since some time. And I think the trigger for the stock could be the increase in the ARPU, possible increase in the ARPU and the African operations. So I think I would be a little skeptical about Bharti Airtel at this point of time. Titan definitely looks positive. And I think Hindustan Copper also from a medium to long term perspective is looking quite attractive.
All right, time for our second rapid fire round. Try to keep your answers as short as possible. The first one is on Suzlon. Murugan from Tirupati is holding 12,500 shares at the levels of 42. Can you continue to hold, Rudra?
Hold.
Nitika from Pune is actually asking a question on Zentech, but bought her 1936. What should she do, Nirav, with her 30 shares?
Hold.
Okay, IDFC First Bank 2,000 shares bought at the levels of 65. Sharat from Hyderabad wants to know as to what should he do next. Nirav, your view?
Exit.
Next one's on MRPL, bought at 180 by Ray from Bangalore. Rudra, a view on the charts?
Shift to Chennai Petro.
Okay, the next one that we have is on Vedanta. And Rudra, this question is for you. Our viewer has bought it at the levels of 480. 1,100 shares is what Dr. Manjunath has been holding. Can you continue to hold from a slightly long-term perspective?
Definitely hold.
A fundamental view on HDFC AMC, Nirav, especially since it's trading a slight discount to ICICI AMC. What's your view?
Hold.
ITC Hotels bought at an average price of 165. Continue to hold. Amit Gupta from Delhi wants to know. Nirav?
Add.
Next one's coming in on, okay, we've taken Raymond's today, but on BEL, 8,000 shares held at 453. Rudra, what's the view on the charts now?
Add.
Buying MRPL at the current price makes sense, Rudra?
I just now told Chennai Petro is a better option compared to MRPL.
J&K Bank bought at 121. Rudra, a viewer wants to know, Sabita wants to know a short-term view on the stock now.
So I will say hold.
Hindustan Zinc, is it a good buy at the current levels? Adi wants to know. Nirav, your view?
Yes.
Aban Offshore, it's a counter that we don't discuss too much. Bought by Pankaj at 2260. Let's pull up that counter. Where is it right now? Aban Offshore. And he wants to know what he should do with this counter now. I think Nirav just been, down and out. I don't think a lot of people track it, but any view?
Exit.
Misho bought at the levels of 210,000 shares is what Harsha from Vijayawada has been holding. Continue to hold from a long-term perspective, Nirav?
Yes, hold.
Jaideep wants to know that he's holding Chennai Petro at 1,074 and wants to know if he should continue to hold on for the next 1 year. We got the technical view, but Nirav, any view on the fundamentals?
Yes, hold.
Okay, Netweb Technologies, what are the right levels to make an entry into this one? Bindu from Hyderabad wants to know. Rudra?
So at current market price, it's a hold, and on dips to 3,500, it will be a good buy.
Next one, that's coming in now. It's on Black Box, and Vishwanathan from Kuala Lumpur wants to enter this stock now. Rudra, would you recommend that on the charts?
Yes.
Okay, the next one is on Zaggle prepaid. Ravi from Mumbai has bought 200 shares at levels of 330. Good time to average or exit? Rudra, on the charts?
Exit.
Sabu from Kerala wants to know a good time to enter GRSC. Would you recommend that, Nirav, right now? Is that the time?
Yes.
Okay, Suryodaya Small Finance Bank holding since the IPO. Subramaniam is holding 49 shares at the levels of 305. Continue to hold from a long-term perspective. Nirav, any view?
Exit.
Ajit from Kochi has 30 shares of ICICI Bank at 1250. Nirav trades at a very, that price itself now, but any view?
Hold.
Kotak Mahindra Bank, does it make sense to make an entry right now from a 1-month perspective? Rudra?
No, I will avoid.
Shrikant from Hyderabad is holding on to Eternal 2000 shares bought at 62 though, and wants to know a 5-year view on the stock. Nirav?
Hold. Continue to hold.
Got it.
Irida is the last one. Soumya from Bengaluru has bought 50 shares at the levels of 125. Continue to hold, Rudra?
Exit.
Alright, okay, that brings us to the end of this rapid fire round as well as Ask Profit. Rudra as well as Nirav, thank you so much for taking out the time and helping us almost 80 queries that we managed to answer in this edition itself. So probably we're crossing 100 queries in the afternoon edition. But like I said, completely out of time on this edition of Ask Profit. But do stay tuned because Know Your Company is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. This is the show where we get you interesting companies, be it earnings, small caps, mid caps or any type of a hidden gem. Today also we have one interesting company, but before that, let me see if you can guess that company or not. It's the second largest player in the Indian tile industry. Of course, you must be getting a couple of options by now. They delivered a very strong operational Q4 numbers, and because of that, the stock is also showing good momentum. Also, the third important, hint is the stock is up 32% from March lows, and I would like to put in one more bonus hint for you. Now, I'm sure you'll be able to guess it. The brand ambassador is Salman Khan. So now you're trying to understand which company this is all about. But to put that in perspective, this company is Calcutta-based company. It's from West Bengal. It is Somani Ceramics. This is the company which we are talking about. A little bit of rebranding also here last time which I saw the logo. But why are we calling this company? Of course, this is on the numbers, Q4 numbers. That's one of the most important questions to be asked, and the company has actually done well. The first question is why we are getting this company is the Q4 numbers, Q1 numbers especially because of the rising costs. Will that be impacted? That's the first question to be asked. Second question is the price hike. Will we see more price hikes happening? At least we have seen in the month of April already. Will it go more? Also, the third important questions to ask is the FY27 volume and margin outlook. How much growth is expected in the tile segment or the ceramic segment? And also the demand. Will it be muted from the real estate segment going ahead, or is there something else to this story? Apart from that, the question will be the current plant capacity utilization and overall the capex outlook if the company is doing. I remember around 80 to 90% is that number, and also of capex, whether the company wants to do capex in this type of market scenario or not. So these are the key questions we will be asking this company, and of course the market share picture, because whenever there is a stress in the industry, there is a market consolidation and some benefits might come in here as well. And Abhishek Somani, the MD and CEO of the company, will be answering all our questions. But let's try to understand what the company actually does. and understand which new segments the company might enter going ahead as well. It was founded in 1968 and it's India's second largest tile player in terms of market share. Also, it deals with tiles, sanitary ware, and recently you could say bath fittings also the company has gone into. But let's see how the capacities actually pan out. A tile capacity is roughly 75 million square meters per annum. Also, after tiles segment, we are having the sanitary ware capacity and lastly the bathware fitting. So, three major drivers when it comes to the overall capacity. But apart from this, let's see what else is there details which should be in your radar, and that is the exports. They do it to 46 countries across 6 continents, and that is where it becomes a global player. Almost 9 manufacturing capacities are there. Also, they're spread out. It's not only Gujarat and the Morbi cluster, that's where the concern comes in, but Haryana and Andhra Pradesh is also there. So they have geographical diversification also. Almost 2,900 network of dealers and 514 showrooms in India itself. This is the key details coming in. But the tile volume sales which have happened, Q4 you take it or even FY26, it's not been that strong. Just 2% growth has. So a little bit of concern on the volume growth front as well. Sales mix, let's see how things pan out. The own manufacturing is just 26%. So at times it is asset light. That's why the ROC numbers might be on the higher side. 34% is roughly the, you could say the JVs and other segment also. That means outsourcing also happens. So it's a kind of an asset light mode as well. Q4 numbers, that is one of the main reasons we are getting the company. They have hiked price hikes between 16 to 70% in the month of April as well. High utilization has boosted the margins. As expected, that was a weaker quarter, but the company has done well. Also, 82% utilization is coming in tiles. Let's look at the other segment also, what the utilization level stands, and that's roughly 83% in the sanitary segment and almost optimum capacity in the faucets. It's a part of the fitting segment, but largely in FY27, the growth outlook, they're expecting a single-digit volume growth in tiles. They have been stating about that, and a double-digit when it comes to the sanitary ware. Of course, this is having a higher margin as well. Also, 100 and 150 basis points of EBITDA expansion is expected in FY27. But what may work for the company? That's very much important to understand. As I mentioned, benefits of consolidation and market share gains. That's the first point. The second point, better pricing power. They are able to give out price hikes in a much better way as they are kind of an industry leader. Diversified manufacturing setup. Morbi में impact जरूर आया है, लेकिन इनके धंधे में of course देखा जाए North India, South India also they have manufacturing setup and that has not been impacted. Improvement in the working capital and the reduction in net debt. Of course, business is something important, but the working capital ratios and balance sheet is also improving. No major capex they have planned in FY27. That means a little bit of conservative stance, and maybe that's why the market may reward this company. So these are the reasons what may work, but what may not work. Kya concerns it? This is of course the demand for real estate. That numbers are not very big as well, so it's mixed. So some kind of impact can definitely be there. Both propane and LNG prices are high. These are the raw material costs when you build a ceramic sector or the tile industry. That is where the impact comes in. और ज़्यादा impact March quarter में नहीं आया है. The impacts have started coming in April and May. April has already seen a slow demand owing to the low Morbi JV volumes as well. So concerns are definitely there, and this is one of those sectors which is not widely tracked, or you could say is not that favorable as well. But that's our duty to find, whether any alpha is there in these sectors or not. But in the KYC show, what are the important rating parameters we should understand? Income statement, balance sheet, cash flow, these are the important ratios which are there from the financial statements. Return ratio is something we should be looking at as well. Shareholding, has the promoter's stake changed or FISDIs have lapped up? Street cred, of course, we'll try to understand short-term basis how much money has been done. Is there any issue on the long-term basis if you're holding the stock for a longer period of time? And valuations, we'll try to compare it with Kajaria Ceramics because that's the only apple-to-apple comparison, and the outlook as well. How things pan out going ahead seems mixed right now. But let's start with income statement, the first rating parameter, and see what's happening. The 3-year CAGR numbers have been largely flattish. Nothing much interesting, nothing very big of growth coming in. So a little bit of concern coming in. But the Q4 numbers on the other hand, that showed a good resilience. Why? Because people expected it would be under a pressure quarter, but the company did definitely a good turnaround. Just look at the jump happening from this 8.1% to 11.2%. So this is where the margin up move has happened. Of course, the capacity utilization is still on the larger side. And just look at it, the trajectory, and now a very big move happening at 11.2%, that margins coming in. So definitely the margin has done well. So it's kind of negating. Past might be a bit flattish, but there is signs of reversal happening in, especially in the fourth quarter. The question is it an inflection or there is a pain back in this in first quarter? So right now it's a neutral rating when it comes to the margin trajectory. Let's talk about the balance sheet. Also, the balance sheet is showing good strength. Why? I'll explain you. The borrowings, the net debt to ratio, if you talk about it, that is coming down. And during this time, the company is not expanding also. So your ROC numbers also expected to look nice. And the balance sheet management is really strong, and is the working capital days also. So net, I'm going to give this a thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet, but let's try to understand the cash flows. And of course, the cash flow improvement has also come in this space as well. From FY24, there is a good move at 247 odd crore rupees. Of course, the net operating cash flows, they have also improved. So net, there is a strength in the cash flow segment. But nevertheless, remember, take things with a pinch of salt, especially over the next 2 quarters. It will be volatile for this industry. Because of that, I'm going to give this a neutral rating. I spoke about company's capital allocation policy. I spoke about the return ratios, and now it's at a healthy pace and it has maintained itself at least for the last 3 years between 12 to 14 odd %. And the way going ahead, the capital allocation policy, no major capex is there. So we might see these numbers on the slightly on the higher side as well. The way they have maintained it, it's a strong thumbs up when it comes to the return ratio, especially the return on capital employed. So 4 ratings are done. Let's talk about the shareholding, and there isn't much to talk about it. Nothing has changed. Promoter stake वही का वही रहा है 2 साल में. FIs and DIs also largely haven't moved much. Slight, increase coming in from the FIs, which is very minuscule. For DI is a slight dip, but net it has showing a strength across all the holdings which are there from the respective folks like promoters, FIs, DIs and public. So it's a neutral rating when it comes to the shareholding segment. Let's move on to street cred. How things are panning out. Did the stock actually make money for you, or is this stress, or you could say, is there a stress in this sector? And yes, there is a stress in this sector. Why? I'll explain you. From 2025 highs, the stock is still down 25%. Of course, its peers have also been impacted. So has the company been. From March lows, of course, we saw a lot of mid-cap, small-cap going up. And over here, this company went up 32%. But if you are a long-term investor, 1 saal mein paisa nahi bana, stock is down 6%. And if you are holding the stock for 5 years, the stock is literally flat, and that is where the concern comes as a shareholder for you when it comes to the street cred. So from this analysis, I'm going to give this a thumbs down for this segment. But if the prices have come down, do the valuations become attractive? Yes, they do become attractive, and because of that, of course, Kajaria Ceramics, there's a 12-month forward P is just 28 times. Compare that with Somani, it is 17 times. So there is a good discount if you compare it with the peer. But let's just see how the 5-year average P also comes in. Somani Ceramics, it's at 19 times. So it's still cheaper from its 5-year average P also. And of course, its peers' valuations is also cheaper than the 5-year P also. That means long-term average ho ya peer ho, usse sasta ye company hai. And that is why the risk-reward ratio becomes very good for this counter, and that is why I'm going to give this a thumbs up for this. But last one, let's talk about, and that is the outlook. Outlook is very much important. I had shared with you the EBITDA and the industry growth or the volume growth for the company, but apart from that, there are concerns on the real estate demand, and that is true. Also, higher raw material pricing may impact in first quarter. March में बहुत कम impact आया था, April में ज़्यादा impact देखने मिल रहा है. The propane dependent units have been impacted in the Morbi cluster. That's coming in from the management as well. We'll try to understand a little bit more. But on the other side, 21 analysts have 100% buy rating as per the Bloomberg. And of course, we see there is an up move here, return potential of 29%. अगले 12 महीना में टारगेट प्राइस 575 यानी कि 575 कैन बी द टारगेट प्राइस द रिटर्न पोटेंशियल फ्रॉम करंट लेवल्स टू ऑलमोस्ट 30% सो देयर इज risk reward ratio favorable, and I had mentioned you that, and because of that, still to balance things out, I'm going to give this a neutral rating when it comes to the outlook. But let's try to understand what's the entire KYC rating. So Somany Ceramics, has the company passed the test of KYC? And largely it seems like it has. Income statement and cash flows has been neutral, but the balance sheet management has been strong, be it the working capital or even the debt reduction. Return ratios, ROC levels improved. Of course, no major capex also. You can expect these numbers to go up. Street cred, the stock hasn't given much return to the investors, especially the long-term investors, and that's a concern coming in. But valuations are quite attractive, so I've given a thumbs up. And outlook is still neutral because the analyst community is bullish. But on the other hand, the rising cost, the demand is definitely giving us a gloomy picture about the sector as a whole. But nevertheless, it's a big company, so it might find its way out and be a benefit of market consolidation. But total rating parameter, we have given this company 5 out of 8. This is the number we are talking about. Largely, it's neutral to slight positive in the historical numbers which we talk about. And to understand more, we will be joined in by Abhishek Somany. He's the Managing Director and CEO at Somany Ceramics, and interesting snippets about him. He has almost 3 decades of experience, and the way he started in the company, he joined just as a management trainee in the year 1995, and now he is the MD and CEO. And of course, he is also the ex-chairman council of Ceramic Tiles and Sanitaware for 2021-2022. But we are joined in by Abhishek Somany, but we'll get all these details just after the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what.
Welcome back to Know Your Company, and we are joined in by Abhishek Somani. He's the Managing Director and CEO at Somani Ceramics. Good afternoon, Abhishek. It's always a pleasure to have you at NDTV Profit, and of course a good set of numbers, especially the margin front that actually surprised the entire market. Just wanted to understand, will this momentum continue in the first quarter as well? Because I presume that higher raw material prices are expected to hit the company in the first quarter. Just wanted to get your view on the Q1 outlook on that.
Yeah, hi, thank you for having me. I think what has happened is that the fuel prices is the major input cost, which is 30% of our input cost is just one element, which is natural gas or any gaseous fuel. So to that extent, we've been able to currently pass on the prices. Almost all of the prices have been passed on. As you can well know that March, because of old inventory and some other inventory at older prices, we had to put in a lot of material in the system. A lot of the other manufacturers dumped even more than what normally they would have done. So the dealership networks were completely filled with inventory in the month of April. So April was a flattish month. May onwards, we should start growing. So tiles being such a inexpensive product compared to its other peers, which is any other kind of stone or wood or anything else, I think there is enough and more for us to look forward to, even with the price increases. Because if you look at a price, the amount of price we have increased, it's almost as much as what it had gone down in the last 24 months. So we're kind of at neutral levels from 24 to 36 months ago kind of pricing.
And Abhishek, speaking of price, any kind of further price hikes we can expect in the coming weeks or maybe in the next 45 days?
That will largely depend on how the gas and the Brent moves, because most of our gas is linked with the international gas pricing and the Brent pricing. So if that goes up, then that's something which we will have to do at that time. But currently, we have outlook of what the prices are in June. The prices have gone up a little bit for the western sector, which is the Morbi units, the all of Morbi. So maybe there's a very, very marginal price increase of a rupee or two. But yes, there could be a small price increase in June.
Okay, so marginal price hike you can expect in June itself. That's what the management is talking about. But let's talk about the FY27. Let's take the whole year in view. You have given an EBITDA margin expansion of 100 to 150 basis points. And of course, growth, single digit growth coming in at least in the tile. Just wanted to get, what's the rationale for this outlook?
I think first of all, the caveat is that nothing else surprises us in terms of fuel or any other geopolitical issues. But having said that, I think we're in a good shape because capacity utilization should go up. There is trouble and there is pain in the Morbi sector. I think about 10 to 15% of Morbi will not start at all, which means that much less capacity coming into the market. From that point of view, like I mentioned earlier, tiles is still the most effective flooring and wall material from a builder point of view, from a consumer point of view. So therefore, we've had a poor 2 years of demand growth. We were seeing demand growth in the last quarter. In fact, since Diwali, we've been seeing some steady demand growth. That should, if that momentum continues over the year, we are looking at decent high single digit growth, and that would push up our capacity utilization. Like you mentioned earlier in your show, that our balance sheet is strong, we have good cash flows, and no further major expansions this year. Therefore, with the capacity utilization going up, that would all come to the bottom line.
Right.
And even if this quarter there is a particular low demand, because when prices go up, it takes time for the market to absorb that pricing, get used to that new normal. But like I said, the product is so cheap compared to the other peers. There will be a pent-up demand, exactly how we saw after COVID. So I'm not really worried for the long term.
Okay, so tile will have a pent-up demand as we've seen in COVID. But how the real estate demand trends looking like? Seems a little bit of muted sentiment here.
Yes, so the real estate demand, as far as we're concerned, what you're talking of, the muted sentiment is for the new launches and the new sales. But please let's not forget that whatever we are selling now is for those real estate projects which were launched 2 years ago. So all those are coming into finishing stages. Therefore, for us, that's not a worry immediately. That could be a worry couple of years down the line. But for now, we are supplying to all those real estate projects which were launched a long time ago.
Okay, so you are not worrying for the existing projects, at least for the last 2 odd years. But just let's talk about the numbers also, Abhishek. The capacity utilization levels were around 80% plus. You're expecting this for the first quarter or the second quarter? How much these numbers can they hit that 90% mark, or like to wait and watch?
So capacity utilizations currently, last year we finished at about 79%, and we are looking at about 83-84% for this quarter, because some of our plants only started from May onwards, and April, I think about 2 of our plants were shut even in April, although that's only about 10%, 15% of our capacity. Therefore, I'm saying that it would be in the mid 80s range or early 80s range for this quarter, and then it will start moving up as the year pans out.
Okay, so utilization levels is around 80 to 85%, and then it keeps moving up. Abhishek, correct. Apart from that, capex plans, of course, the maintenance capex plan is something which the company does. So have you purposefully, kept the capex plans on the lower side? What's the entire rationale behind it? Because of that, your balance sheet is also decent and your return ratios also improve. So just wanted to understand your thought process.
Yeah, so we put in about 550 to 600 crore rupees in the last 36 months in capacity building, and therefore our capacity utilization with the sluggish demand was low. We have more than enough capacity, considering that I'm using only 79% of the capacity. I have reasonable headroom to use more capacity. Also, I think in the Morbi sector, there's enough and more capacity available for me to outsource from. So there's no immediate need of capacity expansion. However, we are doing some balancing equipment and about a 20 to 30, in fact, a little more, 30 to 35 crore rupees spend on balancing equipment to make some of our units even more value added. That process has started now, and it will start yielding benefits from Q3 onwards. So we are doing a lot to make ourselves more and more value added in most of our plants. So that's happening as we speak.
Okay, so value-added products benefit starts coming in from the third quarter. That's a very important statement. Okay.
No. The value-added product benefits are already there. We are trying to make more of our plants value-added. So it's not that we don't make value-added right now.
Right.
It's just that we are equipping some other plants which had headroom for become more value-added. That's what I'm saying.
Right, so value added in manufacturing, and that benefit comes from the third quarter. Interesting, but let's give me a perspective, Abhishek. Whenever there is a stress in the industry, and which is definitely there, for larger players like yours, generally what happens, you mentioned 10 to 15% of Mobi players might not exist going ahead. So when that happens, there's a consolidation at place, and when there's a consolidation, there's a market share gain for larger players like you. So any numbers to it, or how do you see this?
Too early, because it's still very volatile, the situation. I think this is yet to be seen as to how long this whole war would last, and how long these propane and LPG and gas prices will hold at these levels. Obviously, there is very much a lot of more stress at these levels, because every time at a larger base we increase prices by, let's say, given just an example, 15% price increases, that would tantamount to about a 30 to 35% price increase at a low base for the smaller Morbi players. So this obviously puts a lot of pressure on their margins, a lot of pressure on the cushions which they had built in. So that goes away. So I do believe that there would be some amount of consolidation happening if this had to remain for a very long time.
Right, Abhishek, it's wonderful to talk with you. You've given us a good clarity on the industry and the company as well, and yes, a good set of numbers also. It's always a pleasure to talk with you, Abhishek. So that's the management of Somany Ceramics, and a very surprise positive earnings coming in. But yes, there is a cautious tone because of the changing geopolitical tensions, and there's definitely a big change in the cluster of the tile segment in Morbi in Gujarat. For so interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी हुआ रे, में देखो मतवारा हमारे केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Benchmark are holding firm, Nifty above the 23,700 level. Sensex is up nearly 350 points in trade with across the board buying seen in IT stocks leading the charge, signaling a risk-on mood returning to the Dalal Street. All major sectors in the green with real estate, auto and FMCG in good shape. Rupee hits a fresh record low of closing at around close to 96.40 against the US dollar. Pressure building fast for the Indian currency with oil above $110 per barrel and rising West Asia tension hitting sentiments. Triple clearance for Adani Group in the US. Justice Department has dropped all charges against Gautam and Sagar Adani, closing the New York fraud case after prosecutors said the allegation could not be sustained. Shares of oil marketing companies rise after enacting measures to shield against mounting losses. Petrol and diesel prices were increased by nearly 0.9 rupees per litre, the second increase in less than a week. Now remember, prices were hiked by 3 rupees per litre on Friday. Good afternoon, you're watching Markets at Noon with me, Somit Sarkar. This is the show where we get you updates on the top buzzers and the news update at the noon. But first thing, when you look at the market, it's the second straight day where we are seeing some kind of gains. Not much, but again, 100 odd points of gain that we are seeing in the market. The Nifty is steadily above the 23,700 level, which is a crucial support now for the benchmark index. So we need to watch out for the 23,700 level. If you look at the sectoral indices, the Nifty Private Bank Index, which was among the top gainer or which was leading the charge yesterday in trade, is now the only sectoral index which is down in trade, down around 0.2 odd percent. While on the gaining side, it's Nifty IT, Nifty Realty and Nifty Auto, which have been up anywhere between 1 to 3.5%. Even a good day when it comes to the Nifty mid cap and small cap. Both the indices are outperforming the benchmark, up anywhere around 1.5% in trade. If you look at the top F&O names, among the top gainers, we have Coforge, Angel One. In fact, a good day for all the capital market stocks. Angel One, BAC, all are gaining in trade. Apart from that, Coforge, Persistent, Lodha, LTM and Jubilant Footwork up anywhere between 4 to 6.5% in trade. Apart from that, PB Fintech, Walters are also gaining in trade. On the losing side, we have Astral, which is down around 5%, largely on the back of weak numbers and weak commentary that had come in. Uno Minda down 3% after the fall that we had seen yesterday. The stock was down around 4%. Today it's down 3% in trade. Gale India is down 2%, while Avenue Supermarts and Coal India down anywhere between 1.5 to 2 odd percent in trade. Moving on. Okay, the important topic, the important discussion topic right now is that fuel prices. Now the fuel prices have already surged nearly 4 rupees in the last 4 days, and can there be more hikes that can come in? What could be the impact of the same on the economy? To discuss all this, we are now joined by MK Surana, the former CMD of HPCL, and Gaurav Sen Gupta, the chief economist with IDFC First Bank. Firstly, coming to you, Mr. Surana, 4 rupees price hike in the last session. Most likely 30% of the losses that oil marketing companies were seeing will be recouped. Do you expect more price hikes to come in?
Good afternoon, and thanks for inviting me to your channel. Actually, we can probably see 2-3 indicators from that. First part is that just because there are 2 price hikes within a week, it means that government is willing to bite the bullet. That is one. Second, the very fact that the price hikes are lesser than what was anticipated, it means that the government is still following a calibrated approach, and it is trying to protect the consumer as far as possible and as long as possible. Now, the third part is that whether this 90 paisa is good enough. The question is that if you see the last price hike, at that time, the crude price was around $107 and the exchange rate was around 95.1 or so. Today, the crude price is around 111 and the exchange rate is around 96.5 or so. It means that the 90 paisa will be lesser than what would have been required for the increase in the crude price and the exchange rate in last 4-5 days itself. So I think government is still following a calibrated approach and keeping its options open as the West Asia conflict develops.
Okay. Last time, Mr. Surana, I remember in 2022, when the Russia-Ukraine war had started, the government had, oil marketing companies had taken a 10 rupees price hike over a period of 14 to 16 days, I believe. Do you expect similar move to come and give, because the situation is the same? Rupee might be on the higher side, but crude is at the same level, I believe.
No, it depends on how the government basically depends on how long it continues and what is our anticipation of the drop in the crude prices and the exchange rate after some visibility is there on the conflict resolution. Because government will always have a choice to get the marketing companies recoup these under recoveries over a period of time after the West Asia conflict gets resolved. But the problem is, in this case, it is almost now 76, 77 days. Every time people thought that the problem is getting solved, it was not getting solved, and the problem was getting bigger and bigger. And so the options of government were getting limited. So I think it is a daily developing situation where, depending on the news flows, the perception of the oil market on the crude prices is varying. And there is also a difference between the paper market or the future market and the current physical market. And that is also changing depending on what the market is factoring in. So I think it is a developing story and we need to keep on watching it.
Okay. Gaurav, getting you also into the conversation. 4 rupees price hike in the last 4 days is what we have seen. What would be the impact on the economy of the same? By how much do you expect the inflation to bump up in May?
So May for now is tracking at around 3.9, almost 4%. We have built in the 4 rupees hike. The 4 rupees hike will actually be spread out. The impact will be visible in May as well as in June. But we do expect more hikes to come. So the month of May could actually cross 4% if we have secondary pass-through, or because of producers are also facing higher input cost pressures. But we feel the secondary pass-through will take some more time as producers have inventory. So as those inventories draw down, you'll see some more pickup in secondary pass-through to the consumer. Our expectation is for the year, the total price hike by the government could be around 10 rupees per litre for petrol and diesel. Now, compared to your earlier question of Russia or Ukraine, the government had also increased the prices to a similar extent, but then they had given an excise duty cut afterwards. So the effective price hike during Russia-Ukraine in growth rate terms, after you take the excise duty cut, was actually only around 3%. This time, this particular shock is much bigger than the Russia-Ukraine, though I agree with you in level terms, the crude oil price is same, but it is the delta. Last year, crude oil prices are averaging around 70. From 70, it has gone to more than $100 per barrel. So that is why we expect at least cumulatively, including the 4 rupees per litre currently, you should see cumulative increase of around 10 rupees per litre. We expect inflation for the year to average around 4.9, which incorporates not just the fuel price hike, and this will be not just limited to petrol, diesel, but other LPG, kerosene. But we also expect, let's say, food inflation, because this is an El Nino year. So the 4.9 estimate for headline CPI for FY27 bakes that in.
Okay, but the 10 rupees price hike that you're expecting or you're building in, I missed that part. For over what time period are you expecting that to happen?
Over the next couple of months, so the cumulative hike in FY27, we have assumed will be around 10 rupees per litre.
And this is assuming that the situation does not normalize.
No, the situation should normalize. It's a very extreme situation to persist. The US itself, you've got the midterms that are coming in November. It is in the it's in the interest of the government of the US also to resolve the issue as soon as possible. So the expectation is that crude oil prices, the Indian crude basket, should average around $90 per barrel in FY27, which assumes in the second half you do see a gradual reduction in crude oil prices. The issue with this shock is that you have the fact that production facilities in GCC countries have been impacted. So it'll take some time for them to restart production. So even if the war ends now, what will happen is it'll take at least 3 to 6 months for GCC countries to ramp up their production. We don't know the extent of the damage to the production facilities. Moreover, globally, if you see the crude oil inventory levels, OECD countries, they've already declined sharply. So whenever things resume, what you will see, there'll be a pickup in demand for petroleum products because countries will restock strategic reserves. Plus, they'll have to make up for the fact that for at least more than 2 months, they've not been able to meet their normal fuel import requirements. For example, if you look at the case of India. So what you will see that even if the situation resolves, it'll take time for the prices to actually stabilize. So we expect Indian crude basket to average around $90 per barrel by FY27.
Mr. Surana, do you concur with Gaura's view that even if the war stops, crude prices will continue to remain high and oil marketing companies will have to charge a higher fuel price rate to recoup the losses that they've seen?
More factors than what Gaurav has mentioned we need to keep in mind. The first part is there is substantial release from the strategic reserves and by IEA during this period. And so there will be a pressure to fill it up. That is one which will try to push the prices up. But the second thing is there is also a lot of inventory in the Middle East countries which is not able to come out and they have to restrict their production because of that. And so they will, once the war gets concluded, they will try to push that out in the market. So it will be a balance of the two which will decide the oil prices at that time. But the second point is that the SPR fill up the countries will not rush to do it immediately when the prices are so high. So I would assume that immediately when there is a news of a sustainable solution on West Asia conflict, we may see a bit of a drop in the crude prices, and then it will stabilize depending on what is the rush on the part of the countries to fill up their SPRs, what is the pressure on the Middle East countries to push out the inventories which they are filled up with. And third thing is whether there is any demand destruction over a period of time because of a larger impact on the economy. But we can safely say that it will take some time to normalize the situation even after a visible and sustainable solution is reached to West Asia conflict.
Okay. Gaura, coming to you, what do you expect the RBI to do? Higher current account deficit, weaker rupee, higher inflation? Will RBI take a move to increase rates? Do you expect that?
I think rate hikes will be the last resort. The first form will be fiscal policy, which is trying to ensure that this price shock to inflation and the consumer is protected as much as possible. The second set of measures, if for now inflation is still below the 4% target, it'll take some time for inflation. It will, let's say, cross 4%, if not in May, in June, and then gradually inch up. The near-term policy focus will be, fiscal policy focus will be on ensuring the price shock is well contained. Monetary policy focus should be that credit flow is maintained to at-risk sectors such as exports, MSMEs, etc. But price hikes, which will basically you're trying to solve a supply side shock via demand compression, should be the last resort. In the interim, these sort of fuel price hikes are also useful because they will cause the consumption demand to come down a bit. So, you'll have some balancing between demand as well as the lack of availability of supply. But I would say Rate hikes would be on the table only when inflation crosses the 6% barrier, only when you see the fact that non-fuel items are also beginning to rise. Then, or generalized price pressures, then only monetary policy comes into play. And right now there's a lot of uncertainty. For example, if there is a deal between US and Iran, then this becomes that classical short-term issue. But if it's a prolonged situation, which it looks likely with the fact that the Strait of Hormuz is still not opened up, then yes, towards the end of the year, you can't really rule out rate hikes, because if in the end, if all the supply side measures, let's say from the fiscal side, does not work, then RBI will have no choice. For now, the near-term expectation is that RBI, at least for the next few policies, should stay on pause.
Okay, the 6% limit that you have maintained, I'm assuming that in your assumptions as well, you have factored in the 10 rupees price hike. Just one question from you. The RBI meet is soon. How much of a dividend are you expecting to RBI to give to the government?
So our expectation is a 2.7 trillion dividend, but this assumes that the risk buffer is maintained at 7.5. So last year, the RBI had increased the risk buffer to 7.5, which is the upper level. The lower range is around 4.5. So suppose if they reduce the risk buffer to 6.5, not a 7.5, then the dividend can be higher at, let's say, 3.5 trillion. So if they keep the risk buffer unchanged at 7.5, then the dividend is 2.7. If they reduce the risk buffer, then it can go as high as 3.5 trillion rupees.
Well, thank you, Gaura. Thank you, Mr. Surana. Thank you for joining us and giving us your perspectives on multiple factors: crude, fuel price hike, and the impact on the economy. Well, that was Mr. Surana and Gaura to give us all this impact. Well, markets continue to remain where they were at the start of the show. Not much of a movement is something that we are seeing. Astral is down around 6% in trade on the back of weak numbers. Avenue Supermart, GAIL, Kotak Mahindra Bank, Coal India, Ultratech down anywhere between 1.2 to 1.5% in trade. On the gainer side, we have on the gainer side, we have Coforge. Now, today, CLSA had come out with a positive note where the target on Coforge was around 2,000 rupees, and that could be also one of the reason, along with the movement that we are seeing in IT stocks, that could be one of the reason why Coforge is one of the top gainers, up around 7% in trade. But speaking of brokerages, Jefferies has maintained a buy rating on Adani Power. Sharad is joining us with more details on what's the rationale and what's the target price. Well, yes, Hiral, largely Jefferies has maintained buy rating and the target price is set at 255 rupees per share. Now, interestingly, they have stated that the company will turn free cash flow positive by FY 2030. Also, the India's sizable private sector pure play, it's a company especially on the thermal power generation, and we have seen a lot of interest and up move coming in the power related stocks over the last 2 to 3 odd months. Now, the company itself is expanding its capacity by almost 1.7 times to 31 gigawatt by FY30 on a comfortable balance sheet. Also, the broking house has stated that the risk profile right now is diminishing for Adani Power as lower merchant share as the capacity is being unlocked with profitable PPAs. These are the power purchase agreements to be precise, and they believe a 23% EBITDA CAGR over the next 4 years should see the company generating almost 15,500 crore worth of free cash flows. Well, CMAC has posted a strong quarter with margins expanding on higher vessel deployment. Growth is largely driven by the CMAC 3 on a lump sum contract along with improved performance of subsidiaries. Additional boost comes in from revamp of work. Okay, a good set of numbers is what CMAC has reported. Navin Mohta, the whole-time director and president operations, along with Sunil Gupta, the VP strategy and IR, is joining us on the show. Firstly, to start off with, sir, a good set of numbers in the fourth quarter of FY26. What can we expect in FY27? What is the kind of growth that the company is internally penciling in?
Yeah, good afternoon, everyone. So, on the number what you have seen, we are now looking to achieve another set of good number next year. We are looking at a growth of around 15 to 20% from here.
So 15 to 20% is the top line growth. Anything on the margin front and the bottom line?
Similar kind of expansion we are also looking at. The absolute number, but there will be some 100 basis point or 200 basis point growth in the margin also. We can look into that.
Okay. Can you also give us some idea in the fourth quarter? Was there any one-offs that aided, or what were the factors that actually led to this strong performance?
So, third quarter and fourth quarter are historically our strong quarter where we deliver the good set of numbers. And this time all the vessels are working and we have been able to deploy these vessels on quite efficiently. So altogether, everything firing on the altogether has led to this good numbers.
Okay. I believe in the fourth quarter, in one of the business updates, you did mention that ONGC has extended the CIMAC 2 contract till August 2026. So was it done at a higher rate or are you expecting any rate revisions now in FY27?
No, so this extension is at the same old rate only, but we are expecting now that new tender will come up. So we will look to get the number higher from the existing contract.
Okay. And when it comes to CIMAC Agastya and CIMAC Anand, I believe you were supposed to do a deployment of both these in the first quarter of FY27. Any updates on that front?
So Agastya is already deployed. We took the delivery of this vessel last year in July, and it is already working from the fourth quarter of this year. Ananta, we are looking to acquire sometime in the next quarter, and from there on also this will start working.
And post-deployment, I believe the rates at which this will be deployed will be higher. And what could be the incremental revenue that could come in?
So as I told you, individually I will not be able to tell you how much it is going to contribute. But overall, as I told you, we are looking at another 15 to 20% increase on year-on-year basis.
Well, thank you, sir. Thank you for joining us and giving us the way forward for CIMAC. So 15 to 20% growth is what the company is eyeing for FY27, and one ship is already deployed, and the other one will be deployed very soon. From CIMAC, moving on to Wonderla Holidays, again a strong set of numbers is what the company has reported in the first quarter of FY27. Let's get in the management. Arun, Executive Chairman and Managing Director of Wonderla Holiday. Arun, to start off with, a strong revenue growth is something that we have seen in the fourth quarter of FY26, but margins have come in a bit weak. Could you decode or could you explain to us why this weakness in the margin front?
Thanks for having me on the show. As you know, it has been a excellent quarter for us. We have grown our revenues by almost 30% for the quarter. And it's mainly because of our new park, which we have opened in Chennai. And it's contributed handsomely to our revenues. The margins are under pressure because I think of depreciation costs and increase in costs of goods sold. These are the two heads under which margins have depreciated. Also, because of marketing expenses for the new park. These are the three reasons.
Chennai park, I believe you're talking about. When do you expect that to stabilize, and what is the kind of growth that you're penciling in for FY27?
So we can expect good growth in FY27 because our new park will contribute handsomely to the bottom line and top line and bottom line. So we are expecting good revenue growth this year, mainly aided by Chennai. Our profitability also should improve for this financial year. The only caveat here is prices going up because of the West Asia conflict, etc. Now we don't know what impact it will have on us yet. But as of now, we are expecting a good set of numbers for this year.
Okay. The new park, what has been the initial response? And I asked you, by when do you expect that to stabilize, sir?
So the new park is already, at an EBITDA level, it's positive, and we are expecting that to continue. And for it to be a full-fledged revenue generator, it will take 3 to 4 years. But we are expecting between 7 and 8 lakh footfalls in the first this year itself.
Decline in footfalls when it comes to the Hyderabad park. Any specific reason behind that?
I think Hyderabad had too many untoward weather incidents, and some of the group footfalls were also impacted as a result of that, and that's led to footfall decline.
Okay. The resort that you had started, it is seeing a good growth, 84% growth, I believe, on a YY basis. How has been the occupancy level here? How much do you expect that to increase in FY27? Any guidance on that front?
So the reason why resort has performed so well is we have a new resort that has opened in Bangalore. So that has contributed to the revenue growth. Also, we have refurbished our existing resort as well. So these two factors have contributed to this huge revenue growth. We can expect revenue growth to continue this financial year as well. Maybe not at the highest level, but we can expect good revenue growth coming for this financial year as well.
Okay, you did mention about the cost increasing because of the West Asia crisis, and you have already taken a price hike. Do you foresee taking any more price hikes going forward?
As of now, we are not taking any further price hikes. We have already increased prices by 3 to 4% in the beginning of the year. But we will be monitoring the situation closely, and then we'll take a call according to what the situation demands.
Okay, and one question on the ARPU front, 5% growth, largely led by non-ticketing revenue. That trend will continue, and do you expect ARPU levels to sustain at current levels?
Yes, I think we should be able to maintain ARPU levels at current levels. We are expecting ARPU to grow by between 5 and 10% for this financial year.
Okay, and any plans of opening new parks, say, over the next 4 to 5 years? What's the broader plan here?
We will definitely be opening new parks going forward. We are working on a few projects, mostly on the western part of the country and the central and northern part of the country. We will announce when the plans are ready. We will be focusing on large format parks and other smaller format parks also. We can expect maybe 2 to 3 parks to come on stream within 5 years.
Well, thank you, sir. Thank you for joining us and giving us the way forward for Wonderla Holidays. Well, that was the management planning to open 2 to 3 new parks over the next 4 to 5 years, expecting their ARPU to remain at current levels and also seeing some impact on the cost side because of the West Asia crisis. Well, that's all that we had on the show today. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the NDTV Profit Market Pit with all the action in the markets today. Sharad, good afternoon. An interesting day of trade. We've seen good recovery. That short covering is something which has continued. But what's interesting to see right now is the Indian rupee. Yet another record low is what you're seeing. 96.40 is what you're tracking in terms of the dollar-rupee pair. If you pull up that one on the screens, you'll see that weakness that has continued in today's session as well. So that is something which is concerning the street overall in trade today. But that's with regards to the Indian rupee. Let's pull up Nifty 50 and then Sharad will take us through everything that's happening in terms of the markets, because an interesting take, Sharad, I got from Kush Bora today, that the setup with regards to Bank Nifty is looking slightly stronger as compared to Nifty 50. If you have to look at a weekly one, what are you picking up?
Well, that's right. Good afternoon, Hiral. And largely remember, there is a Nifty expiry at play as well. So there will be volatility. So you see, throughout the day, there has been a range-bound move happening, a kind of a recovery attempt being made. Remember, there was a gap-up opening as well. Nifty Bank, let's see how the technical setup is looking like. And Nifty Bank, you see over here, there is a recovery at play as well. But still, if you could see, it's still a range-bound move happening. The markets are looking for some trigger, be it a domestic trigger or an international trigger, because right now we are thinking that we would be in a consolidation zone. It's a volatile day, definitely, but nevertheless, remember, Nifty expiry is also at play, especially in the last 90 minutes of trade. You can expect some volatility, and this is the case I'm talking about. They are still in a range bound, so market needs a trigger. Apart from that, let's see what else should be in your focus. And largely strong buying coming in from the IT segment for the second straight day. Good positions in the mid-cap IT, and now realty also buying is there. Remember, all the sectoral are seeing a strong growth and all are in the green. Value buying still back in the small and mid-cap space, and that's a good reason. Advanced decline ratio is totally in favor of bulls. The rupee has hit its fresh record lows. That's the concern coming in the market, and that is a big overhang as well. Also, this is the numbers to look at when you look at the overall numbers right now, and the yields because of that are remaining elevated, be it global yields or even domestic yields. So that's a big concern for the markets. And of course, the geopolitical stress still continues, and going ahead, there is still uncertainty. Apart from this, of course, let's get back to earnings. And that is where we will be focusing on. The Q4 earnings is still going on. BPCL, BEL and Z Entertainment. These are the three earnings we are tracking today, and most of them are doing well in trade. So definitely we'll be looking at these important stocks. Over to you, Hiral.
So, okay, a couple of counters that we should be watching out for in trade today, as Sharad mentioned on the back of earnings. But let's quickly look at the watch list. Nifty IT is in focus, and this is because it's gaining for a second consecutive session. Your mid cap to large cap, all of them doing pretty well in trade. TD Power is buzzing on the back of volumes. Astral reacting to numbers, Ola reacting to numbers, along with the IGL. You have Brainbees, again, it's a volume buzzer there. Divi's Laboratories, Novartis may shift orders from China, and Divis will be impacted. Spark, again, growth has been led by a one-time income, and that stock is reacting on numbers, along with the CMEC, which has reported a strong set of Q4 numbers. Adani Group of companies, the legal cloud has been lifted now, and that's the reason why you're seeing that ray of positivity in terms of stocks as well. So that's with regards to where the watch list goes. But moving on, one stock that is in focus is Apollo Microsystems. Let's pull up that one on the screens. It's a strong surge that we've seen. The stock's seeing gains of nearly 12.5% in trade today. We have the management, Adapalli Krishna Sai Kumar, whole-time Director Operations at Apollo Microsystems, joining in. Welcome to the show, Mr. Kumar. Always a pleasure to speak to you as well. Clearly, if you have to talk about Q4 or even FY26 as a whole, you've exceeded the PAT margin annual guidance. The execution with regards to where the existing order book is concerned has improved, and there is a better conversion rate that we are seeing in terms of defense orders as well, and an all-time high order book. You've entered FY27 on a very strong footing. If you have to take cues from here, what is the story you're going to tell all our investors for FY27?
Deliverable story, actually. The momentum of a defense industry per se is, as catching up pretty fast, much, much faster. We have seen, a lot of turbulences in this industry for the last several decades. Now the track and the momentum with which the industry is picking up, so would be our company, being one of the oldest, longest, player in this ecosystem.
Okay, so taking cues, what's the growth that you're looking at in terms of FY27? Are you seeing normalization, or do you think something like this could continue for the coming quarters as well?
I would not comment on the quarters, but on annual basis, I will continue to show a seriously good growth and momentum, as we have been showing in last 4 or 5 years. In the order book as well, the production order book, would also consistently keep growing in next few quarters. Financial year, we should be having a decently, sizable order book, catering to multifold year, execution cycles. So I think, that way, this momentum would definitely continue in the subsequent.
Right. Adapalli sir, good afternoon. This is Sharad here. We are talking about the expansion also which the company is undertaking. Just wanted to understand on the progress on the Andhra Pradesh land which was there, because there's a lot of defense corridors happening in Telangana and Hyderabad and even Andhra Pradesh. So just wanted to understand what's the progress on this.
So we have a upcoming greenfield project which is coming up in Hyderabad, which is a pretty huge expansion. Initially we started with phase 1, now it is spreading up to phase 3. Cumulatively in next 18 to 20 months, you will see a total more than around 5.5 to 6 lakh square feet of full-fledged weapon system manufacturing built up in a pretty larger space actually. So as of now, there's no immediate plans to expand to Andhra Pradesh. Pretty huge investments we have started already doing in Telangana. That is something that we would continue, and we would do a few more investments in our subsidiary company Ideal Explosives, which is based in Orissa, Rourkela. So these are the current plans, but as something, keeps, evolving, new markets are there, different states have started expanding in different things, we will see in time as the time should tell. As of now, there's no immediate plans for Andhra Pradesh.
Okay. Mr. Kumar, the other question I have for you is overall in terms of the growth. 45 to 50% 2-year growth guidance was something that was entirely expected to be driven by the core business. Now, with the kind of acquisitions that you've made or the new weapons integration unit that we can talk about, how much of your incremental revenue or capacity contributions are modeled in for FY27 that will come in from these?
So as far as the new expansion as far as the infra is concerned, if that's the question, I think that is something which is catering for the momentous growth of 45-50%, which I've earlier given a guidance. Although this last financial year we have made a small dip, but that's something that we are going to bounce back and compensate in this financial year. But the growth momentum and the guidance that we have given earlier, the new expansions would definitely cater for it actually.
Okay. And with regards to the capital investments, do you think at any cost that would actually moderate your margin expansion moving into FY27?
Not very significantly, but yes, there will be an improvement in the margin expansion to a certain extent in this financial year. But something little more significant you will get to see in the next financial year for sure.
Okay. And how are you baking in the input cost inflation as well as the competitive bidding factor when it comes to your margin profile from here on? Anything that you would want to add on that?
I don't think any significant impact would be there, obviously, but, there's a small 3 to 4% kind of, dollar fluctuation, it's not going to make any major effect for us, very immediately. But if this trend continues, that is something which gets compensated in the subsequent orders as we would be costing it accordingly.
Okay. Apart from that, overall there has been a stark divergence if we see between the profitability of the company and when you look at the cash flows as well from operations. What are the changes that you're seeing structurally when you talk about the working capital for FY27 so that your profits get converted into actual cash in FY27?
The negative cash flow is something which is common in this industry across amongst all the peer companies, both local, domestic, as well as in the international fray as well. But the percentage of the production orders are steadily increasing, and that's something which will further catch up the pace. As the in the revenue recognition, the production percentage of orders which are executed have increased in this financial year, which has expanded margins in this financial year. This is something a momentum. As the production orders keep expanding, you will see the margin expansion also happening. At the same time, there will be an improvement in the cash flow that you would be seeing in the subsequent quarters.
Okay. And my last question to you is, in the past as well, we've seen a lot of reliance when it comes to equity dilution, specifically when it comes to issuing preferential warrants to fund your working capital. Will your FY27 growth cycle require any further equity dilution, or do you think it can be entirely sustained via internal accruals or debt, number one? And two, promoters have pledged in the past as well. So how are you looking at the roadmap in terms of the fund part of it?
So the current order book and the upcoming orders that we are having, the existing working capital and the funds that we have and the debt levels, that's something that would suffice. If some small dilution that is required towards bringing up a new equity, something that we would be bringing, but significantly there will not be any impact in terms of the dilution of the equity as far as for the specifically for the purpose of working capital per se. That's how I would term as. And regarding the pledge of the promoter, that's constant and steadily it has come down to a certain extent, not significantly, but this is something that we would be coming out in this financial year, which we have earlier told to the investors as well.
Thanks a lot, Adipali sir, for giving your views for Apollo Microsystem and the road ahead. But moving on from one management to another, yes, it's a very busy earnings season. We are having Digitide Solution and we are joined in by Gurmeet Chahal. He's the CEO and AD of the company. Good afternoon, Gurmeet. It's always a pleasure to have you. We'll just talk about the earnings over here. Over here, seems like the earnings have been impacted and the losses widened also. What's the reason for this?
So first of all, good afternoon and thank you for having me. We've reported our earnings today. Let me give you a summary. So our revenue, we are showing a momentum in growth. Our revenues have grown 2.5% sequentially and 9.2% year on year. Our tech and digital revenues have grown 5.8% quarter on quarter and 27% year on year. International revenues have grown 16% year on year. Our EBITDA at 88 crores is mirroring our strong Q3 performance despite fully absorbing a wage code compliance in Q4, which attests the absorptive capacity of our operating model.
Mr. Chahal, good afternoon. This is Hiral on this side. My question to you is, overall, if you have to look at AI as a shift that's happening in the industry right now, what is the way forward for you or a company like yours in India to make that transformation to an AI-driven company completely? And how were you looking at execution at that end?
Thank you, Hiral. Great question. First of all, we look at AI as value accretive. And like we have highlighted in the past, we are going all in on AI. To your question on how we are executing on AI, so there are 5 levers or 5 layers of our execution strategy. First and foremost is reskilling. We have reskilled 6,000 of our employees on AI, and as we speak, there are another 4,000 getting reskilled. That's first. The second part is the partnerships. So we have partnerships on one hand with the three hyperscalers, and at the same time, niche AI product companies. Third is how we are building IP and accelerators. So we have built about 15 AI accelerators that are in production. Fourth is how we are reimagining our current platforms by embedding more AI, be it our payroll solution, be it our collection solution. Now, fifth is the proof of this pudding. So as we speak, we are managing
Mr. Chahal, proof of the pudding will be for investors when we see AI monetization happening as well. And you have mentioned in the past that AI will be value accretive. So what is that near-term timeline that you're looking at for translating all of these pilot AI initiatives into measurable top-line revenue growth?
Yeah, so that's what I was coming to, Hiran. So as we speak today, we are managing about 4 million agentic AI transactions for our customers, and we have generated about 0.75 million in sales potential for our customers. Today, we also announced today that we have won a with a global PNC major. We are setting up a AI center of excellence. We call it the dual city model, which is in Bangalore and Coimbatore, to take care of the talent. So it's already happening, and that's why we are exiting the year at a strong 9.2% year-on-year growth. Within that, tech and digital, which is where our AI gets reported, we are showing a surge of 27% year-on-year. So the AI is rapidly moving from pilots into production.
Apart from this, of course, I just wanted to understand amongst your sectors, especially the BPM segment, the revenues were largely, kind of a neutral. You have also given an FY27 outlook also. Just wanted to understand out of these key segments which you have, the tech, digital and the BPM segment, what are the outlook or the guidance looking like? Which of these sectors is likely to do better?
Yeah. So, look, the short answer is both will be doing better. Obviously, the revenue acceleration will be biased towards tech and digital and international because those are the higher margin, and that's also our investment thesis. Having said that, when you look at the current year's BPM, you have to look at it from two dimensions, domestic and international. Our international business, BPM business grew. Our domestic BPM business, we took a conscious decision to actually prune some of the margin, lower margin contracts. In fact, we actually exited 2 contracts in Q3 and Q4. But going forward, we will continue to focus on BPM with a bias towards international BPM. When in domestic, only profitable accounts we want to pursue and grow. And actually, if you see, that is, if you look at the wins that we have announced in the last 2 quarters, we've had 2 back-to-back quarters of 600 plus crores of bookings, so which is going to translate into revenue. That's why we have given a double-digit revenue guidance for FY27 along with a 100 basis point margin expansion.
Amongst your BFSI clients, how the overall demand trends is looking. Some of the peers did mention that the pressure is bottoming out. Is it the same case for your company?
So we are definitely seeing activity renewal in the BFSI segment, both in India and in US. And as we know, BFSI traditionally is the segment that adopts new technology fast. So a lot of AI projects and AI initiatives that we are talking of are happening across BFSI. So both banking, financial services and insurance. And I gave one example of a large deal that we just announced.
All right, Gurmeet sir, it's always a pleasure to have you and best of luck for the future as well. That's the
Thank you.
management.
Thank you so much. The pleasure was all mine. Thank you.
Yes, now let's move on to our segment, the rapid fire segment, and we are joined in by Kunal Rambia. Kunal, it's always a pleasure to have you with us, and let's start this segment of rapid fire. I want to talk about IT stocks. For the last two trading sessions, a good positional build-up is happening. Do you think this IT stocks will show a good momentum, and especially in the mid-cap IT space? I want your view.
Good afternoon. So yes, absolutely. IT stocks are showing very good comeback from the extreme support level of last 10 to 15 years. If you look at Infi, TCS, these counters are doing good. Coforge is doing good. But at the same time, as you mentioned, mid-cap IT is really performing well. But it's the first uptick with the good volume from the extreme low levels. We'll have to wait for the higher top, higher bottom formation technically for this trend to confirm the uptrend. But yes, extremely favorable risk-reward ratio if someone wants to go positional on the entire sector.
Right, a little bit of profit booking at play when it comes to TD Power. Last week we saw the up move and now profit booking coming in. Good time to enter here, or do you think there's a little bit of more selling left?
See, again, this counter has rallied from almost 600 to 1300, and this is clearly making higher top, higher bottom. But the exceptional observation here is that a day before yesterday, there was a massive volume right at the peak level. So I would wait for this counter to come down a little more, say near to 1000 to 1050 kind of levels. I think that can offer a good favorable risk reward ratio also, and one can think of buying at that level.
Right, and Kunal, your views on Astral, post earnings impact we are seeing in the stock, important levels to watch out for?
See, this counter has not done much. Astral was in a mild uptrend from 2025 till now, but it's losing its momentum. So unless this counter comes near 1200 to 1250, I would avoid this counter. If someone is already holding, I think advisable to switch from this sector to probably IT, where the better opportunities are available right now.
So the better opportunities are in the IT segment. Interesting. What about CIMEC? Stock has been buzzing on back of corporate developments happening, and of course remember, just a caveat to the viewers that the volumes at times in this counter is on the lower side. But if you had to make a trade, Kunal, will there be any positive alpha trade coming in for this stock?
No, it's a clear avoid as of now. July 2024, the counter was trading near 1600, and right now it's seeing some kind of selling pressure right near those 1600 levels itself. So the previous high might act as a resistance. We'll have to be cautious at this level, but by any chance, if we see a weekly closing above 1600, it might be a thumbs up.
Right, and of course one of the biggest news flows of the day, the legal cloud has been lifted from Adani group of stocks. Kunal, just wanted to understand which would be your specific pick from Adani group if you had to talk about it, and especially on a positional front I'm talking.
Absolutely. So two counters which I like the most. First is Adani Enterprise and the second is Adani Green. Now again, one needs to just keep in mind that before this announcement, the counters have already rallied significantly. Adani Enterprise rallied from 1800 to as high as 2700 in just span of 2.5 months, 1.5 month time in fact. So yes, a bit of consolidation with a mild correction can be a good buying opportunity. Adani Enterprise looks good to me with that positional target of 3200. And the second is Adani Green, which looks good to me with the positional target of at least 1650 to 1700. These are the two counters to watch out in the entire pack.
Right, so that's the end of the rapid fire and the standard disclosure as well. But moving on, there's an interesting segment which Hiral gets for us, and that is the Google trending stocks. Hiral, what makes it to your list?
Let's pull up. More than me, it's Google who starts picking up all of these counters in terms of the list that they have. Amber Enterprises, that is interesting. IOC again on earnings. Bharat Forge, Tech Mahindra, HCL Info. So it's a very different name that you're picking up right now. But overall, if you have to look at all of these counters, Amber Enterprises has been in the news since quite some time. Apart from that, if you have to look at Bharat Forge, I think this is the second consecutive day we are seeing that one. Kunal, anything on the charts?
So for the Amber Enterprise, I think more or less sideways consolidation still continues since 1.5 year. The support is placed at around 5,800 and the resistance is at around 8,000 levels. So it's within that consolidation zone and decline from the peak level itself. So it's an avoid for now. And as far as I think the Bharat Forge is concerned, that looks okay to me. The only reason being the counter is in uptrend, but the risk reward ratio for the fresh entry is not really favorable. One can think of accumulating this counter near 1800 with the stop of I think 1750 to 1765.
Right, so these are the stocks which is in focus, but earlier we had discussed about the IT stocks. Just look at it, one side IT stocks and the other side the entire markets, and that's one of the sectors which are doing really well for second straight day. But why is it happening? ऐसा क्यों हो रहा है? IT stocks क्यों चल रहा है? Jasmeet is here to give us entire details.
Well, Sharad, thank you for that. Now, if you look at the IT as a pack, it has been buzzing in trade on the back of that positive NVIDIA result expected coming up tomorrow in trade. Now, in terms of the overall NVIDIA earnings, the brokers have been bullish that the company might really boost a strong profit growth, which indeed means the demand for AI infrastructure. While if there's a demand for AI infrastructure, that would lead to the demand for even the service provider companies. And that's why where the IT companies come in play, and that's the reason they're buzzing in today's trade, showing a positive upward momentum. While the second reason is also on the rupee depreciation. We do know that rupee is touched the record low again few minutes back at 96.4 odd rupee. So more the rupee falls, it's a good thing for Indian IT companies given they earn money in the dollar terms and they'll be having higher conversion rates. While thirdly is a valuation. The valuations are very attractive at this point in time given that a multi-year low. Current valuations of large IT firms are down nearly to August 2020 levels, which is roughly a 6-year level low, which makes them attractive at this point in time. Now when you look at the buy rating return potential for top 3 large cap IT firms, the return potential for next 1 year is between 20 to 25%, so showing a good momentum for next 1 year. Now we're talking about the mid-cap space as well. Well, mid-caps were quite attractive 6 months down the line, but compared to large caps right now, the large caps have higher return potential compared to mid-caps, and that's why we see a lot of large caps buzzing in today's trade.
Thanks a lot, Jasmeet, for that. Interesting IT space doing well in trade. But apart from that, just an interesting stock, BSC. That stock is also doing well. Just a quick technical check from Kunal on this counter. Okay, Kunal is not there.
Sharad, BSE, I know it's very interesting to see the kind of gains that are coming in on that one, 3.5% upside there. Let's just see if any capital market stocks are also buzzing, and we'll do a detailed discussion on that. But Divi's Laboratories is another one which is in focus, where Novartis has terminated the plant contract with Chinese CDMO Poten, and cross-border partnerships have turned into regulatory-led dispute. Now, these regulatory issues have been found in production facility B30 plant, and Poten has paused investments and the construction as well. Now, Novartis viewed this as a contract breach. Basis the current situation, if you have to talk about Divi's, because Divi's is a trusted supplier to Novartis, relationship is also strong. Novartis may shift orders from away from China due to this dispute, and this can lead to incremental business opportunity for Divi's Laboratories, because they do have spare capacity at their Unit 3 and they can take additional volumes as well. The impact will be positive but gradual, and you may not see a sudden big jump that could come in terms of your revenues as well. But still, that stock seeing marginal gains of nearly 1.2% in trade as we speak. But completely out of time with that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world.
Benchmarks are holding firm. Nifty above 23,700. Sensex up over 300 points, with across the board buying. IT stocks lead the charge, signaling a risk-on mood returning to Dalal Street. All major sectors in the green, with realty, auto and FMCG in good shape. Meanwhile, triple clearance for Adani Group in the US. Justice Department has dropped all charges against Gautam and Sagar Adani, closing the New York fraud case after prosecutors said that the allegations could not be sustained. And shares of OMCs rise after enacting measures to shield against mounting losses. Petrol and diesel prices were increased by 90 paise per litre, the second increase in less than a week. Remember, prices were hiked by 3 rupees a litre on Friday. Good afternoon, you're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets right now, and it's looking like a decent shape right now. When you talk about the benchmarks, you do have the broader markets that are outperforming the benchmarks by quite a bit, but when you talk about Nifty as well, about a nearly 80 point uptick coming in. Sensex as well, about 257 points higher as we speak. And when you talk about broader markets, they're in better shape than benchmarks right now as we speak. So mid cap about 1.2% gains coming in. Even when you talk about small cap as well, you're looking at 1.5% odd uptick coming in. But let's also quickly take a look at the sectoral picture, and that is very sharply tilted in the favor of green. In fact, green is all you have on the sectoral picture there, because it's IT that's leading the gains, with nearly a 3.5% uptick coming in. In terms of major sectors, at least, there's green that you're seeing, barring one sector that is in the red right now. So realty, auto, PSU banks, pharma, FMCG, all of those sectors doing quite well for themselves. But with that in mind, let's quickly take a look at some of those gainers and losers from within the Nifty 50 complex and outside of that as well. So something like a Blue Jet Healthcare is buzzing away in trade, Triveni Turbine, all of those counters are doing well for themselves from outside the Nifty universe. But when you talk about Nifty 50 as well, Infosys, Tech Mahindra, Tata Motors, PV, HCL Tech, Eternal and TCS. So no surprises that you're seeing IT as some of the top gainers here as well. So up about 2 to 4%, that's IT for you right now. But when you talk about the top losers as well, Kotak Bank, Bharti Airtel, Ultratech Cement, Coal India, as well as Tata Consumer and Titan Company down anywhere between almost 2% to about 2% thereabouts. So that's the kind of setup that you're seeing. But with that in mind, let's quickly take a look at the entire complex for oil as well as gold. Firstly, let's talk about gold prices. And you've seen a little bit of decline really coming in. This is despite the heightened geopolitical uncertainty right now. And you're seeing a really different trend really emerging in terms of the safe haven demand not really being in the mix right now. So what you're seeing is that the stronger dollar seems to be weighing a tad bit on gold prices. What else is, sort of having a little bit of a pressure is that you do have the risk premium for gold that is unwinding just a little bit. When you talk about oil prices, you're looking at Gulf allies urging that pause coming in on planned attack. That, in fact, is the word coming in from President Trump as well. And that's the entire reason why you're seeing that war premium really softening just a little bit. So Brent is retreating close to $110 a barrel after some of those recent gains that you've seen coming in. Strait of Hormuz concerns had lifted prices, and that seems to be something that the market is momentarily looking away from. But with elevated prices, because you're looking at $110 a barrel, really being there and being maintained as the current level right now. So in fact, let's also get you some more insights in terms of whether or not you can be penciling in elevated crude prices going forward as well. Dinesh Somani, founder, Pro IntelliTrade Services, joining us on the show right now. Mr. Somani, thank you so much for taking time out and joining us this afternoon. First things first, it's a very interesting setup that you're looking at and a lot of interesting headlines when you talk about oil prices. What do you expect going forward? Do you think that this $110 a barrel level for Brent, do you think it's going to be defended going forward?
Good afternoon, and I definitely think because the way things are going up, there is no peace talk, there is nothing happening on the geopolitical front. The warlike situations are escalating, geopolitical tensions are rising, and there is no concrete solution as to where the Strait of Hormuz would open or not. So I think prices would be elevated for a bit of time. The Brent crude, which is trading around $110, I expect a move up till 11.15. There, prices could pressurize again, and we may see prices close to again $102. So from here, I expect a $5 move from here, probably.
No, absolutely, Mr. Somani, and that makes perfect sense in terms of how you should be looking at prices as well. But let's also quickly take a look at the uncertainty that seems to be prevailing going forward. Some of the damages to oil infrastructure, some would argue that it would take months to years to really fix that. Are you perhaps penciling in higher for longer oil prices? And where do you think the bottom is for oil prices and where do you think the top is?
Definitely, there is a supply disruption, whether the Strait of Hormuz, whether there is an attack on the refineries or everything. The supply disruption is there and it is going to persist for a longer time. That is what I feel. But I think the prices are already elevated. The prices have moved from $65 to $118, $120. So almost all double. So most of the things are factored in as of now. Overall, the highest point which I feel is $120, $122 on the higher front. Downside, I expect $88 to $90. That is what I feel. So upside is $10 from here and downside is $22 from there.
No, absolutely. And even if you talk about the downside, Mr. Somani, it seems to have shifted a little bit to the upper part of the something that we were penciling in previously. The downside seems to have also shifted because of the war by about $10 thereabout. You couldn't be penciling in a downside of $88 a barrel before the war really kicked in. But let's also talk about what's happening with gold as well, because you're seeing quite the interest coming in there as well. Stronger dollar is something that seems to be weighing in yet again. Do you see a continuation of this entire trend? Because previously in the year 2025, de-dollarization was a very important trend that helped gold prices.
Yes, definitely. I mean, if I look at the dollar index, 97.40 is where it is getting support usually, and 100.50 is where its prices are resting. Presently, it is trading around $99. So, I mean, a move towards the $100 would definitely add pressure to the gold prices, which are already under pressure because as of now, geopolitical tensions are not weighing on the prices. On the other hand, they are weighing a pressure on the prices. From the levels of $48, $90, it has already shifted to $44, $80. So almost a decline of 500 rupees recently, $500 recently. So on chart, if I look at the COMEX gold chart, it is definitely under pressure. While on the Indian M6 chart, the prices are elevated, the prices are moving up mostly because of the 9% duty hike and the 7% depreciation of the rupee. That is where the prices are higher in Indian market. But if I look at the COMEX chart, it is definitely under pressure, and I think the pressure would persist for even 2-3 months from here.
No, absolutely. The pressure seems to really be reflecting through even when you take a look at prices, even if it's a cursory glance as well, Mr. Somani. But what I wanted to understand from here on is that given that gold prices have seen a little bit of a pullback also coming in since the war really started, do you think that it's a good time to buy or should you wait for the dust to really settle on this one?
I think it makes sense to settle, to wait on for a lower levels. I'm expecting a level of 42.60, 42.70 on the commerce front. There, I think that prices will be an affordable level, and that would make sense to buy at lower levels. Geopolitical tensions would ease out, prices would settle out. There would be more clarity on the interest rate hike, or whether there would be an interest rate hike, or whether there would be a reduction. So I think let's wait for a clarity. Overall, if I look at the chart structure, I definitely look down to 42.70 levels, the perfect level to buy and accumulate at that level.
No, absolutely, and thank you so much for helping us out in terms of understanding what to do with gold right now, with all of those price levels that you're seeing, and helping us make sense of the headlines that we've seen of late. Thank you so much for taking time out and joining us on the show. With that in mind, let's also talk to you about a super El Nino. Now, what does that mean, and what is that going to be looking like? Is it going to be making it to your dinner table conversation and the receipts that you see every single day? Well, in a short answer, it just might. Let's talk about the International Sugar Organization warning of a potential global sugar deficit in the 2026 to 27 season due to El Nino risks impacting harvests across Asia. But before we speak to G. Chandrasekhar, in terms of some more insight into this one, Sharad joining in with some more details.
Well, yes, Shreyanshi, there is a concern, especially for the Indian sugar players. Why? Because there is an issue of the harvest which can be impacted for the next season because of El Nino. Remember, this season the numbers were pretty strong for the global sugar production, a higher output coming in for both India, Pakistan and Thailand as well. And there's a surplus also. But for the next season, that's where the concern starts coming in. Sentimentally, the impact is negative here because of this harvest. And the idea is that the domestic prices might cool off also. Remember, last week itself, government also announced and they banned sugar exports from most of the countries except North America and Europe until September 2026. And also remember that the global sugar prices, the moment ISO came out with its forecast, started falling. For the last 3 days, global LME prices is down 5%. And from March lows itself, however, because of the rising crude prices and their derivatives, even the sugar prices went up, and because of that we can of course see some interest in ethanol diversion as well. But what's there for the next 3 months, that's important. There's a neutral pricing expectations in the global market, and the precautionary stock building might happen because of the potential disruptions due to the fertilizer shortage, and there might be increased price hedging amongst the importers as well. So this is the entire picture for the global sugar as well as the domestic sugar industry.
No, absolutely, and thank you so much, Sharad, for getting us a check going as far as sugar is concerned. But with that, let's also take a look at this El Nino that I'm talking about. Let's also get you some more insights in terms of this extremely strong El Nino that's expected to develop. It could become the strongest ever recorded, and that's the entire reason why we're talking about it right now. You do have Pacific Ocean warming signals that are emerging early at this point in time, and transition towards the El Nino also happening faster than usual. With all of that said and done, let's quickly take a look at the entire agricultural impact, get you some more insights as promised. G. Chandrasekhar, agriculture economist, is joining us on the show right now. Thank you so much for taking time out and joining us this afternoon, sir. First things first, I wanted to try and understand what you think about the significance of this particular El Nino, because it's not like any other year where you're seeing this El Nino really emerge. It could be the strongest one on record. And what are you penciling in terms of just the significance right now? Sir, I believe you're muted right
yes,
now.
Yeah, done, yeah. Indian economy, Southeast Asian economies are used to El Nino phenomenon. They have faced El Nino phenomenon in the past. Therefore, there is nothing new or special about this current El Nino. This is the first proposition. Second one, people are talking about super El Nino. There is nothing like a super El Nino. Either the El Nino is mild or it is severe. That expression of super, in my view, is an alarmist expression, and I don't believe that there is anything called a super El Nino. The third proposition I want to make is El Nino brings dry conditions. And because it coincides with India's Kharif planting and Kharif harvest between June and September, the Kharif crops face a big risk. And if rain or precipitation were to be lower than normal, there is obviously a risk for production and productivity of these major Kharif crops. But be that as it may, what is important is the India Meteorological Department has forecast by mid-April that this year our rainfall will be 92% of the long period average. They are forecasting deficit rainfall, 92% of the long period average, which is 870 millimeters. But people don't read the fine print. Even when there is the forecast of a normal monsoon, which is 96% of the long period average, there is always a margin of error, 4% plus or 4% minus. the same would apply to this year's forecast of 92% of the long period average. There'll be plus or minus 4%. So therefore, I think we should not read too much into the El Nino forecast, number one. But that does not mean El Nino does not exist. El Nino is looming, number one. Number two, the IMD has very clearly said that by the end of this month, end of May, they will come up with region-wise forecast of rainfall. And therefore, it is not the total quantum of rainfall by the end of September that is important. But what is important is the spatial and temporal distribution of rainfall, which means, is there rainfall across India in all the geographic regions? Is the rainfall well spread out? June, July, August, September? That is a crucial one. And that, therefore, the distribution of rainfall, rather than the total quantum of rainfall, will decide the fate of the Kharif crops.
No, absolutely. It could be a little alarmist in terms of the way that it's being touted as the Super El Nino. But that said and done, the 10% impact perhaps that reports seem to be suggesting on the Kharif crop seems to be quite a worry. So is it just across some of these crops, the likes of paddy and maize, or are you looking at a resultant impact of some of the other agri-commodities as well?
The main point is we have to wait for the region-wise forecast of the India Meteorological Department. Generally, their forecasts have been reasonably correct. Put it that way. I'm not saying they never erred. It is generally reasonably correct. May not be accurate, but reasonably correct. Number one. Therefore, we need to wait till the end of this month because the El Nino parameters are developing currently. They developed the whole of April and they are developing even now. And therefore, by the end of this month, we will have a clear picture. This is the first proposition. Once we have region-wise forecast, then we will know which are the crops that are likely to be affected. What are the major Kharif crops for India? One is paddy, second is coarse grains, third is pulses, fourth is oilseeds, fifth is cotton. And sixth, of course, is sugarcane. Okay, and therefore these are the crops which face the risk of lower precipitation and therefore lower production and lower yields. And this is further compounded by higher prices of fertilizer because of the Strait of Hormuz is a challenge. Natural gas imports are much less, and therefore synthetic fertilizer prices have gone up. That can also add to the farmers' problem. Therefore, there are multiple headwinds that the Indian Kharif crop is going to face. One is the energy-related inflation. Second is the climate-related inflation. And the third one, of course, is the rupee-driven or currency-driven inflation possibility. For I call it inflation driven by 3 C's: currency, climate, and crops. That's it. Yeah.
No, absolutely. And when you take a look at some of the recent El Nino years as well, 2002, 2004, 2009, do you think that any of this impact, it's going to be quite different? Of course, we wait out for the region-wise forecast as well. And there's nothing that can, be as clear as that one. But going by historical trends, are you perhaps expecting, not to be alarmist, but are you perhaps expecting a stronger impact at this point in time? Is that something that you can also be penciling in?
Yes, to be honest, I'm expecting a stronger impact, not merely because our Kharif crops face a decline in production, not merely because of that, but look at energy prices, with crude oil prices that have gone up very substantially, with the rupee depreciated substantially, 96 to $1. And therefore, all these are going to combine the climate, currency, and crude oil. These are going to combine to create a very risky, a rather highly inflationary situation as far as our country is concerned. But we need to know how to manage the risk. Risk management is extremely important, and I'm sure that the government of India is working, say, on contingency plan. What if a certain region gets much less rainfall? What should be done? I would actually recommend that the government should prepare a district-wise contingency plan, and which means there are 700 districts. Therefore, there will have to be as many plans for each district, and that is what is important. Number one. Number two, input availability, input management. The farmers have to be advised about the use of inputs, seeds, fertilizers, agrochemicals, etc. Adequate bank credit should be made available to the farmers, and which is where farmer education becomes important, which is where the role of agriculture universities and the Krishi Vigyan Kendras become important. They need to educate farmers about proper scientific agriculture practices in the event of lower precipitation.
No, absolutely, and there's a need for all of those measures to really be implemented, because it's a concern across a whole host of districts, across, a lot of states as well. Thank you so much for taking time out and joining us this afternoon in terms of the impact that you're penciling in right now. With that said and done, let's also move on and talk to you about Hind Copper, that saw a strong quarter coming in the fourth quarter, driven by higher copper prices, but also operational growth. FY26 copper ore production also rose, with sales of copper metal in concentrate being highest in the last 5 years as well. Let's go across and listen in to a slice of our conversation with the chairman and managing director of the company.
How sustainable is this going to be from here on, or even you're baking in some normalization for the coming quarters now?
Ma'am, thank you for that beautiful words for Hindustan Copper. The one thing is that the team SCL has done, this is a historic results. I'll just add to that, it is a historic results. And my team, the Hindustan Copper team, will definitely maintain that. In fact, we expect to maintain the momentum which we have started in 25-26. And I really say that as on date also, when I'm talking to you, the momentum has been maintained, and which we definitely want to maintain. Thus, the only thing is that if the assumptions which we make, for example, LME, rupee, dollar and all those things, if they are in line, definitely we'll do better than what we have done this year.
Right. But Mr. Singh, do you think it'll be right to actually say that copper, the dollar rupee pair will sustain at current levels? I mean, everyone is expecting copper prices to come off at some point in time. Everyone is expecting the rupee dollar denomination, even if it depreciates further, to somewhere normalize at lower levels. In that kind of a scenario, what is that conservative number in terms of growth that you're baking in?
See, we will, as I said, we'll try to maintain the momentum, ma'am. Number one. How we'll do it with our operational performance. You must have seen our volumes, your sales figures, and now the target of the production for 26-27, which is roughly 0.5 to 0.6 million tons more than 25-26. So even if the rupee, dollar or LME, which is not in our hands, it doesn't matter for us. We will focus on our operations of ore and the MIC, and we'll do it. We'll improve the margins at that particular front.
Okay, that's very optimistic. Another follow-up I have on the margin front is how much of the margin expansion this time around was driven by pure, copper prices, LME prices, in terms of realizations versus your internal cost optimization, to just give investors an idea?
Ma'am, again, I'll say with the LME fluctuations, we have definitely gained roughly 25%. But the majority of the portion of the profits have come from the volume expansion. The second part was the sales. If you see our sales, it has gone, but we have maintained till 31st March also our vehicles were moving out from the concentrator plants. So till 31st March, we have tried to have the maximization of the sales. So only 25 to 30% has come from the LME variations, 12 to 15% from the rupee. Otherwise, everything was our operational efficiency, turnover, and the expenses which we have done. You just see, just check that our expenses have been in line. We have a control on the expenses. If you see our detailed results, you will see that as far as power is concerned, there has been hardly an increase. And the reason is that we have added roughly 10 megawatts of green power to our capacity, which has helped us in maintaining our business margins.
Got it. When you're talking about volumes as well, what is that demand that you're seeing in terms of copper for FY27? Because everyone is actually now talking about that copper probably is the new gold. And secondly, the industrial usage when it comes to copper probably could increase because silver is somewhere getting impacted right now. If you could help our viewers understand, is there a situation where you are seeing usage of copper increase because of the way prices in terms of silver and import of silver is getting hampered?
Yes, ma'am. The uses of copper are going to go like anything. The first parameter which I earlier mentioned also is the data centers, the AI. Everybody talks about AI. Data centers. In Vizag also, the data center which Google is going to make up 65,500 tons of copper is needed for that. I'm not talking about the exact figures of the China, because China is going to upgrade its power grid. See how much copper is going to be used there. So there is a huge demand. Then in India also, the Ambanis, the Adanis, they are going to create the data centers. So the biggest consumer as on date, and even the coming dates also in the coming future, will be the data centers. They are going to consume all the copper, and the copper production has remained stagnant. You see the production of the Codelco, which is the largest copper company of the world. Last 2 years, it's just stagnant. The demand is going up. And the second factor, you very well know, the war have made our life miserable, actually.
Alright, and there you go, sir. That's a record quarter coming in for Hind Copper, and going forward as well. They see the growth really continuing, but that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. Now, we'll be going on to the IGL management. Now, if you look at the IGL numbers, a strong operating beat even in a tough quarter is what we have seen in the fourth quarter of FY26. Though the EBITDA and unit EBITDA were down on a sequential basis, but that was largely on the back of higher gas cost. But apart from that, if you look at the numbers were much better compared to what the street was anticipating. Even the total sales volume were up around 2.8% on a sequential basis to 9.7 MMSCMD. Now, to give the future outlook and what's in store in the first quarter and in FY27, we are joined by Kamar Kishore Chatiwal, the Managing Director of Indraprastha Gas. So firstly, to start off with, given the recent surge that we have seen in the gas prices, what is your unit EBITDA guidance for FY27?
First of all, our guidance is always, long-term guidance has always been in the range of 7 to 8 rupees per SCM. However, due to these recent geopolitical issues, our results have slightly been on the lower side, 5.4 rupees per SCM. So we believe that with the recent hike in prices, as well as our anticipation is that the situation will improve going forward. So we should be in the range of 7 to 8.
Hi, Mr. Chatiwal. This is Varsha this side. Pleasure to have you. You have taken 3 rupees per kg price hike. Is that sufficient, or will you need to take more price hike, to fully pass on the impact of increasing gas prices?
Actually, we are watching the situation, and we have the balance sheet strength to withstand this. And it is a very dynamic situation because we are, on the one hand, dependent on the gas cost. On the other hand, the competing fuels are also, we keep an eye on the competing fuels, that what is their level and all those things, including EV, which is now the major threat for CNG. So keeping everything intact, we believe that presently should be, the guidance remains that 7 to 8. But at the same time, we also look at the growth prospect, the conversion numbers, because if the price increase is too steep, then the conversion numbers may get impacted. So that has been our consideration, that we balance out both the things. The EBITDA guidance remains 7 to 8. And at the same time, the conversion numbers right now, they are very robust. So that should not get impacted.
Okay, when it comes to gas sourcing, is that still an issue? From where is India sourcing gas in the absence of the gas from Qatar? Any insight on that front if you could share?
You see, one of the good things that IGL had was that 2/3 of our LNG was being sourced from Henry Hub linked contract. So Henry Hub, as you know, has been relatively very stable, that in the range of $2.6 to $3 per MMBtu. Initially, there was some force majeure conditions, so the supplies got affected. But now the situation is normalizing as far as Henry Hub is concerned. The other thing is that the crude is having a major impact on the new well gas. That what we are seeing is the new well gas is having a major impact because it is linked directly to the crude, 10% of the Indian crude basket. So that is having a major impact. Other than that, we are seeing the situation normalizing. Supplies from our long-term contracts, which were at 65-70% levels, they are also increasing now. They are at 80-85%. And going forward, we believe the situation is going to improve. So that is the sourcing situation as of now.
On that note, sir, what is the sourcing cost, gas sourcing cost for you in Q1 FY27?
You see, right now the cost, the weighted average cost for CNG and domestic PNG. Domestic is entirely sourced from the APM, and the cost is slightly around 39 to 40 rupees per SCM.
So FY26 volume guidance, has been missed. What is your volume growth guidance for FY27, if any?
Yeah, actually, but there was a slight miss in the last quarter due to this force majeure conditions. We deliberately reduced some of our supplies, especially the LCV portion, due to the supply constraints. Now the situation has normalized, and next year guidance would be 10.6 MMSCMD. Exit guidance would be 10.6 MMSCMD. We closed this the quarter at 9.69. The next year would be 10.6.
So on that, so what was the car conversion rate in Q4, and any slowdown so far in Q1?
No. We are happy that the conversion numbers in Q3 and Q4. Q4 has been even better than Q3. That 27,000 has been the number. Q3 was 23,000. And overall, the average for the year is around 23,000 as compared to 17,000 which we were doing in the earlier years. So the conversion numbers have been very good, and with the recent price hike in both petrol and diesel also. So the competing fuels, the conversion numbers may not get impacted as you are anticipating due to the price hike. So we believe that the competitiveness of CNG due to this, 1.3 times the difference. So that is the actual benefit to the consumer, that the mileage benefit is around 30%. So right now the 17-18 rupees translates to around benefit of around 22-23 rupees. So that is because the petrol diesel is also increasing. So that is not getting affected.
Right. And also, given the price hike in petrol and diesel today, will you consider taking another price hike?
No, but actually we are watching the situation. As of now, we have not decided on that, but it is a dynamic thing. And in case the situation improves, that the geopolitical situation improves, and we anticipate that the prices, the things are going to normalize, and the prices of RLNG gas is going to come down, then I think that situation is very dynamic. Every day it is changing. So we have an eye on that, and based on the situation, we'll take a call.
Right. For industrials, Mr. Chatiwal, I believe that you must have fully passed on the impact of higher gas costs. So how has been the demand trend on that front?
Yes, industrial and commercial, there have been a strong demand in both the segments, and we have been able to pass on because the competing fuels there, they have increased substantially, and we are at a substantial discount to those fuels. So there is a strong demand in that industrial and commercial segment. So that we are seeing, and what we were doing in a year, right now we are doing in 3-4 months. So that is the kind of conversions that are happening. And we believe this is going to continue, that because some of the customers that we interact with, especially in the commercial segment, they have now told us that they will be switching entirely all their chains on gas, and the major beneficiary would be IGL because our presence in NCR.
Right, and also wanted to understand the capex for FY27. Any targets over there?
You see, capex over this year we did 1172 crores. Next year also around 1500 crores, because now there has been a strong push on the DPNG, domestic PNG segment. So there we believe we may have to increase our capex in that segment. So 1500 to 1600 would be the core segment capex, and 500 to 600 we anticipate the diversification in initiatives as well as the overseas investments. So that will take place during this year.
And lastly, domestic PNG number has been picked up after the government push as well. Any number if you could share with us?
There has been, I think, unprecedented support from the government, what the sector has been asking for the last many years. I mean, in 3-4 months, the kind of control orders and directions that the government has given is unprecedented, and the whole sector is going to benefit. So we were doing, say, for example, in a year, 2.5 to 3 lakh connections, and in this 1.5 to 2 months, we have done 1.5 lakh connections. So that is the kind of push the segment has got. And we believe this is going to continue to grow at 20 to 30% rate in the next 2 to 3 years, because we have the demand from the customer segment, and the advantage with IGL would be that we have the network, and in many places we have also laid the last mile connectivity to the consumer. Only the interest of consumer has now shifted to PNG. So that should benefit us.
Well, an important source-based news coming in on BAC. Now, yesterday, Axis Capital had come out with a report where they were highlighting that BAC might be included in the Nifty 50 exchange in the next review, and they were seeing inflows of northwards of around $650 million. Now, based on that report, we had seen a sharp upmove in the share prices of BSE. But right now, what sources at NSE are saying is that BSE is not a part of NSE 100 index and hence is not eligible to be part of the Nifty 50 inclusion in the next review. So this is kind of sentimentally negative for BSE, because since this news was out by Axis Capital, the stock had moved up nearly 5% in trade. But right now, the sources are indicating that BSE, given the fact that it's not part of the NSE 100 index, it won't be included in the Nifty 50 index even in the next review. So that is the reason why we are seeing a decline, a sharp decline coming in the share prices of BSE. The stock was up nearly 3% in trade. Right now, it's trading just 1.5% up in trade. So an important news coming in when it comes to BSE. But right now, let's also welcome in our fundamental guest, Raghavendra Kedia, the founder of Prosperity Advisor. Raghavendra, you heard the management of IGL. Despite all the challenges, they are quite optimistic on achieving their guidance, and they're also given a good volume growth guidance for FY27. How are you looking at this counter at the current valuations?
Good afternoon. Broadly, the commentary given by the management is very impressive and upbeat, and it's very realistic in terms of, in spite of the crude Brent trading at $110 per barrel. They say that it's a slow and steady approach. So IGL at current levels of 155, we think it's a good buying opportunity. We do have a stand where we think there is a probable correction in Brent crude prices from 110 current levels to a double digit. So there could be a 10 to 15% correction in this overbought zone as the war gravity pacifies and the Strait of Hormuz opens up. So in the weeks ahead, or rather the days ahead, we believe that Brent correction and the impressive, cautious, realistic approach by IGL management would augur very well for the earnings in the next 2 quarters. And we believe that every dip would be taken as buying opportunity. We are looking at a price target of around 20% from current levels of 150, 155 for a price target of around 180 to 185 for a 1-year investment horizon in IGL.
Right. Before we move on to our next stock, let's head into a small break and we'll address more news on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what.
Welcome back. You're watching Small Cap Buzzers on NDTV Profit. Let's go across to Sharad to understand what's been buzzing on the FNO side.
Well, largely we see the positions up, turning more positive at 10:45. We had seen a good momentum, and just wanted to show how things are moving. Of course, the IT pack is doing really well. Infosys, Tech Mahindra, HCL Tech, Eternal, all of them doing well in trade. But yes, Reliance has slipped into the red, but largely nothing major concern coming in. Of course, the private banks have not actually come to the party, but nevertheless a good value buying happening in this mid space. Let's look at the stock specific moves. Largely it's going to be mid-cap IT names which should be in your focus, and yes, it's the same thing. Angel One, more buying is happening in this counter. Interesting, it was earlier 3-4% up, now up more than 6%. Apart from long build-up, also let's look at the short build-up. And you're having Astral, that's where the sell-off has intensified. Of course, this is an earnings reaction. And Uno Minda, not a major trade happening here. Apart from this, looking at the long unwinding, we have Avenue Supermarts is down 1.5%, and Bharti Airtel also a little bit of profit booking is coming in this counter. Apart from this, for short covering, Voltas, we are seeing a good up move, up almost 4%, and Jubilant Foodworks also is showing a good momentum as well. Remember, there is an expiry at play as well today. So these are the stocks which should be in your radar in the FNO space.
Right. Well, thank you so much, Sharad, for all the details. Moving on, Mob Avenue AI Tech is one of the counters that is in focus on the back of Q4 numbers. And to speak about growth outlook for the next 2 to 3 years, we are joined by Mr. Ishank Joshi, who is MD and CEO at Mob Avenue. Mr. Joshi, welcome at NDTV Profit. Always pleasure to have you. I understand that you came out with your Q4 numbers, but just for the benefit of viewers, we just want to understand the exact business model in a very simple language. What exactly Mob Avenue does?
Got it. Thank you so much for having us on the show. So Mob Avenue AI Tech is a AI native ad tech and consumer growth platform. We enable brands and businesses to reach, acquire, and retarget and retain high intent consumers across their digital channels. So our core model is not on media impressions. Our core model is based on outcome-led model. We call it as outcome as service. And that is the model where the world is moving towards. Typically, what we see in the digital advertising space, the businesses today are moving more towards outcomes than versus impressions. So our models are trained towards the outcome for the businesses that we generate.
Right. Now let's head towards Q4 FY26. How were the numbers according to you? What were because you have highlighted there was a strong traction from quick commerce, BFSI, fintech, and retail. But just wanted to understand which vertical is currently seeing the strongest ad spends and outcome conversion for you.
So, typically for us, India is a very large contributor of our revenue. And in India, what we see is digital native companies at a broader level continue to spend, to acquire more and more consumers and also retain more of these consumers as they kind of increase their spend. So commerce, quick commerce, and fintech, these are our key primary categories where we continue to see the spend increasing. However, we also saw decent spend in Q4 in the BFSI segment because as per the industry, generally in the Q4 we see BFSI segment starts going up in the last quarter of the year.
Okay. Now, as I can see the trend for the last 4 quarters for the company, the revenues and bottom line has been continuously on an improving trend. Could you give us some understanding on what lies ahead for FY27? After clocking a revenue of, I believe, 218 crore in FY26, what is the kind of revenue, what is the kind of net profit that investors could see in FY27?
That's a great question. Ideally, what we are looking at is we have a long-term view of our business, and we call it as rule of 50, where we continue to grow by 30% year on year, and with the EBITDA margins of up to 20 plus. So that is a commitment that we have done, as a mission for us till 2030 in a long-term period. But in the FY27. We have also modeled around some of the macro environments and oil prices. So I feel that we will have this growth continued in the FY27 also.
If you could, help Mr. Joshi, if you could help us with the ballpark range when you say that the growth will be, you will see a stronger growth in FY27. Just wanted to understand the ballpark range when it comes to the revenue and of course the margins. You're hovering around 20 to 21%. Where will this margin go when it comes to FY27?
So right now, for us, margins, I think we are spending heavily on our AI infrastructure and R&D capabilities to increase our global and continue to increase our revenue in India. So what we look at it is we will look at 20 to 21% as a EBITDA margin, because we will continue to spend on technology and we will continue to spend on our global expansion also. And in terms of growth, as I said, we have modeled around 30%, but we look forward that we will be able to do more.
Given the strong growth outlook, what is your capital expenditure plan? Do you plan to raise any more equity?
So we have already raised around 50 crore of 49.99 crore equity, which was approved last quarter. And as we move forward in the coming year, we will be having conversations with the investor, to kind of raise more. But that will be decided as we kind of move forward. Presently, we are well equipped with the capital. We are making profitable journey. So as we move forward in the quarter to year, we will able to spend more time on that.
Right, and also, your international business is still at 11.5%. What is the biggest challenge scaling globally? I mean, maybe competition or data privacy regulation. I mean, where you want to take that contribution to from 11% to maybe 20-30%.
So, last 2 years, 3 years, what we have seen is we continue to grow our international business. We are taking a country by country approach. So, last year we have expanded to UK and Latin, and also, we also have resellers and platform enablers who, we work across multiple smaller countries, while sitting from India. So in terms of challenges, I think what we are looking forward is going country to country. So, we're looking forward to expand ourselves in Asia, in US, in some of the other large markets also. More than because we are data compliant, we are GDPR, CCPA compliant. So for us, privacy is not a challenge. I think going in those countries, understanding the macro environment and doing our GTM is what we are looking forward. And we are choosing the countries which have similar India kind of behavior. Countries which have large internet population, large mobile connectivity, 4G connectivity, and they have internet-enabled businesses, which is similar to India, such as commerce, quick commerce, fintech, BFSI, retail. I mean, these are the categories which performs well for us on our platform, and we are expanding in those categories in those countries.
Well, thanks so much, Mr. Joshi, for joining and having a conversation with us. Well, Raghavendra, coming to you on this counter, Mob Avenue, do you track this counter? And if yes, what would you advise to investors?
Good afternoon. We would advise the investors to have a wait and watch approach, considering it's a small market cap company of around $200 million, around 1,900 crore overall market cap. So, and if you see the full year EPS of the company, it's somewhere in the range of around 25 rupees on a full year basis EPS. So, for a current price of around 1,200, that is slightly at a P multiple of 50 times. That is moderately priced, but we would be better if we see a good price correction in this stock to levels of 1,000 for better entry, or the EPS increasing from a full year basis to 35 rupees. That would give us some comfort where a P multiple of 40 is better entry levels, or a price level of 1,000. The promoter holding has gone down from 67 to 65, which is still good, but we would ideally expect it to remain steady at these levels and no further promoter dilution. So if the company increases their EPS or there is a price correction, we would actually be upbeat about this for a price prospect of around 20% upside if we can enter it at levels of around 1,000 to 1,020. Overall, we like the growth trajectory of the company and believe that slow and steady approach would augur well in the earnings and quarters ahead for Mob Avenue.
Right. Okay. Let's get in Jasmeet to understand what's been buzzing when it comes to. Let's get in Jasmeet here.
Well, Somer, thank you for that. Now, if you look at this particular counter, the CMAC overall industry, we do see a good momentum for the company.
Right, we are facing some issue with Jasmeet. So just wanted to highlight what's been buzzing when it comes to CMAC. In fact, we also spoke to the management. They are eyeing for a 15 to 20% growth in FY27, and they'll be also deploying a couple of vessels. In fact, one of them has already been deployed by the end of Q4 FY26, and another one will be deployed by mid FY27. Now, if you look at the Q4 numbers, the revenue was up nearly 64% on a YOY basis. EBITDA nearly doubled to 160 odd crore rupees. Margins increased to 49% from 41%, while the net profit number that the company report was 104 crore as against 43 crore that the company reported last quarter. What led to this growth? Higher deployments of vessels, lump sum contracts, new contracts at the company side. All of these factors aided the company's financial in the fourth quarter of FY26. Now, some business updates that the management did share with us as well. 15 to 20% growth is what they're looking out for FY27. And they also believe that ONGC will also extend their another vessel contract till August 2026. So that will also be one of the key drivers for the company. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editors Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen, and he is now bringing his analysis.
Welcome to this special show. The Adani Group is known as a premier infrastructure builder, from ports to roads to power and airports. The group has made its mark for building at scale with peak efficiency. But over the past few years, the group has been operating in an environment clouded by legal challenges from the US. Now, though, three key developments in less than 2 weeks have wiped the slate clean, allowing the group to focus with complete intent on its core business.
The first came last week when the US SEC settled a lawsuit from November 2024, alleging that executives of the group had made false statements to investors during a 2021 bond issuance by Adani Green. Important to note here that the settlement was done with no admission of guilt by Gautam Adani and Sagar Adani. That settlement set the others in motion. Yesterday, the US Treasury's OFAC, has settled a case of alleged sanctions violation with a payment of $275 million, observing extensive cooperation and proactive disclosures by Adani Enterprises. Here too, there was no admission of guilt. In fact, the group consistently maintained that it had no idea that it was buying sanctioned Iranian LPG.
Finally, the US Justice Department permanently dropped all criminal charges against Gautam and Sagar Adani. The prosecutors concluded they could not sustain the allegations. For a group that is so intrinsically linked to India's growth story, this is a significant shot in the arm, and that's because the removal of this major legal overhang could pave the way for accelerated growth in the coming years. And even as we take you through why this is significant as a development, putting out the standard disclaimer there. You're watching this program right now on NDTV Profit, which is a subsidiary of AMG Media Networks Limited, which is an Adani Group company. Now, with that disclaimer in place, we want to take the conversation forward today with K.K. Mistry, chairman of HDFC. He is, of course, joining in his personal capacity on the show. We're speaking with Mahesh Agarwal, advocate of the Supreme Court, Swapnil Kothari, senior lawyer in the Supreme Court, also with us. Sudeep Bandopadhyay, market expert, will also be speaking with us in the show today. Swapnil, I want to come to you first and just get a sense of, how you are seeing these developments. We spoke last week when the SEC development came in, and we talked about how a settlement does not mean any admission of guilt. In this case, what the Department of Justice is saying, where they're also talking about closing this case without prejudice. What is the inference you make of this?
Tamanna and Alex, you remember that there were these three proceedings. One was by DOJ and SEC, which was settled at $18 million without admitting or denying anything. That settlement was absolutely because there was no cogent evidence by these regulatory authorities of the United States to pin down the Adani Group. If you don't have cogent evidence, and if you've just leveled allegations, whether fabricated, whether insinuated, I don't want to go there because that's a separate discussion altogether. But be that as it may, there is no evidence within the four corners of the US law. You're not able to nail down Adani, not because Adani is Adani, but because you just don't have the wherewithal, the material at hand, which is required to prosecute you further. So it's best to settle it down, and $18 million is peanuts for Adani Group, and they've done that. Now, coming to OFAC, which is the Office of Foreign Assets Control, which is where you roped in Adani for violation of certain sanctions. Now, Adani could have visibly argued, and which it must have, that look, we are not citizens of the United States, we are not bound by your sanctions, and we don't owe any allegiance to you as such. Now, be that as it may, if at all you find us within the four corners of your sanctions, albeit naively or innocuously, then I think, let's know what is the amount that we need to pay, because we've bought oil, we are supposed to buy oil, we need oil. Now, obviously the OFAC must have felt that, yes, these people never had such intention and they don't owe any allegiance there again. So I believe that in as much as some of these cases were fabricated or drummed up, the same diplomatic channels possibly used, apart from the legal aspects, to ensure that these things do not go forward. And $275 million is once again a measly amount for a behemoth like Adani. And you move
I
forward,
think more
you remove
important,
these legal hiccups.
Apologies. Let me actually, and that's a good point, but I want to bring Mahesh Agarwal into this, specifically with regard to the OFAC case that was settled yesterday and the amount that we were just speaking about, this what Swapnil was referring to. $275 million, the OFAC making very clear in its statement that it was not the maximum permissible penalty that could have been levied. That amount stands at over $380 million. And so there is a nod to the Adani Group to say that significant cooperation did take place, and over a period of time, over the period of this investigation. What does that tell you?
So it says that definitely when a settlement takes place, there is a discussion a bit on the merits also. If the US authorities are now settling this big issue, it is obvious they find that for the matter to go for trial, for the matter to get a conclusion, it takes a lot of time, and they may not have a great case. Insofar as Adani is concerned, for them to settle also makes sense, that instead of fighting this matter for a successful resolution, it takes a lot of time. So to boost investor confidence, boost relationship with the country, boost investment in the US, it was a good deal. And it is not that it happens only in the US. Even in the Indian law, if a settlement takes place, it takes place without any admission of guilt. That is provided in our age-old law, that when you settle a matter, there is no admission of guilt at all. So a settlement is a win-win for both sides. It boosts confidence, and I think it's a great thing for both groups.
You know, I just want to get in corporate view as well from a veteran banker. And like I said, again, he's speaking here in his personal capacity. But KK Mistry, thank you for your time to us. What do you make of this end of legal overhang for the Adani Group and the events that have followed? What are your comments?
All right, so let me first of all say that I'm extremely glad, genuinely very, very glad that this entire SEC matter has been settled and put to rest. I have great admiration for the Adani Group and what they've done over the years in terms of building up India's infrastructure. If you look at it, if you look at the last 10 years, the Adani Group has really, in my view, been the single biggest contributor to India's infrastructure growth. The settlement of this SEC matter will hopefully enable the group and Gautam Bhai in particular to focus on even faster growth and thereby contribute even more meaningfully to India's economy. So in that sense, I'm extremely happy. If I was to just quickly enumerate some of the things that I know about the group, I think they've done a phenomenal amount of work for India. The group's contribution to India's infrastructure has been genuinely phenomenal. And I'll give you just a few examples. If you see 28%, and this is from memory, so I might be slightly wrong, 28% of India's total port cargo is contributed by the group. The Mundra port is India's #1 automobile export zone, and it accounts for, and it exports to nearly 100 countries from what I know. The Adani Group contributes, and this is a really remarkable thing, they contribute to 14% of the Nifty 50's capital expenditure. They account for nearly 9% of India's infrastructure GDP, from energy to transport to ports to digital networks to cement to various sectors. And they pay nearly, I was surprised, they pay nearly 75,000 crore rupees as either taxes or dues to the government. So their contribution to India in every respect has been phenomenal, absolutely phenomenal. If you look at renewable energy, look at the number of jobs that they have created. I read somewhere that if you include partners and if you include the contractors, they have created nearly 4 lakh jobs in the country. So their contribution has been absolutely phenomenal. And therefore, in that sense, I'm genuinely happy that this SEC matter is being resolved amicably and is being settled once and for all.
Absolutely. Now, some of that growth that you were referring to, Keki, has taken place despite the legal overhangs. But if I look forward from a cost of funds standpoint, how significant would be the removal of this overhang? Because for a group that has borrowed quite comfortably from overseas in the past, how would this affect the acceptability of the Adani Group's paper, both equity and debt?
Absolutely correct. I think in India, they have the highest standing in terms of credit. In the international market, this SEC matter could be playing on the minds of certain lenders, certain banks globally. And with this matter being put to rest, I think their borrowing costs would also improve, and there'll be more banks which would want to come forward and lend money to the group. So if they were able to raise funding from overseas at an even lower rate, then that will contribute in an even more meaningful manner to India's growth story.
You know, well put, Keki. What role do you see the group playing over the next 3 to 5 years, particularly in the current context with the West Asia conflict, ongoing energy supply chains affected, at a time when self-reliance is of more importance and an infra giant is now becoming unfettered?
See, they have been expanding at a very, very rapid pace, extremely rapid pace, and they've moved into the group has moved into almost every segment of anything to do with infrastructure. They have something like, if I recall right, something like a 6 lakh crore, which is about $70 odd billion investment plan for aviation, for green energy, for digital infrastructure. And in terms of what they've done for renewable energy, it's phenomenal. And in this time and age where energy is becoming such a big issue globally, renewable energy can be a very big savior if we can really scale that up to to contribute in a bigger way to India's growth. Energy costs may not come down that soon. Even if we assume that the war comes to an end right away, I hear from experts, and I'm not an expert, but I hear from experts that it would take something like 4 to 6 months for all the supply chains to get restored and normalcy to come back. So I don't think we will be seeing oil back at $60, $65, $70 for quite some time. And therefore, till that time, if we can really pep up renewable energy, it would go a long way in helping the economy.
Right, and that's well put. I'm just wondering, Keki, particularly if you think about the OFAC case where there is alleged sanctions infringement. The group maintained that it was not aware that it was buying Iranian LPG. And the effort has been, since that case came up, to shore up compliance further to ensure that this doesn't happen again. The question I have is, can this entire episode also be viewed from a positive light, with the group taking relevant steps to improve compliance, and that is a positive move going forward as well?
I think it's probably a little unfortunate that what happened, but the group was not aware that it was Iranian products that they were selling, and I think there'll be a greater. We see this even in other businesses. If you see the e-commerce business, very often, not very often, but very sometimes, you could see a supplier supplying goods from a country which has been banned or a country which has been sanctioned. Now, the moment the e-commerce player would come to know that something like this is happening, they would immediately remove that supplier from the from the chain. But it takes a little while to be aware of these things. So whilst you do all the diligence you want, sometimes these things can skip through.
Yeah, it's just that the fallout for the group has been massive in terms of the attempt made to take all of these cases and build it into a case for reputational damage. That, in a sense, ends now. Thank you so much, Keki, for those comments, but I do request you to stay on with us for the show as we speak to other people as well. I want to get your view in, Sudeep Bandapadia, from a market lens. How are you looking at it? I mean, the stocks move as they do as the news flow comes in, but we were speaking to Samir Arora earlier today, and I want to play out what he said as well. And he talked about how any questions, if they were in that domain for large mutual funds or FIIs, etc., to come in and buy into the group stocks, now those questions evaporate.
Oh, absolutely right. I think there's a significant reputational, fog which was around gets cleared. I'm not at all saying that there were some issues which were genuine or anything like that. But when these kind of allegations are thrown at a group, obviously the reputation does take a beating. And there are many global investors, global banks, global institutions who normally, when these kind of allegations are there against a particular group, they tend to avoid either investing or working with that group. Now that Adani can continue to progress without those companies. But now that this reputational reputational issue has been cleared, I think they will be in a much better position to work with the whole world. And the whole world will be free to invest in Adani Group companies as well. That entire issue is now behind them. They have got few fantastic companies which they have built over the years, and they are completely aligned with India growth story, India infrastructure build, and they are very critical to the economy of India. So I think it is a good news for Indian economy and Indian capital markets as well that this matter is being put to rest and their name has been cleared.
Just stay on with us, Sudeep. Just want to play out the point that alpha investor and founder of Helios Capital, Samir Arora, made when we asked him about this question.
At least for the Adani Group, where we always had Adani Port in our portfolio, even from those days when this whole thing started with whatever that guy's name was, Hindenburg, whatever it was, Hindenburg. So since then, because I met many FIIs and a few mutual fund guys, and it looked to me that these stocks were put into the no list kind of thing. And although many of these guys knew that at least Adani Port is a very good asset and Ambuja is very easy to understand that it's a good asset, although I don't own it, I'm just saying in those days, they would say, no, we can't buy because this guy will ask, our board will ask, blah, blah, blah. Now you have got the clearances officially, but more than that, you've got the umbrella of the biggest mutual fund in India and one of the biggest FIs in India, buying it in such quantity that it is public immediately. I think that will give room to the other guys who wanted to buy in their firms, that they can go and ask whoever had stopped them or this thing. So I think now it will be considered as a normal stock. And if you consider it as a normal stock, everybody will own one or two of these stocks.
Okay, so that's a word coming from Samir Arora. Swapnil, I want to come to you on the importance of the timeline here, right? So we've had these cases that have gone on for a while. In certain cases, you're talking about 2023, 2024, all the way to 2026 now. With these out of the way, can you say for certain that this is now a full stop, that you don't have to worry about it as a shareholder of Adani Group?
Well, yes, as far as these three cases are concerned, I wouldn't have to worry about it because the settlement means the settlement is closed absolutely out of the way completely for Adani and for the people who have faith in the Adani Group. So I wouldn't worry about it, and I wouldn't smell a scorpion under every flower pot. So, I don't say that, this is not going to happen in the future, but at the same time, I would be very optimistic about the fact that I have to go about my business. I have to go about investing as a small-time investor or as a big investor. I have to let Adani do its job, and Adani should continue to do its job, which I'm sure it will. And, these minor hiccups which come along the way, especially when you're trying to go very hugely global. And this is something which you have to take it in your stride. And there will be cases against you, and you'll be having cases against some people. So legal, interaction with lawyers and with several courts of the world and of the country will continue in your space, and you will continue to grow that way.
Swapnil, if you just look at the nature of the allegations, I mean the OFAC one, for example, you bought crude which was Iranian crude, but why didn't you know in advance? Why didn't you realize what you should have? Though they go on to explain mitigating factors that yes, you cooperated with us fully. The moment you found out, you fixed everything that happened. Yes, the people that you bought it from misrepresented where the source of the crude is, but why didn't you figure it out? So if you look at the extent or the I would say fabric of the different sets of allegations, there seemed to have been an attempt to overreach and build a narrative, don't you think?
Yes, Tamanna, you hit the nail on the head. And, even if I do something little, that's blown out of proportion by the United States, especially when it comes to sanctions or interacting with people whom they don't like. So here I'm interacting with Iran. I've done it through possibly a Dubai supplier, and I've not done my due diligence, or assuming that I've done my due diligence, I've really not really bothered about farthing about it, because I'm not a United States citizen. I don't owe any allegiance to it. And I believe that, okay, as and when this case were to come up, as and when it comes, we'll take a call at it. But right now, for the moment, I need crude oil. I'm going to do it. I'm going to pay this much amount, and my country needs it, and I'm going to have it. So, Tamanna, and you use the correct word. It's overreach. So I believe that when you're dealing with sanctions, or when you're dealing with the SEC or the Department of Justice, dealing with very, very tight four corners of the law, and somewhere, even if you found to be slightly astray or amiss, albeit not intentional, they will be trying to wrap you up in the net. And let me tell you one thing: more often than not, these tight laws by the United States are considered to be those speed restrictions that you find on European highways, where you can really go at 100 miles an hour, and you have been restricted to 80. So deliberately so that if you go to 90 or 91, there will be a ticket to your house for X amount of euros. So, this is something which, a lot of people internally within the United States have complained about it, that these laws are way too strict, way too tight, and the interpretation of it is way too strict, so as to literally suffocate and asphyxiate people who want to do business, not only within the United States, but people from outside the US who want to do business. So that is where I think there'll be a lot of corrective mechanisms going forward by the United States to ensure that it still remains the most business-friendly country, so-called business-friendly country in the world, where literally the Adanis and the Ambanis and all the other conglomerates literally have no problems in lifting money from their banks, because that is what they want. They want their banks to lend out money to us. And if these are the kinds of situations that are going to accost me as an Adani group, I'm going to be thinking twice that, okay, be that as it may, I'll have to deal with the United States, but let me engage US lawyers in the first place to ensure that I'm not, I'm towing the dotted line. It's as simple as that. But it is overreach. Absolutely an overreach.
It's an important point.
Allegations, in fabricating a case, I would not say fabricating, but framing a case.
Sure, in the framing of the case. All right, Sudeep, my question to you is specifically on the borrowing program of the group. And ever since the Hindenburg attack and the allegations therein, the group has taken it on itself to become leaner when it comes to debt and to become more efficient. So your gearing ratios across companies for infrastructure creating companies is actually pretty lean. And they've got a significant roadmap for CAPEX heading into 2030. They've said in the past that they are not dependent on external funding. But how do you think that this removal of a legal hurdle will change the landscape for them? Will it accelerate certain projects that they have?
Well, Alex, I'd like to mention a couple of things. One is, if you look at it in hindsight, as far as fundraising is concerned and overall financial management is concerned, this, in a very, very weird way, has been a thing in disguise. Look, the group has tightened its finances. They have cut a lot of flap, which were non-core. Their working capital management has improved significantly over the last 4 or 5 years since the first Hindenburg allegations surfaced. They were not able to access funds from abroad. Now, while we are talking about it, look at it, what had happened to people who had accessed funds from abroad. Either they would have hedged at a very high cost, or if they had kept a part of it unhedged, the currency depreciation in India would have really, really badly impacted them. So, Adani by default, I think, have been saved from that kind of a cost or that kind of a consequence. So I don't think, this 4 or 5 years of pain which they went through by not being able to access the world hasn't been too bad for the group. They are now much more trim and more fit. And now when things are falling in place, and God willing, once the West Asia war ends and things become normal, they will be in a much, much better position from their own balance sheet point of view also to access the global markets and really access funds at a significantly better term compared to what they were able to do earlier.
Sudeep, just a follow up to that then, because in a sense, you're talking about Adani Enterprises that has been the incubator for the group, and certain plans that might have been afoot with regard to separating certain businesses, maybe the airports business, maybe otherwise, may have, I don't know for certain, but it may have been put on hold while all of these legal challenges have been in place. Does this also open up the roadmap for certain corporate actions to be taken by the group?
Oh, absolutely. And you have hit the nail on the head, Alex. I think airport business needs to be separated out. It needs to have its own path, just like many other group companies. And for that airport business to become separate and find its own destiny, access to foreign capital, international funds is very, very critical. And I'm pretty confident that that definitely will be the first thing in the pipeline, once things have settled down.
Mahesh, just to sum up, implications, of course, for the group, but also for India Inc. and especially large companies that are dealing with several conglomerates, Indian conglomerates dealing with several kinds of businesses in various territories. What are the legal lessons over here and the precedents that are set?
See, this gives a lot of confidence to India Inc. and Indian businesses. Like Adani, there are many companies in India who are engaged in millions of dollars of imports and exports. What happened? I'm surprised that your channel is still saying Iranian LPG. The allegation here was LPG was imported by Adani. It is required by the country. It's in a usual course of business. So some allegations were made that it originated in Iran. These allegations were denied. Anyways, now processes have been put to put proper due diligence. This matter went, some allegations have been made and the matter is settled. It gives a lot of confidence to Indian business that if you do business correctly, even if there's an allegation made, it can be resolved. This gives confidence for cross-border investment, Indian investment in US and US investment in India. These kind of settlements and closure of matters give big boost to investor confidence. There are large companies, as I said, who are investing in US. If these kind of cases continue, it obviously creates a cloud or a doubt in the mind of Indian businessmen that they might face these kind of allegations there. But this kind of a settlement is a big boost, and a settlement like this is giving a lot of investor confidence.
I think that's a great point, Mahesh. Thank you so much to all of you for joining in and just helping to break down what this means from several perspectives for a corporate entity of this size in the Indian context, globally as well as all of the business go through, and for the Adani Group and the impact that it has had. With that, that's all the time we have on this special show. Thank you so much for watching, but all the action continues on NDTV Profit. Stay with us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew, and with me is Hiral Dadia, and we'll take you through the next 1 hour of trade. It's been an exciting day so far, and we may have given up a little bit of gains on the Nifty 50, but the breadth, Hiral, looks particularly good, and we're hovering around that 23,400 mark. The story of the day has to be IT.
It has to be IT. It's the second consecutive session of gains that are coming in from IT majors. Now, the question is, are they looking at something positive from Nvidia earnings that are slated tonight? Is that one of the cues that we are looking at ahead of? That's something that we will tell you tomorrow on India Market Open as well. But Bank Nifty, again, a similar trend. pretty flat. But what was interesting today, Alex, was the setup in terms of Bank Nifty, as Kush was also indicating, was looking much better and stronger from a weekly perspective as compared to Nifty 50. So that's one of the key takeaways of the day, viewers, that you should be taking through. Let's just quickly first look at the heat map in terms of Nifty 50 and see what's happened. The heavyweights are the ones which have given up the gains. You are seeing the IT pack, which is on the top of the list. You have Tata Motors PB also, which is doing pretty well. Eternal, 3% up move. It wasn't seeing these kind of gains when we started off the trading session today, but it's climbed up the radar along with the Adani Enterprises, SBI, HDFC Life. Kotak, interestingly, has been under pressure. Cement majors like Ultratech are down in trade. Your pharma also, to some extent, is bleeding in today's session, from a Dr. Reddy's, Cipla to a Sun Pharma. So no particular trend that's emerging. But Alex, I think the sectoral heat map and the contributors will be interesting.
Yeah, certainly, absolutely. In fact, the sectoral heat map will tell you that there's a significant amount of green on the screen, of course, but IT ruling the roost. What stands out to me, and we'll talk about it in the intraday charts for both the mid cap and the small cap index in just a bit, is that the broader market is where the strength is at right now. Apart from that, you have realty that's doing okay, you have the PSU banking pack that is doing okay. So what's not doing well, as we've already seen, is the private sector bank. It's the one entity that is in the red right now, and financial services as a whole, therefore, because the weightage of private sector banks having a bearing there. Consumer durables was actually a tad bit weak, if I remember correctly, in trade yesterday. It's up and about today, and pharma is doing okay. But pull up the intraday charts both for the mid cap and for the small cap index, and you will likely see...
Just one thing I want to add over here, Alex, is in spite of seeing a sea of green, except the private banking space, you're still seeing the breadth which is in favor of the broader markets.
Yeah.
You're not seeing that kind of impact coming in terms of individual counters as well.
Yeah.
You know, there are individual pockets which are bleeding, but it's not having an impact on the sectoral indices.
No big losers there.
Yeah.
We'll pull up the big movers from the broader markets as well. So this is the mid cap index at very close to the high point of the day and held pretty much throughout this trading session. A similar screen is what you will see for the small cap index as well. So as a result of which, the advanced decline ratio, when you pull up that intraday chart for that, is going to stay more or less at that widest point through the session. Just to make the point that Hiral was making on the big movers from the broader market. So if you can pull up the 500 and you look at the big movers, there are a few smattering of stocks that are losing over 3%. But like Hiral was saying, not many. So just less than 6 or 7 that are losing more than 3%. Everything else is less than that. A few stocks doing well: Spark, Mastech, Web of Global, Angel One. Interesting, no real trigger, but the capital market players are doing particularly well.
Absolutely.
Today.
And JK Paper, the other ones are reacting
related
to earnings, right? But let's quickly understand the setup. Your Nifty has been actually gaining for a second consecutive session, though it's been a pretty range-bound trade that you're seeing in terms of markets. That 23,800 mark is becoming an absolute struggle for Nifty 50, and once it crosses that, then probably you will see sustainable green shoots that could emerge as well. In fact, experts are expecting that range to remain pretty tight, and 23,250 to 23,800 is what you're looking at. In terms of upside triggers, if Nifty sustains above the 23,800 mark, then it opens up the doors for levels of 24,000 to 24,100 as you're seeing. And in terms of support on the lower side, that is coming in strong at 23,600. And below that, if we break that 23,600 mark, you're actually eyeing a 23,400. As Alex was mentioning, the showstopper is absolutely Nifty IT, where you are seeing good amount of buying interest that's coming in there. And in consonance to that, you have real estate, which is actually gaining strength as well. A second straight session where value buying has been emerging in terms of real estate companies and in the small and mid cap counters. So that's where the strength is once again. Bank Nifty, you know, according to what numbers are indicating, the setup is weak, at least for today. But from leading gains yesterday to being the only sector in the red is the key question as to why. The weakness is bank has mainly been led by private banks, as we told you, but the resistance is crucial. 53,700 is the first resistance levels, and then you can see the next ones that follow. And the first support level is coming in at 52,990. on Bank Nifty as well. So that's what the markets are looking like right now. It is interesting to see what we could do from here on, but let's get in. Dilip Bhatt, founder at Pedigree Advisory, and Gaurav Sharma, Associate VP at HR Globe Capital, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to both of you. Let me come to you, Gaurav, first in terms of charts. You know, initially the question was, is Bank Nifty looking stronger as compared to Nifty 50 from a weekly perspective? That's what we started our day with. But right now, if you go to see, it's the private banks which are continuing to bleed. And you have Nifty, which is showing you some bit of strength, but mainly it's the small and mid-cap counters which are gaining strength and sustainability. What are the levels that you are watching out for?
Hi, a very good afternoon to all the viewers of NDTV Profit. So, talking about Bank Nifty, it is trading absolutely sideways all throughout the day. The range is too very narrow for what Bank Nifty is known for. It is completely trading against its normal momentum. PSU banks are somewhat performing, but private bankings are taking everything off they are gaining. So that is the reason the banking pack is a little mixed. As far as the overall charts are concerned, it is a clearly indecisive. Middle of the range is where Bank Nifty is trading currently. 54 500, 54 600 being the breakout level, 52 800 being the breakdown. It is just trading in the middle of that. As far as Nifty index is concerned, it is trading near closer to 23 800 mark, which is a breakout point. Once that is taken out, Nifty will quickly head towards 24,000 and 24,200 levels, where exactly we are eyeing at.
Individual stocks that you're liking, Gaurav, and Dilip, then we'll come to you on a couple of stocks from the same space that are buzzing. And good afternoon to both of you. Gaurav, individual stocks that you're looking at positively today?
Yeah, hi. Very good afternoon, Alex. I'll go with the IT pack. Especially those IT companies that drive larger chunk of their revenue from the BFSI space, namely Coforge, OFSS. They are at the top of the tally. We like them so very much. OFSS has already on the move, and Coforge is actually available at a very corrected rate. So from a medium-term perspective, Coforge becomes a very good proposition. From a long-term perspective, we'll go with the OFSS. As far as trading and short-term moves are concerned, things like JSW Energy is catching our eyes. After a 2 to 3 days of consolidation, it is all set for a breakout towards 560 odd levels. So that is one stock that can be kept on radar.
IT counters, JSW Energy, few of the names that you should be watching out for. You know, but before we take any questions with our guests, Zydus Life is one that we want to address. The numbers have just come in a couple of, probably few minutes ago. The stock is at the day's highest levels. And it seems there is a recovery which is coming in terms of the US market segment. Varsha is standing by to tell us more in terms of what are the key highlights in terms of the earnings that she's been picking up. And Varsha, anything else in terms of buyback announcements that are keeping buyers enthused?
Yes, absolutely. So one is of course the US recovery and the buyback announcement. On to the US recovery, everyone was expecting that US will have a weak growth, you know, because of the no rev limit contribution, but there was a beat when it comes to North America business. Well, also the base business, if you see in North America, there was a volume expansion and new launches which drove the growth, and hence the beat coming in. There was a strong traction also in rare disease portfolio as well. Now talking about the international markets, which were actually strong, growth was accelerated across emerging markets in Europe, which was though expected. A broad-based demand across geographies. Now talking about the consumer wellness surge, well, the international wellness business grew strongly, I would say, and the domestic brands maintained leadership. Also, there was a high growth in key segments like skin and nutrition. Onto the India formulation business, if I were to talk about, was up almost 14%, and there was a product mix improvement as well. So higher contribution was from specialty plus chronic and rare disease, which actually had a better realization, which supported margin. So overall, a strong set of numbers. You know, talking about the buyback also, they were approved buyback also when it comes to Zydus Life Sciences, there was a buyback of almost 1100 crore at a price of 1150 rupees. So these are, basically a strong set of numbers, beat estimates, and the buyback announcement are the key reason why you're seeing, the buzz going on when it comes to Zydus Life Sciences.
Absolutely. In fact, pull up the intraday chart. Varsha, thanks so much for that. Pull up the intraday chart for Zydus Life and you see the kind of spike that has come through. And by the way, that's of course one of the buzzing stocks today, but important to point out to you what you're seeing at the bottom of the screen, which is that the rupee has in fact hit a fresh record low, now 96.5 on the ticker. And this is practically a daily occurrence. In fact, this intraday chart is something that is familiar. If you look at the past several trading sessions, there's usually a spike at approximately this time towards the end of the session. Dilip, I want to come to you on both of these aspects. Actually, we spoke about Zydus Life, but I also want to ask you about the implications of the currency falling to a fresh low practically every other day. On the one hand, it is positive for exporters, but on the other hand, the balance of payments becomes that much more perilous, and in a sense, it is negative for several important companies.
Sure, good afternoon. I think certainly the falling rupee is a very kind of a vexatious problem for us, and is going to lead to a lot of vicious cycle that we might get into. And this is a falling rupee will not hurt you so much when the inflation is very benign, but certainly when the inflation is inching up on all the fronts. So I think a falling rupee will hurt you much more because you are a net importer, and oil being what it is. So I think it also we have seen the kind of FII outflows that have taken place. Having said that, I think we are possibly at the peak negative sentiments as far as the rupee is concerned and as far as the FII outflows are concerned. So perhaps they might have peaked out in terms of the pessimism, and somewhere maybe next couple of months, possibly we'll see stabilization on both the fronts. But I would say that from here on, the rupee would possibly should behave much more in a much more stabilized way, is what my broad call would be. And similarly, even for FIs, I think the outflows hopefully will stop, because they have really capitalized quite a bit on the falling rupee. And my sense is that some of the measures that will be taken to arrest this kind of situation would help to improve the overall sentiments in terms of the pessimism.
Absolutely, an interesting point there. In fact, the way the rupee, Alex, has been panning out somewhere will be positive for a lot of pharma companies as well, as it is with IT companies. And in fact, that's going to be something that we should be watching out for in terms of the first quarter of FY27 earnings. But Varsha continues to be with us to tell us what's happened to our Sun Pharma Advanced Research, because a landmark financial turnaround is what they've reported this year in terms of FY26, where the company's actually swung from a deep loss to a substantial profit. It has cooled off from the day's highest levels, but still trading with double-digit gains. Varsha, what are you picking up so far in terms of where Spark goes? I mean, we are calling it the stock of the day, but what are the reasons?
So, one of the reasons why you're seeing a sharp uptick in financial is because the PRV sale. Now, we'll understand what that is, but the overall financials, if you see, the boost is largely one-off, that is PRV sales, and which is not driven by, core pharma R&D revenue growth, which Spark is into. While sustainability of such profits may be limited or remains limited going forward. Talking about the four numbers, if I would talk about, there was a huge growth in revenue, EBITDA and net profit as well, while there was a loss last year though. Now let's talk about the performance drivers. One is the massive turnaround, of course, from losses to strong profit. 1,840 crore income was generated from priority review voucher, PRV only, and this is received from US FDA for SESB product that the company has, and this voucher was later sold for rupees $195 million, which is a high monetization for us, for a company like Spark. And this is a one-off income which is a core reason for sharp spike in revenue and profit. Now what is PRV? Now this is very common when it comes to companies like Spark. So it's a special voucher or approval benefit given by US FDA, and the company gets PRV when it develops important drugs like rare disease or pediatric drugs, and with PRV one can get fast track approval for the different kind of drugs. Normal approval, if I were to talk about, takes 10 months, but PRV cut it to almost 6 months. So the monetization itself has led to the Spark, the sharp rise in financials. The core business performance, if I were to talk about, base revenue from operation was only 13.2 crore, indicates core R&D business remains limited, but there was no tax expense during the quarter, and which helped translate the entire operating gain into net profit. So overall, PRV sales is only one of the reason why you're seeing a sharp uptick in Spark's financial numbers.
Okay, thank you so much for that. Before we just get into a conversation with Naveen Mathur, who will be joining us as well on the Indian rupee, a quick word, Dilip bhai, when it comes to the pharmaceutical space, because they do become, beneficiaries with the way rupee depreciates. How are you looking at the sector right now?
Well, I think you have certainly said it correctly. Absolutely. I think the rupee depreciation helps pharma as well as IT in a very big way, because the bulk of their exports and bulk of their profits do come from that. So in that sense, I think the farmers continue to have a strong tailwind in that sense. But even otherwise, I think most of the frontline companies are very well geared to give a very decent volume growth of around 10 to 15%. I think mostly contributing by the exports. And I think rupee being where it is, I think it's going to help almost all the pharma companies. The threat of a US FDA inspection, which largely prevailed in the earlier times, I think has been much diluted, because most of these frontline companies have quite a few plants all over the place. So observation on one or two plants does not impact them. So in that sense, I would say that something like Sun Pharma, Divi's Laboratory, Lupin, Zydus certainly would look very strong. Maybe over the next 12 to 8 months to put it in your portfolio.
So that's a comprehensive view on the pharmaceutical space. Now, back to the Indian rupee. It has now slipped to an all-time low of 96.54 against the US dollar. Naveen Mathur, Director Commodities and Currencies and Gift City IFSC at Anand Rathi Share and Stockbrokers, joining us on the phone line to explain this. Naveen, practically every day we're looking at a scenario where in the second half, towards the end of trade, you're seeing a bit of a spike in the rupee. Why is that taking place? One, where's the pressure coming from? And where do you see this culminating? What are the levels that you're seeing?
Thank you very much, and good afternoon to all the viewers. Thank you for having me on the call. I think there are fundamental reasons, now most of us know about them, for the rupee depreciation. Means today again it is 96.54, touched a new low yesterday. We closed at around 96.35. Now, the fundamental reason still remains the same. The oil is at 107 levels plus all throughout for the last couple of weeks. And currently we are near around $110 a barrel for the Brent. And the other factors like the US-India yield gap, which is narrowing sharply, the higher bond yields. In spite of all that, the RBI is intervening. And the forex reserves have been at around $696 billion, which were at $728 billion before the start of the war. So RBI is using the forex reserves. Means we have seen a drawdown of around $34 billion to hold the rupee depreciation. But at the end of the day, the honest assessment is that up till and unless we don't see some kind of a breather to oil, to the current account deficit position, the rupee slide may continue, and the FPI outflows would add on to the pressure.
Got it. All right. Thanks so much, Naveen, for taking the time for that quick view, because ultimately what else is there to say, as you've pointed out, till there is pressure on the rupee in the form of higher crude oil prices, that's going to remain the case. Pull up crude whenever we were able to, and you'll see that it's sustaining well above that $100 per barrel mark, which is why there is considerable pressure, $110 per barrel right now for Brent crude. And bear in mind that there is no headway at this moment that is being made with regard to the West Asia crisis and the Iran war. Now, let's head over to an earnings conversation. And Dhanuka Agritech has reported its fourth quarter earnings, registering a strong profit growth of 29% on a year-on-year basis, while revenue has seen an uptick of about 9%. The company has also approved a buyback of up to 5 lakh shares at 1,400 rupees per share. The stock price currently at 1,205, and that is why you're seeing that significant uptick in the stock. We're joined by Mr. M.K. Dhanuka, who is the chairman of Dhanuka Agritech. Mr. Dhanuka, thanks so much for taking the time. At the onset, let me ask you about what has gotten your shareholders most excited, which is the buyback and the pricing of the buyback. What was the thinking here, sir?
Actually, we reward the shareholders since the buyback is more beneficial for the shareholders because they get the taxation benefit in comparison to the dividend. So that's why the management thought that we should go for the buyback instead of giving dividend to the shareholders. So that was the reason of doing the buyback for 5 lakh shares at the rate of rupees 1,400 rupees per share.
All right. So now let's turn back to the earnings, right? Because seemingly you've had a better cost absorption in the fourth quarter versus the third quarter, and as a result of which you're actually seeing pretty significant growth in both EBITDA as well as, or rather actually 5% growth in EBITDA and 29.8% growth in PAT. What are the factors that have led to this? Pricing increases?
Price increase happened mainly from April onwards, because March price list we finalized by 20th February itself, and basically the war started from 28th February onward. So although the prices started increasing from mid-March only, but we took the increase from 1st April onwards. So that is one reason. Second is basically we got around 24 crore rupees GST benefit from the Udhampur unit. This benefit was up to 31st March 26 only. So this was the last year to get the GST advantage. So we did higher production from Udhampur unit so that we can get maximum GST benefit.
Okay. Mr. Dhanuka, good afternoon. This is Hiral on this side. You know, my question to you is, if you have to look at FY27 as a year, your expectation in terms of what you could see is very strong, double-digit revenue growth, and this is despite a challenging backdrop that we are staring at. There is a warning of a incoming El Nino. Secondly, that could actually lower the southwest monsoon as well, if you have to talk about in terms of impact. So there are dry spells coming in. Now, in terms of the product mix pivot, herbicides make up majority of your revenues, around about 35 to 40%. And in this kind of a scenario, you will have to move from herbicides to insecticides. How are you looking to make that transition, number one? And two, have you baked in all of these concerns in terms before projecting what you're looking at in terms of FY27?
Yeah, you see the El Nino impact is going to come from in the later part of the Kharif season. So by that time, the herbicide season for Kharif will be over. So consumption of herbicide will happen by the time the El Nino will take place for the Kharif season. So that's why herbicide consumption will be already over. Secondly, the biostimulants, for which the government put ban last year, and around 60 crore sale was impacted because of the ban on biostimulants. That sale we will be getting this year because the 3 of our products out of the 4 has been approved by the government, and from June first week onwards we are going to market these molecules. So we hope that around 60 crore sales we will be getting from these biostimulants, and some sales from the 2 products we acquired from Bayer Germany, that will come in the books of Dhanuka. So overall we expect that we will be able to get this double-digit growth. And secondly, 60% acreages are now irrigated in India. So we are not totally dependent on monsoon. 60% irrigation is available. Only 40% is dependent on monsoon.
Okay, so from the Bayer Alliance as well, if I'm not mistaken, 60 to 70 crores is what you were anticipating in terms of the contribution that could be coming in. My second point being now, the price hike that you mentioned about right now, the anticipation is that there is going to be some bit of a weakness, there will be some bit of an impact. Do you think that the market is ripe enough to actually absorb the kind of price hikes that you've already started taking from the month of April, number one? And two, in terms of the raw materials, are you seeing any pressure in terms of pricing because of supply chain constraints?
You see, the prices which we increased from 1st April, they were absorbed by the market. But the price increase which we have hiked from 1st of May, that has not been accepted by the market, and some of the prices we have to revert back. So that is one thing. And secondly, definitely because of this South Asia, West Asia war, the impact is there on the prices as well as the supply chain, because all the pesticides are dependent on crude derivatives, and because crude is crossed $110 from $70, so overall it has impacted the prices, and the availability of some certain molecules is also impacted.
Dhanuka, just to clarify what you've just said, what was the quantum of the hike that was attempted in May and across which products?
You see, we are manufacturing around more than 90 products.
Sure.
So we took the price hike on around 1/3 of the molecules, because the products which we are importing from Japan, there is no price hike. The prices are basically stagnant for the whole year. So we have not taken any price hike on Japanese products, only on generics where the technical raw material prices have increased. We have taken price hike, and that was to the extent of 4 to 5%.
So on 1/3 of the portfolio, you've attempted to take 4 to 5%, but this has not gone through. So therefore, can it be interpreted then, Mr. Dhanuka, to say that that is going to have a bearing on the margins in the first quarter?
No, I don't think, since the company is having the inventory of old prices in the system. So we are able to pass on the price increase to some extent in the month of April. So I don't think that it will have any major impact, although we are predicting 125 dips in the gross margin and 100 dips down in the EBITDA margin in FY27 from the FY26 comparison.
Mr. Dhanuka, the other thing is with the Bayer Alliance, the asset transference sales from the Bayer portfolio will be expected to reflect on your books starting the first quarter of FY27. What is the exact execution timeline? How much in terms of financials will it reflect? And does it still remain viable if the macro agricultural environment deteriorates?
You see, with the Bayer, we have extended the agreement till December 2026. So Bayer will continue to sell molecule on behalf of the Dhanuka. Last year we got around 32 crore net economic benefit from Bayer, for which the sales was done by Bayer Crop Science. So till December 2026, again Bayer will continue to market, and we will be getting the net economic benefit. As I told you, 60% is irrigated area, so I don't foresee any major impact on the sales volume. in the coming season.
I think lots to watch out for from this segment as well going ahead. But thank you, Mr. Dhanuka, so much for joining in. Always a pleasure to speak to you. But let's go back to our technical and fundamental guests as well. Mr. Dilip Bhai, my question to you is, how are you looking at this entire fertilizer chemical space right now, taking the impact in terms of supply cost pressures? And two, as Mr. Dhanuka was mentioning right now, that they are attempting to make price hikes. The May price hike is something that the market has not absorbed right now. Does that really tell you anything about the sector of what we are getting into?
So, as far as fertilizer is concerned, certainly, without any doubt, there is a very severe cost push. And then you are dependent on the government. How much are they going to give you the subsidy, and how much and how soon those receivables are going to get monetized. So I think that challenge remains in fertilizer perennially, and it becomes a little more serious when the cost push really happens in a big way, like what has happened this time. So fertilizer is something one should, it's very difficult to take a call on a secular basis. Now, as far as I think the agri-tech is concerned, agrochemicals are concerned, once again, it's like this, that a few companies have an inventory, old inventory, and few companies don't have. So in this entire chain, who is the beneficiary and who is not, it becomes absolutely company specific instead of being a very general or making a very generic statement on this particular thing. So I would be very cautious as far as these companies are concerned. I think unless and until you are closely monitoring and talking to the management, it's very difficult to know which company is going to be hit where in supply chain logistics, in cost.
Sure, and that's the attempt that we're trying to make as well, Dilip, which is why we just had a conversation with Dhanuka Agritech. Gaurav, a quick view on Dhanuka. It has come off the high point of the day. Seemingly also the market, or at least everybody listening into this conversation, paying attention to the fact that absorption of price increases has not taken place in the May round. On the charts, how does it look?
I mean, the steeper the rise, the steeper is the fall, clearly coming down from the highs. But overall, yes, pretty much of a reversal signs are visible here. But I'll still wait for a close up at 1200 before initiating a long position here in this stock.
Gentlemen, thanks so much for taking the time and for speaking to us on NDTV Profit. Significant update on HDFC Bank. This is the first cut, and turns out sources are telling my colleague Shrimi that HDFC Bank may seek an extension for Keki Mistri's tenure, which is set to end not too long from now. Shrimi joining in on the phone line to tell us what she's heard. Shrimi, what are you picking up?
Yeah, so Alex, a couple of developments coming in. So HDFC Bank is, first of all, fast-tracking the process of identifying its next chairman, as the interim tenure, as we all know, of Keki Mistry approaches its end next month, and that is according to people familiar with the matter. And in fact, the bank's Nomination and Remuneration Committee, NRC, has begun the process of evaluating candidates for the role. Around 3 to 4 external names are understood to be under consideration at this stage. And in fact, NRC meeting as soon as next week to discuss, these names. Now, what we are also picking up that simultaneously, the bank may also seek a 3-month extension for Mistry tenure, subject to approval from Reserve Bank of India to ensure continuity while selection process still under progress. So Mistry, for that matter, a veteran banker appointed as an interim chair, but indication coming from the top sources, that the possibility of him continuing as a full-time chair role may not be considered due to potential conflict of interest and his existing commitment on couple of related entity, boards. So do note the fact that both the top position, your CEO, HDFC Bank CEO, and chairman role hinges very much on the law report as well, which could be submitted to board this month itself, is the indication we are getting. So in short, bank has both planned ready. One, to come up with a shortlisted candidate for the chairman role in case RBI doesn't agree to even extension. So NDTV Profit detailed email query to HDFC Bank, remain unanswered till put this story on air.
Okay, thank you, Shrimi, for that. So, Plan A and Plan B both are ready in terms of HDFC Bank's board and management as to who comes in, whether KK Mistry gets an extension, and if not, a couple of other candidates that are being considered. That is what sources are indicating to Shrimi Chaudhary of NDTV Profit. But we'll quickly slip into a short break. On the other side, we'll get you top buy today and sell tomorrow picks as well, and lots more lined up. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the story.
Well, welcome back to India Market Close. I mean, it's that time of the day where we actually do herd on the street with Soumit Sarkar, but today I'm going to fill in for him with all the chatter that we're getting from the dealing room. First up, let's just pull up a few of the names which are buzzing. You have Colgate and Grasim, which we're picking up, where there are buy flows on large HNI and PMMS desk is what dealers are indicating. In fact, they're saying that there is an expectation of a strong fourth quarter number that could be coming in as well. So both of these counters that are in focus. Apart from that, Pine Labs and Lenskart are the other two names where buy flows are similar in terms of the HNI and the PMS desk. And again, a strong set of Q4 numbers are expected from both these counters. Lenskart is seeing some smart moves, but Pine Labs is under pressure in today's day of trade. And lastly, you have a Patanjali Food as well. Buy flows on the DII desk, you know, that's what is interesting on this one. Stock is up 3.5%. The delivery volumes are higher, and it seems that the selling is over, is what the dealers are saying when it comes to Patanjali Foods. And very lastly, you have Radico Khaitan and United Spirits, both of these counters from the alcohol space that are in focus, where multiple dealing rooms are recommending clients to switch from Radico to United Spirits, and that is an interesting trend. However, you have a Radico Khaitan which is trading in the positive as we speak, and a United Spirits which is absolutely flat. In fact, let's get an Ajit Mishra from Religare Broking as well. Ajit, good afternoon and welcome to the show. We have Mayuresh Joshi, Head of Research at MarketSmith India as well. Mayuresh, welcome. Ajit, let me come to you first. In terms of the names that we mentioned that dealer checks are indicating where there is some bit of a buzz, anything that crops up on your charts where you are seeing some interest?
Good afternoon, Hiral. So Hiral, Radico definitely tops that list because the stock is trading at the record highs, volumes are upbeat. And we have been seeing this decisive trend continuing from last several months. So means of late, yes, we had this phase of profit taking in the previous attempt. But now the stock is strongly holding above all the major averages with strong uptick in volumes. So this indicates the overall momentum is likely to continue, and 33.60, where we have the 20 EMA placed, can be the area where one can maintain as a stop, and hold their long position, can buy fresh also.
Individual, okay, so Radico Khaitan, all right. Mayuresh, I want to come to you on on a group of stocks, and we'll talk about it in more detail in just a bit. In fact, we'll get Jasmeet in to talk about the IT index as a whole. But you're seeing a second day in a row of gains for this sector. And there is a little conjecture at this point as to whether or not it is because of valuations. Is it because you might hear something from NVIDIA? What do you think is at play here?
So I think that's simple as that, Alex. Afternoon to you. I think the index had got beaten and battered down. Yeah. Markets were very, very volatile, and it becomes one of the safe havens of sorts till we receive some amount of clarity on the global macro front. And therefore, I think both these factors combined together have played a role in terms of ensuring that there are decent moves across the space as we speak. But fundamentally, I think the bottom line that underpins the entire underperformance still remains the same. The expectation in terms of growth levers are still missing. The expectations of the global AI trade and the massive investments that a lot of these hyperscalers have done and are undergoing at this point of time, and the deployment of their agentic tools. I think all these are probably very, very disruptive from a medium-term perspective. And therefore, growth levers are definitely missing. I think these two factors, one, I think volatility in the market as a defensive bet, it just props up. And second, I think from a price action perspective, I think it has got beaten down and battered down to a large extent.
Got it. Okay, let me go across to Jasmeet now, because really this is the sector of the day, and it's holding at over 3%. Pull up the intraday chart for the Nifty IT. It's holding at 3.3% gains. Jasmeet, what's at play here?
Well, Alex, thank you for that. There are multiple reasons why we see the IT buzzing in trade today gaining about 3.3%. Now, we've started with the main key reason. First one is the NVIDIA earnings, which is expected coming tomorrow post-market. Now, what we're expecting here is first we're looking at the overall AI to see the same spending momentum. Now, what happens is being NVIDIA into a chip maker machine, if they are seeing a good up move in terms of the overall buying and overall revenue top line, this would end up, say, giving an indication that the companies are spending on AI infrastructure. And for the AI infrastructure, they do require the overall IT services. That's why the IT is buzzing. The second reason is the rupee depreciation. The rupee has been depreciating and has been hitting record low since the Iran war. The rupee is roughly down 5.5%, and every 1% of rupee downtake would roughly add up 10 to 15 BPS into the overall margin. So, though it won't show up on the balance sheets, but it's still a positive up move for the IT companies given they earn in US dollar. Now, if we look at the third aspect, the Nifty IT has corrected severely over the last couple of months and over the last YTD basis as well. It's roughly down about 26%. While this shows a good buying opportunity at the current levels, given the valuations are at multi-year low. Now, fourth one is the overall valuation play where it comes in the picture. Though the mid caps are slightly expensive than the large caps at this point in time, but the large caps are really nearly at a 5-year low, and the current Nifty IT valuation altogether is as low as August 2020 level. That's roughly a 6-year low from the current levels. Now, look at the last aspect of what's overall helping the IT move is a cool off coming in on the back of that recent OpenAI-led sell-off. We are seeing people again showing the buying interest in the IT after the correction. Now, let's quickly pull out the overall chart and understand how are the valuations shaping up for the large cap IT firms. Now, if you look at the current PE, all of them are below the 5-year average. Something like a TCS, which stands at 29.8% currently standing at 16.25 odd times when you look at the current PE. Now, if you look at the key return potential and the mid cap as well, now how the mid cap is shaping up, if you look at the next chart for something like an LTM, even LTM emphasis, even all the mid-cap IT firms are also below the 5-year valuations, but they are on the slightly expensive. Large caps are between 15 to 18 times, but mid caps are between 20 to 24 times. When we look at the street call, the TCS with the highest buy rating of 35, followed by Infosys at 36, and the return potential is highest for TCS, Infosys, and HCL Tech. Now, what we see here is top 3 large cap IT firms are having return potential of roughly 20 to 25% for next 1 year, showing the up moves. While the mid caps, we see the return potential ranging between 8 to 19%, which was attractive compared to large cap 6 months ago. But given the large caps have fallen so much in the last 6 months, the large cap seems attractive compared to mid cap at this point in time. So all in all, we do see a good up move coming in IT, but it's a wait and watch of how does the overall NVIDIA earning turns up and how does the quarterly earnings starts impacting and starts moving up for IT companies going ahead.
Thank you, Jasmeet, for that. It's very interesting to see how your large cap IT has now become attractive vis-a-vis your mid cap IT, because the trend was exactly the opposite couple of months ago. Ajit, on the charts, are you seeing any further buying interest? What would your top pick be if you have to look at the IT index?
So Hiral, it's definitely interesting considering that last week the IT index was the biggest loser, and this week we have engulfed the entire losses. Means we are up roughly around 5.5% so far. So it's definitely interesting to see, but overall the texture has not changed much. Means it's just a rebound that we are seeing in the overall scheme of things, wherein the overall trend is still negative. So my recommendation is that especially those who were stuck at the higher levels, and if the view is short term, they may consider this recovery to utilize and reduce their position. While in the mid cap IT names, Coforge definitely looks promising the way the stock has rebounded. And in case if it manages to cross 1500 mark, probably we may see further recovery towards 1650, 1700 mark. But having said that, the overall texture is still negative. So it's basically exit opportunity to those who are stuck at the higher levels.
Okay, all right, exit opportunity. Ajit, I just realized that we didn't really take your individual stock idea. So let me ask you about that. It's also 317. And so therefore, it's a good opportunity to talk about shorter term trades that you might suggest.
So Alex, one sector which is definitely holding strong, irrespective of what we are seeing in the index, that's pharma and healthcare, where we are not only seeing the gains maintaining, but in fact continuing the up move with every passing day. So Apollo Hospital from the healthcare basket, wherein after this recent pause, we anticipate the up move to resume soon. So it's basically a buying opportunity which stop at 78.80 for the target of around 84.90 in the next few days. Then we have Varun Beverages after almost like a year-long corrective phase. The stock witnessed a breakout last month, and now after this marginal pause around the breakout area, we are seeing the stock is set for the next leg of the up move. So 555 is what we are eyeing as a target in Varun Beverages, with 495 as a stop loss.
Okay, now I just want to point out that we've seen a little bit of a slide in the benchmark Nifty 50 now, about 0.7% off the high point of the day. And just that last 20 minutes or so is when you've seen most of the slide. Pull up the broader markets as well. And to a lesser extent, you will see that there has been a decline here as well. So about 0.6% from the top for the mid-cap index, and about 0.2% or so for the small cap index. So it's small cap index is in fact holding. Quite a few stocks are continuing to buzz from the broader markets. And let's go across to Mahima now to get you that list of stocks. A few of them on account of earnings, aren't they, Mahima?
Right, Alex. So earnings plus some news flow coming in, right? So I'll start with Deccan Gold first, because this is one of the counters that's seen almost a gain of intraday high, in fact, of 10% in trade today, now trading even higher at that 12% mark. The company has basically discovered nickel and copper at its Chhattisgarh unit, and nickel and copper has been discovered after kind of completing 1200 meter of core drilling across 7 holes is what the company has kind of put out in their exchange filing. Plus, they're saying that low impact exploration activities will continue at this site. So this could, potentially, benefit the company, because we've seen in the past 2 years the company has, done, nothing when it comes to the top line. FY25 it was around 4 odd crore, and now FY26 they've done around 14 odd crore. So this could potentially, add to their top line. The next one is CMAC, where overall in terms of where the numbers go. So this is based on the earnings. Strong quarter, margins have expanded. Growth was led by higher deployment in CMAC 3 on lump sum contract basis. NLM 9 platform is revamping, and improvement in performance of subs has also kind of led to growth. Plus EBITDA has improved by higher deployment of vessels and incremental revenues from Dubai as well. Now in terms of where the numbers go, revenues saw an uptick of around 64 odd %. EBITDA saw growth of around 96 odd %. Margins improved to 48.7% versus that of 40.7% earlier, and net profits came at around 103 odd crore versus that of 43 odd crore. So more than double this year. Lastly, Astral. In terms of Q4 numbers go, strong quarter led by robust plumbing volume growth and recovery in polymer prices also helped aid that. Plus, plumbing business delivered industry-leading 24.2 volume growth, and overall Kanpur plant ramp-up also supported growth in North Indian market. So this is the overall view of some of the counters that are buzzing today and why, of course.
Okay, all right. Thanks so much for that, Mahima. Quick question to you, Mayuresh, on Deccan Gold. I'm assuming that you won't have coverage, but let me ask you about anything that emerges from the earth, right? Because ultimately you're talking about companies that are focused on minerals, and you can't substitute these. Ultimately, these are core to several businesses. So, is that something that you would be focused on a fundamental basis when everything else is uncertain?
Absolutely, Alex. And I think a lot of these mining stocks are actually giving strong indications in terms of the entire business model itself. If you look at NMDC, I think just as an example, right, the expectations in terms of the rare earth mineral corridors, I think that is going to be a huge say when it probably comes to the assets that they are probably managing. Godavari Power is something that we continue owning in our balance sheets. And therefore, I think a large part of these mining stocks, where mining operations have probably expanded, and the expectation is that with the expansion of their mining areas, I think the reserve ratios can actually shoot up quite drastically, along with other finds that they can probably do within the spaces that they operate out of, and mineral-rich belts that they operate out of. So I think mining stocks definitely remain on our focus and seem to be a good plausible bet.
Okay, and this is going to be interesting. You know what's interesting about Deccan Gold is where it's zero revenue company right now. So by the time revenues come in is the key question, because they will keep figuring out and exploring, but in the end, investors want to see the paisa. So that's what I want to see the gold. But wo paisa aega to gold dikhega na. That's the question.
In the Chhattisgarh unit, forget gold. They're talking about now nickel and copper,
right?
gold.
So yeah, but and copper is the new gold as well right now. So let's see where it lands up. But Mayuresh, apart from that, your defense companies somewhere have done really well in terms of the FY26 numbers that have come in, right? Now the question over here is, the order book is very strong. 27 probably will be a year where you will have to see execution pan out. Globally, if things settle down, and all of us wish that things do settle down on the geopolitical front, do you think they will still remain in flavor to the extent that they are in right now?
Quite possibly. But to answer your earlier question first, I think दो महीने पहले वो argument हुआ था कि data is the new gold. So I think the definition of what is gold keeps on. Having said that, I think coming to your question in terms of the question at hand, I think defense companies will do well. It's a structurally secular story over a longer period of time. Because of the order book that they probably have in hand, which gives them revenue visibility over the next few years. B, I think in terms of the orders that are probably coming through and the bidding that they're probably doing, the margins are reasonable for these orders. C, I think the export mechanism and the exports in absolute terms have compounded over the last decade or so, and might increase exponentially as we head and exit the next decade as well. Fourth, I think execution will not be linear, and therefore I think investors need to understand that this is not a quarter or two's perspective, but a perspective over a longer period of time, because there will be an execution challenge from one of the quarters in any particular year. And therefore, longer term, I think the story still remains intact. Solar industries, BEL, valuations might be sky high, but again, I think there are a lot of tailwinds to the sector.
As you mentioned, BEL, the numbers have just come in. Your profits have grown around 4.5%, 2,225 odd crores is what you're tracking. From the day's lowest levels, you're seeing some recovery coming in there. Revenues have grown 12%, 10,224 is the kind of number that you're seeing in terms of the revenues as well. EBITDA up 6%, 2,982 odd crores. So that number is above what the street was estimating in terms of where the EBITDA goes. Margins will be interesting to watch out for because the expectation was, again, always double digit. Around 28-29% is usually the kind of range that you watch out for when a BEL comes in. But 11 to 12% growth in terms of, revenues, profits up around 4.5%. The EBITDA number has exceeded estimates. And if you see in terms of the margins as well, I'm just waiting for the ticker to get me the margins, 29.2% versus a 30.8%. So the margins have gone down slightly this time around, and probably that's one of the reasons why you saw that little bit of a dip that did come in terms of the stock price as well. So that's with regards to defense players. Ajit, anything that you like from the defense pack?
The overall pack, largely they are performing well. It's just that we have had phases of some profit taking every now and then. But BEL definitely is among the top performing name. Despite the recent underperformance, we believe that once, let's say, the stock surpasses this 435, 437 hurdle, then probably we are set for the next leg of the year move. So here one can continue to look for buying opportunity in BEL till 410 is intact on the downside.
Ask you about a couple of stocks, Ajit, from the broader markets that are buzzing in trade. And in fact, let's pull up some of the big movers, right? Pull up the 500 if you don't mind. And Astral, of course, we've spoken about, but KC is losing about 4% or thereabouts. Berger is losing about 3.4%. Among the gainers, you have Triveni Turbine and Angel One. Angel One in the capital market play, Ajit, it doesn't have a trigger per se, but would you say that you can buy into Angel One at this point?
So Alex, a disclosure that we have recommended to our clients in the morning around 310, 312 levels, and with a target of around 328. So we met the target. The stock is back to the record highs. Overall, the capital market theme, if you see BSE and Angel One, some of these they have done exceptionally well, and we believe that this positive tone might continue in the coming days also. But at the same time, after 8% of rise in Angel One, I feel that one should wait and let the stock stabilize around the record highs before the first next leg of the up move.
So that's with regards to where capital market stocks go. We're just 2 minutes away from closing. Thank you, Ajit, and thank you, Mayuresh, so much for joining in. Always a pleasure to speak to both of you and get your insights. But very quickly, in terms of where markets go, we are actually ending, Alex, in the negative. 23,600 is what you're looking at, down 0.2%. When we started off India market close, we were somewhere still in the positive, but it's becoming a negative close altogether. Your advanced decline ratio, yes, the Brueth has moved, but it's still in favor of the advances. So that is one of the key positives that I could take from today's session. Bank Nifty also, which was flat, is now down 0.2%. Let's just look at the advanced decline ratio, in today's chart, and that will tell you how that has actually narrowed as well to some extent. Your advances have come down and your declines have increased. We started off the day with 455 declines. That's nearly doubled to 839 declines in trade today. Let's look at the heat map in terms of Nifty 50 as well to understand the individual stocks, and then we'll look at the contributors very quickly. IT continues to hog the limelight, second consecutive session of gains. Eternal, Tata Motors, PV, SBI Life, Adani Enterprises were a few of the other ones. Your PSU banking space is also looking pretty strong, but what was weak was a Kotak Mahindra Bank, was probably a ICICI Bank, HDFC Bank. So your private banking space was actually putting pressure in terms of the markets today. Titan, Tata Consumer, so a couple of Tata group companies from the consumption side also down in trade, along with Adani Ports, Coal India, Pharma Pack, so Cipla, Sun Pharma, Dr. Reddy's were a few of the names which were under pressure as we speak. So that's with regards to our markets. Let's just look at the contributors on Nifty 50, and then we'll look at the broader markets post that. In terms of contributors, HDFC, RIL, Bharti Airtel, ICICI Bank, these are the ones which have put pressure. In fact, Bharti Airtel, with the kind of surge that it saw in yesterday's session, that has actually given up gains in today's session as well. Apart from that, Infosys, TCS, it's mainly the IT counters which are trying to provide that support, but not enough to actually compete with the losers. Broader markets, let's pull up the mid cap and the small cap in today's chart and see what's happening there. You have given up gains from the day's lowest levels, but trading in the positive with gains of 0.7%, and the small cap 250 as well, which becomes important. That also has not given up gains. It's still above that 1% mark, which is a positive, where the flavor is the small cap and the mid cap space, and that's what everyone is watching out for. But clearly, the market breadth, not very, sustainable. There is a tug of war that we've been seeing over the last couple of days. The setup is very weak at the bottom. For it to catch up is going to be interesting to see. And keep your eyes on Nifty IT as an index, because NVIDIA will be reporting earnings tonight. Any positive commentary will have a bearing on Indian IT as well. But completely out of time. Thank you, viewers, for watching. This is a wrap on India Market Close on NDTV Profit from the team that put the show together, Alex and myself. Lots more lined up on the other side. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that has happened in today's trading session. But first things first, let's take a look at what the markets were up to, and it was a quiet day, largely a range-bound day that you were looking at. On the last street, Nifty holding close to that 23,600 level. Sensex as well slipped about 100 points thereabout at close as well, but the markets were steady. Momentum seems to be a little bit missing, closed in the red. That's both the benchmarks for you, and the broader markets were slightly outperforming the benchmarks. Moving on then, let's talk about a positive close coming in for the broader market, with most sectors ending in the green as well. Gains in fact were led by IT and realty stocks, showing strong traction through the session. In fact, pressure persisted when it comes to some of your defense and financial services names, capping overall upside as well, but the market breadth improved. Sectoral divergence clearly remained in play as well. Moving on then, let's talk about the rupee that hit a fresh record low, nearing the 97 mark against the dollar. Rising crude prices, weak capital inflows and higher US yields spelled trouble for the Indian currency. And you did have pressure building on India's external finances despite RBI intervention. Now, in terms of currency, it's now weakened nearly 6% since the Middle East war began in late February, making it one of Asia's worst performing currencies this year. And just for a little bit of background, India imports nearly 85% of its crude oil requirements. As oil prices rise globally, India has to spend more dollars on imports, increasing pressure on the rupee. Moving on then, let's talk about fuel prices in greater detail. In addition to OMCs, now fuel prices are back in focus, with OMCs also hiking petrol and diesel prices by another 90 paise per litre, taking the total increase to nearly 3.9 rupees per litre within just a week. You're looking at this sharp move coming in as OMCs continue to face intense pressure from elevated crude prices triggered by the Middle East conflict. And despite these hikes, companies like IOCL, BPCL and HPCL are still incurring losses of around 750 crore rupees every single day. And that, in fact, is the word coming in from the Joint Secretary as well quite recently. And you do have fuel that continues to be sold below cost as well, with quarterly losses estimated at somewhere close to 1 to 1.2 lakh crore rupees. The latest hike is more about limiting losses rather than restoring margins. On to Spark then, that reported a sharp swing into profit for financial year 26, but the headline numbers come with a caveat. In fact, the company posted a strong jump when you talk about the revenue. So somewhere close to 1,800 crore rupees, EBITDA and net profit also seeing a significant turnaround from losses. However, this performance has been largely driven by a one-off gain from the PRV sale rather than core pharma or even R&D operations. The stock was buzzing away in trade with that 11% uptick, but you do have some concerns around sustainability, with underlying business growth still a little bit limited at this point in time, making this more of a transaction-led spike than a structural turnaround. Moving on then, let's talk about Nifty IT that extended gains supported by a mix of global and domestic tailwinds, and talk about some of the sectors that were in focus. Now, when you talk about IT, you're looking at hopes of strong NVIDIA earnings that are lifting sentiment around AI spending. Weaker rupee continues to provide a little bit of support as well to export-oriented companies. And the recent OpenAI-led correction is now seen as overdone, with valuations turning more attractive and buying interest gradually returning to the sector as well. Let's get back to stocks, talk about Divi's Labs that was in focus as a dispute between Novartis and its Chinese partner raises fresh supply chain questions, about a 1% uptick coming in on this particular counter. And you're looking at regulatory concerns at a key plant that have led to a contract standoff, with Novartis now looking at alternative sources. Given its strong track record, you do have the existing relationship. Coupled with that, the company could see a gradual pickup when it comes to orders. Although the impact, when you talk about it, it's likely to build over time rather than immediately. On to CMEC that delivered a strong set of numbers in the fourth quarter, led by higher vessel deployment and improved execution across key contracts. Support from long-term contracts and better fleet utilization also helps drive both revenue and margins to record levels. The company also sees continued visibility. In fact, with contract extensions coming in from the likes of ONGC and incremental contribution coming in from its overseas operations, supporting the outlook. On to Eicher Motors that is in focus after it receives government approval for a large land parcel in Andhra Pradesh to support its next phase of expansion. Now, the company plans a higher than expected investment to significantly ramp up capacity over the next few years, led by both brownfield and greenfield additions. Now, when you talk about this particular expansion, it's likely to strengthen Royal Enfield's growth pipeline, with capacity set to see a meaningful increase in the medium term as well. Moving on then, let's talk about Deccan Gold Mines that is in focus, with the stock surging close to 11% after announcing a significant nickel copper PGE mineral discovery in Chhattisgarh. Key minerals, that have been identified here as well, and strengthening the case for what could be India's first integrated nickel copper PGE mine. And the company now plans to ramp up drilling to establish a mineable resource and fast-track regulatory approvals. When you talk about this particular discovery, it could be strategically important as well, especially as India looks to secure critical minerals for energy transition as well as defense needs. Moving on then, let's talk about Adani Power that is back in focus, with Jefferies maintaining a buy call and target price of 255 rupees, betting on a clear earnings turnaround. And it was, of course, a triple clearance that you had the Adani Group also get. But when you talk about the brokerage, just talking about Adani Power, they're talking about free cash flows turning positive by financial year 30, driven by a strong capacity expansion plan, ramping up to 31 gigawatts over the next few years. Now, crucially, when you talk about the risk profile as well, it's improving. Lower merchant exposure is something that you're looking at. And couple that with higher share of long-term PPAs locking in visibility, you're looking at an estimated 23% EBITDA CAGR and close to 15,500 crore rupees in free cash flow potential. The story is, in fact, shifting from volatility to predictability. Moving on then, let's talk about Vascon Engineering that was in focus, with the stock up about 5% even at close after bagging a 131 crore rupee construction order in Jamnagar. The project involves building 4 G+12 residential towers, awarded on a bill of quantities basis. When you talk about execution, it's expected to be completed within 19 months, adding near-term revenue visibility. And this order win, in fact, is coming in as the company continues to build its order book, with infrastructure and real estate execution remaining key triggers when it comes to growth. Let's also move on and talk about Apollo Microsystems that has delivered a strong set of numbers in the fourth quarter, with revenue jumping over 80% on a year-on-year basis, driven by improved execution and faster conversion of defense orders into revenues. Now, when you talk about margins, they've also expanded. You're looking at EBITDA margins inching up, signaling better operational efficiency. And when you talk about this particular counter, about 10% uptick is what you had coming in. So it was really powering through, and when you take a look at the earnings fine print, you'll know exactly why, because profitability has also seen a sharp uptick, just like the stock. Net profit almost tripling on a year-on-year basis, even as the company continues to scale. The standout, that's an all-time high order book that you're looking at, which provides strong forward visibility and underlines sustained momentum in defense-led growth. Moving on then, let's talk about Kirloskar Industries that has reported a largely steady quarter on the operational front. Though the profitability has seen a little bit of pressure, the stock, of course, on the flip side, did not see any pressure at all. 13% uptick coming in for this particular counter. And when you talk about the revenue, that's risen about 5% on a year-on-year basis. EBITDA also inching higher, keeping margins broadly flat at nearly 12%. However, net profit, that's the one that's declined close to 8%, indicating limited flow through to the bottom line. Despite that, the company has announced a final dividend of 13 rupees per share, signaling confidence in cash generation. Moving on then, let's talk about RITES that has reported a mixed set of numbers in the fourth quarter with strong top-line growth but pressure on profitability. Revenues jumped nearly 28% on a year-on-year basis, reflecting healthy execution across segments. However, EBITDA declined close to 9% with margins sharply compressing to around 22% from over 30% last year. When you talk about the net profit, that has also slipped marginally by about 2%, indicating limited conversion of revenue into earnings. Despite this, the company has announced a final dividend of close to 3 rupees per share, offering a little bit of support to shareholders. Moving on then, let's talk about Zydus Life that has delivered a steady set of numbers on the top line this quarter. This revenue rising over 16% on a year-on-year basis, supported by strong business momentum. Net profit as well came in higher, up nearly 9%, and the stock was of course buzzing away in trade, 3% cheering that healthy earnings growth as well. However, operationally, the picture seems to be a little bit weaker. EBITDA declined over 11%, margins sharply contracting to around 25% as well, from over 33% last year. Importantly, the companies also pointed out that EBITDA needs to be viewed adjusted for forex gains, indicating underlying pressure on profitability. Moving on then, let's talk about India's proposed free trade agreement with the European Union that could lead to duty cuts for sectors including agriculture and seafood. According to the Commerce Secretary, the official also said that this particular pact could help position India as an export hub when it comes to automobiles and manufacturing. Let's also talk about negotiations between India and the EU that are focused on improving market access, reducing tariffs, and expanding trade flows across sectors. When you talk about this particular agreement, it's expected to support Indian exporters by improving competitiveness in the European market. Both sides, in fact, are aiming to conclude this particular trade deal after multiple rounds of negotiations. Moving on then, let's talk about Ukraine's economy that is remaining resilient, has shown signs of recovery with GDP growing about 0.9% in April after slipping in the first quarter. When you talk about this rebound, it's been driven by sectors like retail, food and weapons production, helping offset earlier weakness. That said, the broader trend remains fragile. GDP is still down about 0.2% so far this year and had contracted 0.5% in the first quarter. So while momentum is improving, the recovery remains gradual amid ongoing economic pressures. And the Supreme Court has asked the Ministry of Electronics and Information Technology to examine a plea seeking recovery or destruction of Indians' personal data allegedly stolen and stored on foreign servers. Now, the petition also sought faster implementation of the Digital Personal Data Protection Act 2023 and stronger action against cyber fraud linked to data breaches. And the Apex Court has also said that the matter was highly technical and better suited for administrative and technological review rather than judicial intervention. The bench allowed the petitioner to submit the plea as a supplementary representation to MeitY. And moving on, then, India's peak power demand has hit a fresh all-time high as scorching temperatures and heat wave conditions push electricity consumption higher across the country. In fact, according to Power Ministry data, peak power demand touched a record 257.37 gigawatts on Monday, surpassing the previous high of close to 256 gigawatts recorded on April 25th. This year, the spike in demand, in fact, is largely being driven by increased usage of cooling appliances such as air conditioners and desert coolers amid rising temperatures across several states. Importantly, the entire power demand was successfully met without shortages. Moving on then, let's talk about Unacademy co-founder and test prep business CEO Sumit Jain, who stepped down from his full-time operational role ahead of the company's potential merger with Upgrad. And Jain is going to be continuing in an advisory role, and that's after June 30th, according to company statements. His exit comes as Unacademy and Upgrad seek regulatory approval for a proposed merger transaction. Jain had joined Unacademy back in 2020 after the acquisition of his startup OpenTalk, and later led key verticals including Graphy and offline operations. And Zoho founder Sridhar Vembu said that the company will not expand work-from-home arrangements despite PM Modi's push for fuel conservation. And Vembu said that long-term remote work can reduce collaboration, training efficiency and workplace learning for younger employees. He's also added that in-person interaction remains important when it comes to innovation, but also organizational culture. And the comments come as several tech firms continue balancing hybrid work policies with productivity and cost considerations. On to Meta then, that is planning a fresh round of layoffs on May 20th as part of wider restructuring linked to its artificial intelligence strategy. Reports are suggesting that the company could cut around 10% of its global workforce while shifting thousands of employees to AI-focused teams. The restructuring also includes reducing managerial layers and reorganizing teams into smaller operating units. And the move is coming in as Meta sharply increases investments when it comes to AI infrastructure and automation tools. The development, in fact, is highlighting growing pressure when it comes to tech firms to balance AI spending with workforce costs. On to Standard Chartered then, that plans to cut more than 7,000 jobs globally by 2030 as the bank accelerates adoption of artificial intelligence and automation tools. The reductions are going to be mainly affecting corporate and back office functions as the lender really looks to improve efficiency and profitability. In fact, the bank is saying that the move is part of a broader tech-led restructuring strategy rather than only a cost-cutting exercise. Now, the company is also targeting higher returns and stronger productivity over the coming years, so do keep an eye on that. But as of now, about 7,000 jobs cut there. Moving on and on to national news, then a major demolition drive is underway in Mumbai's Bandra East, with Western Railway targeting around 400 illegal structures in Garib Nagar. The 5-day operation aims to clear over 5,200 square meters of encroached railway land. Following a Bombay High Court order, more than 1,000 railway personnel and heavy machinery have been deployed with strong police presence to maintain order. However, the move has triggered protests from residents, with scenes of chaos as families gathered with belongings on the streets. And PM Modi continued his diplomatic outreach in Oslo ahead of the 3rd India-Nordic Summit, holding bilateral meetings with the Prime Ministers of Iceland, Finland and Denmark. Earlier, in fact, India and Norway elevated ties to a green strategic partnership following talks between PM Modi and the Norwegian Prime Minister. The two sides signed 12 agreements spanning clean energy, maritime cooperation, digital public infra, space collaboration and the blue economy. In fact, Norway also joined the Indo-Pacific Oceans Initiative, while both countries committed to expanding cooperation when it comes to sustainable growth and green shipping. And former Uttarakhand Chief Minister and retired Major General Bhuvan Chandra Kanduri has passed away at the age of 91. Prime Minister Modi expressed grief over his demise and remembered his contribution to public service and national security. Kanduri was known for his administrative reforms and infra-focused governance during his tenure in the state. Moving on then to the word coming in from the Apex Court that has refused to modify its earlier order on stray dogs, reaffirming directions to remove them from public spaces and reallocate them to shelters after sterilization and vaccination. The court has rejected all petitions seeking changes to the November 2025 ruling, signaling that the original directives will continue to remain in force. And that, in fact, is the word coming in from the Apex Court. Moving on then, let's talk about a transport disruption that may be brewing in the national capital, with taxi and auto unions calling for a 3-day strike from May 21st to 23rd. The protest is over rising fuel costs, with drivers demanding an urgent fare revision to offset higher CNG, petrol and diesel prices. In fact, unions have also warned that if the government does not act quickly, this sort of agitation could escalate into a larger protest. For now, commuters in the national capital may need to brace for a little bit of potential supply disruption and higher inconvenience later this week. And that's something that you're really watching out for. Let's also talk about a major boost to India-US defense ties. The US State Department, in fact, has cleared a $428 million military support package for India. This includes nearly $198 million for Apache helicopter sustainment support covering engineering, logistics, training, and technical services. Additionally, a $230 million package for M777 ultralight howitzers has also been approved to ensure long-term operational readiness. When you talk about this particular deal, it involves Boeing, Lockheed Martin, and BAE Systems as well that are expected to strengthen India's defense capabilities, but also deepen strategic ties in the Indo-Pacific. On to some international news, then tensions in the Middle East have remained elevated, with Iran issuing a fresh warning to US President Trump as well against any new military action at this point in time. Iran, in fact, is saying that the Strait of Hormuz will never return to its previous state, signaling a tougher stance on the critical energy route. And the warning, in fact, is coming in even as diplomatic efforts continue, as fears over global oil supplies remain firmly in focus as well. Moving on, then let's also talk about the word coming in from Russian President Putin, who's going to be in Beijing for a 2-day summit with Chinese President as well. And the summit is scheduled for May 19th to 20th, marking the second time that the Chinese and Russian leaders have met in just the past year, as Beijing seeks to manage ties with Washington and Moscow while positioning itself as a pivotal power in global diplomacy. Russia's invasion of Ukraine in 2022 left Moscow effectively isolated and heavily reliant on Beijing for trade under Western sanctions. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience.
Benchmark indices ended marginally lower after a range-bound session, with the Nifty closing at 23,618 odd levels and the Sensex settling at 75,200 mark. Rupee hits a fresh record closing low of 96.54 against the dollar, pressure building fast for the Indian currency. Petrol and diesel prices have gone up again. The second hike in less than a week. Shares of OMCs rise after enacting measures to shield against mounting losses. Oil prices fall but remain high as Trump holds off on Iran attack. Trump says serious negotiations are in place. Brent crude hovering between $108 to $110 a barrel. Putin heads to China, says Russia-China ties have reached unprecedented level ahead of talks with Xi. Putin's visit to Beijing comes less than a week after US President Donald Trump wrapped up his China visit. Prime Minister Narendra Modi continued his Nordic outreach in Oslo ahead of the India-Nordic Summit, holding bilateral talks with leaders of Iceland, Finland and Denmark, while India and Norway elevated ties to a green strategic partnership. Triple clearance for Adani Group in the US. Justice Department has dropped all charges against Gautam and Sagar Adani, closing the New York fraud case after prosecutors said the allegations could not be sustained. All India Organization of Chemists and Druggists call for a nationwide strike on May 20th. The Pharmacy Association is demanding adequate regulatory oversight governing online medicine sales against the aggressive discounts by online pharmacy platform. Government assures no disruption in services. Shocking alleged dowry case has sparked debate nationwide. A lookout notice has been issued against the prime accused, Tushar Sharma's husband, in connection with the case of her suspicious death. Hello and welcome viewers, this is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest updates on markets, national as well as international news. Let's begin this evening by first checking on how the action today was on Dalal Street. Benchmark indices ended the day in the red after a range-bound trading session. The Nifty closed below the 23,650 odd mark, while the Sensex ended lower at 75,200 odd levels. Kotak Bank and Tata Consumer were among the top laggards on the Nifty, though broader markets outperformed benchmarks and sectoral trends remained mixed. My colleague Parth now joins us with all the market action. Parth.
So Nifty has closed below 23,650, down by almost 0.2% today. Kotak Mahindra Bank and Tata Consumer Products were the top losers in Nifty, both of which were down by over 2% today. The broader market has outperformed the benchmark today, with the Nifty Midcap 150 snapping its two-day losing streak and gaining over 0.5% today. This was led by Tata Technologies and IDBI Bank, both of which were the top gainers in Nifty Midcap 150 today, up by over 5.5%. Nifty Small Cap 250 has also snapped its two-day losing streak, gaining over 1% today, led by Triveni Turbine and Angel One, both of which were up by over 8% today. Now moving on to sectors, we saw a mixed performance with Nifty IT being the top gaining sector, up by almost 3%, and this was led by Coforge and Infosys, which were the top gainers in Nifty IT, both of which were up by over 4.5% today. On the losing side, we saw Nifty Financial Services, which was down around 0.2%, which was led by Kotak Mahindra Bank. Now moving on to sectoral trends, Nifty Pharma has ended in green for the 5th day in a row, while Nifty IT ended in green for the 3rd consecutive day. About others, Nifty Metal and Nifty Bank have ended in red for the 3rd consecutive day, while Nifty FMCG has also closed red for the 2nd day in a row. Also, Nifty Oil and Gas, Nifty PSU Bank and Nifty Realty have snapped their two-day losing streak.
Well, thank you so much for all that summary on today's market action. Viewers, market veteran Sameer Arora believes India's markets are still in a strong position despite global uncertainty and rising oil prices. Speaking to NDTV Profit, Arora said India can handle crude oil even if prices touch $100 a barrel, adding that a higher import bill is not the end of the world. Listen into his view.
It is not that the currency market is independent of the stock market or that the stock market is independent. They all feed on each other in that sense. It's just that maybe they have gone on too far, and now we are obviously hoping that there is some improvement in the Iran war, and therefore a little bit oil falls. It's not necessary that India cannot handle $100 oil. because in a macro sense, the dollars involved are not as much as the panic that we are seeing.
Viewers, but despite that confidence and optimism, I'd say, the Indian currency has been hammered down to multiple record lows just today. It slipped to a fresh record low of 96.57 against the dollar as volatile crude oil prices and escalating geopolitical tensions in West Asia continue to pressure the domestic currency. And look at the way oil prices have been swinging, especially in proportion to Trump's remarks on the Iran war. Yesterday, international crude benchmarks rose after Trump warned Iran that the clock is ticking, in his words. And today, Trump said that he would postpone a planned military strike on Iran following requests from key Middle Eastern leaders. This has eased fears of an imminent escalation that could disrupt global crude prices and supplies. And therefore, the result is on your screen with regards to how crude has behaved today. So until a deal is done, India will do all it can to protect its import bill. Oil will most likely continue to see a seesaw momentum, and geopolitical uncertainty may cloud equity aspirations in the short term. But listen in to what Trump exactly said.
Well, other countries have come to me and they've said we were getting ready to do a very major attack tomorrow. I've put it off for a little while, hopefully maybe forever, but possibly for a little while, because we've had very big discussions with Iran. And we'll see what they amount to. I was asked by Saudi Arabia, Qatar, UAE, and some others if we could put it off for 2 or 3 days, a short period of time, because they think that they are getting very close to making a deal. And if we can do that, where there's no nuclear weapon going into the hands of Iran, I think, and if they're satisfied, we will be probably satisfied also. We've informed Israel. We've informed other people in the Middle East that have been involved with us. I was called by these 3 countries plus others, and they're dealing directly with our people and right now Iran. And there seems to be a very good chance that they can work something out. If we can do that without bombing the hell out of them, I'd be very happy.
Maybe Trump has held off its attack on Iran, but days after announcing a standard 3 rupee per litre price hike in diesel and petrol, India's state-run oil marketing companies have introduced another hike of 90 paise, taking the total price hike in fuel prices to 3 rupees and 9 paise per litre. The hike in domestic prices come as OMCs, which are oil marketing companies, have been bearing the brunt of elevated global crude oil prices due to supply disruptions amid the Strait of Hormuz blockade. My colleague Somit breaks it down. How much would be the impact on consumers and OMCs, Somit?
This is the second price hike that we are seeing in the last 4 or 5 days. To be approximate, 4 days. Second hike in the last 4 days that we are seeing for petrol and diesel. And this time the hike is anywhere around 0.9 rupees per litre, which is much lower compared to what the first hike was, which stood at close to rupees 3 per litre. Now, why this hike? Because earlier the government had clearly made a statement that the oil marketing companies are staring at a loss of close to 1 to 1.2 lakh crore rupees for the first quarter of FY27. To lower this losses, we are seeing this price hike coming in from the oil marketing companies on petrol and diesel. Now, what could be the impact on the oil marketing companies? Now, as per analysts, every 0.5 rupees per litre increase in the fuel margin will lift the EBITDA for IOCL, BPCL and HPCL from anywhere between 7 to 11%. And to just give a simple math from what the statement we had earlier, now, as per the minister, the daily oil loss was around 750 crore rupees per day. Daily loss for the oil marketing companies stood at close to 750 crore rupees per day, and this was after the hike of 3 rupees per litre. Now, that hike had lowered the losses by around 25%. Now, on a daily basis, India consumes close to 463 million litres of petrol and diesel, of which 90% originates from the state-owned oil marketing companies, that is IOCL, BPCL and HPCL, which stands at close to 417 million litres. So, assuming this 0.9 rupees per litre translates into a profit of around 38 crore rupees per day, which will this amount will reduce the loss for the oil marketing companies by another 5% odd. So this couple of price hike that we have seen in the last 4 days now reduces the losses for the oil marketing companies by at least around 30% odd.
Okay, so losses have been reduced by 30% odd, but as Somit rightly mentioned that this is the second hike in just 4 days, but the government is following a calibrated approach on fuel price hike. And these are not my words. These were said by M.K. Surana. He's a former chairman and managing director of state-run OMC HPCL. But the real question is the second 90 paise hike enough amid the rise in global crude prices? The answer to that lies in his statement. Listen in.
Because there are 2 price hikes within a week, it means that government is willing to bite the bullet. That is one. Second, the very fact that the price hikes are lesser than what was anticipated, it means that the government is still following a calibrated approach. And it is trying to protect the consumer as far as possible and as long as possible. Now, the third part is that whether this 90 paisa is good enough. The question is that if you see the last price hike, at that time, the crude price was around $107 and the exchange rate was around 95.1 or so. Today, the crude price is around 111 and the exchange rate is around 96.5 or so. It means that the 90 paisa will be lesser than what would have been required for the increase in the crude price and the exchange rate in last 4-5 days itself. So I think government is still following a calibrated approach and keeping its options open.
Viewers, so we gave you the news, we gave you an analysis, and we gave you an industry voice. Now it's time to listen to what people have to say. My colleague Anuj Raite joins us with a ground report on people's reaction on the same.
Well, yes, if you speak about Mumbai, the petrol prices now have increased to 107.5. 107.51, and as you can clearly see, this is the second hike that has taken place in the last few days. I'm standing on one of the petrol pumps here in Worli where people are queuing up to get their vehicles filled up with fuel. I've got one such individual here with me. Excuse me, sir. पेट्रोल का प्राइस वापस एक बार बढ़ गया है 0.91 पैसे से, इस बार 0.91 रुपीस से इस बार प्राइस बढ़ा है. आप पेट्रोल यूज़ करते हो, क्या कहना चाहोगे आप पेट्रोल प्राइस के बारे में?
इतना प्राइस जो डेली बढ़ता जा रहा है, सो उसमें नॉर्मल लोगों को तो प्रॉब्लम आ ही रही है और इतना हेक्टिक हो गया है लोगों के लिए कि हम एवरी वीक में एक बार पेट्रोल भराने जाते थे तो अब वो 10-12 डेज़ के बाद भराना पड़ रहा है. ट्रैवलिंग थोड़ी कम हो गई है और बहुत हेक्टिक हो गया है सब चीज़ों.
There you heard it from the normal Mumbaikars who use vehicles on a regular basis, and they are sharing their problems with the price rise. You see, it is not just limited to the fuel price rise, because as we've been discussing it since morning, it also affects the corresponding businesses like deliveries, like the hike in the ticket prices, which might happen as far as even ST or state transport system in Maharashtra is concerned, and it has surely given a hit to the daily lives of Mumbaikars.
And viewers, apart from oil, there's another commodity that's in focus. The International Sugar Organization has flagged the risk of a potential global sugar deficit in the 2026-27 season, warning that El Nino conditions could hurt harvests across key Asian producing nations. While the market is currently staring at a surplus, weather-related disruptions remain a major concern for the upcoming season. My colleague Sharad joins us with more details of the same. Sharad.
There is a concern, especially for the Indian sugar players. Why? Because there is an issue of the harvest which can be impacted for the next season because of El Nino. Remember, this season the numbers were pretty strong for the global sugar production, a higher output coming in for both India, Pakistan and Thailand as well. And there's a surplus also. But for the next season, that's where the concern starts coming in. Sentimentally, the impact is negative here because of this harvest. And the idea is that the domestic prices might cool off also. Remember, last week itself, government also announced and they banned sugar exports from most of the countries except North America and Europe until September 2026. And also remember that the global sugar prices, the moment ISO came out with its forecast, started falling. For the last 3 days, global LME prices is down 5%. And from March lows itself, however, because of the rising crude prices and their derivatives, even the sugar prices went up, and because of that, we can of course see some interest in ethanol diversion as well. But what's there for the next 3 months, that's important. There's a neutral pricing expectations in the global market, and the precautionary stock building might happen because of the potential disruptions due to the fertilizer shortage, and there might be increased price hedging amongst the importers as well. So this is the entire picture for the global sugar as well as the domestic sugar industry.
Right, thank you so much for that 360-degree view. But to understand the likely impact on crops and sugar output, let's listen into what agriculture economist G. Chandrasekhar had to say on this development.
We should not read too much into the El Nino forecast, number one. But that does not mean El Nino does not exist. El Nino is looming, number one. Number two, the IMD has very clearly said that by the end of this month, end of May, they will come up with region-wise forecast of rainfall. And therefore, it is not the total quantum of rainfall by the end of September that is important, but what is important is the spatial and temporal distribution of rainfall.
Moving on, viewers, India's peak power demand has hit a fresh all-time high as scorching temperatures and heat wave conditions push electricity consumption higher across the country. According to Power Ministry data, peak power demand touched a record 257.37 gigawatts at 3:42 p.m. on Monday, surpassing the previous high of 256.11 gigawatts recorded on April 25th this year. The spike in demand has largely been driven by increased usage of cooling appliances such as air conditioners and desert coolers amid rising temperatures across several states. Importantly, the entire power demand was successfully met without shortages. The Power Ministry now expects peak electricity demand to climb further and touch 270 gigawatts during the ongoing summer season. Meanwhile, Prime Minister Narendra Modi continued his diplomatic outreach in Oslo ahead of the third India-Nordic summit, holding bilateral meetings with Prime Ministers of Iceland, Finland and Denmark. Earlier, India and Norway elevated ties to a green strategic partnership following talks between PM Modi and Norwegian Prime Minister. The two sides signed 12 agreements spanning clean energy, maritime cooperation, digital public infrastructure, space collaboration and the blue economy. Norway also joined the Indo-Pacific Oceans Initiative, while both countries committed to expanding cooperation in sustainable growth and green shipping. The India-Nordic Summit is expected to focus on trade, clean technology, climate action, innovation, and Indo-Pacific cooperation amid evolving global geopolitical dynamics. Viewers, sources tell NDTV Profit that HDFC Bank's board is likely accelerating the search for a new chairman, with KK Mistri's interim tenure set to end next month. Sources say the Nomination and Remuneration Committee is currently evaluating potential candidates, with 3 to 4 external names believed to be under consideration. We're also picking up that the bank may seek a short extension of around 3 to 4 months for Mistri's tenure, although that would require RBI approval. HDFC Bank has not yet responded to NDTV Profit's email query so far, and that's an important point to take note of. But moving on, Adani Enterprises has reached a settlement with the US Treasury Department's Office of Foreign Assets Control, or OFAC, in a sanctions violation case related to alleged Iranian origin LPG imports through Mundra Port in Gujarat. The company agreed to pay $275 million to settle potential civil liability. Let's go across to my colleague Nimit, standing by for more details. Nimit.
Yes, so this is actually a triple win for Adani here. Over the last week, they've settled all their 3 big pending cases in the US. Of course, most recently with the OFAC, like you said, but also with the SEC and the Department of Justice. All 3 have been cleared. First, let's look at the US DOJ criminal charges. This was the big one that's been going on for 2 years. It was about bribery and fraud, and that's now been cleared. The second big case was with the Securities and Exchange Commission. This was a civil crime because of disclosure, misleading disclosures. This has also now been cleared with an 18 million penalty. Thirdly, there's the OFAC case with the US Treasury Department. This has also now been cleared. This was the alleged LPG sanction violation with Iran. That has now also been cleared. Now, let's have a deeper look at all 3 of these cases one by one and understand what they mean. Let's first move to the DOJ case. Now, remember, the case with the DOJ was about got criminal charges. This was the long running case that's been going on for about 2.5 years now, where the DOJ was looking into alleged bribes and frauds that were allegedly paid by the Adani Group to gain some solar contracts. Now, this has been going on for 2 years. Adani has maintained that it did no wrong. That has finally come through, and the DOJ has dropped those charges in the case. Important legal overhang this was for Adani because of its investments and for finance. That has now been cleared. A very important point to note here is that the case has been dismissed with prejudice. What that means in legal terms is that this case cannot be reopened again. It has been permanently closed. Now, the prosecutors here have dropped the probe completely after a long investigation period. Legal experts say that this means that they likely did not have a case strong enough to go to court with this, and that's why the settlement talks were on, and now the charges have completely been dropped. And lastly, it's also important to see that the closure marks a decisive legal moment for Adani, who can now go forth into the global world as it has been doing without this overhang of a legal regulatory proceeding against them. Next, let's move on to the Securities and Exchange Commission's large case that's been going on, but the largely civil case that's been going on for misleading disclosures. Now, the case has ended with a small settlement amount. Legal experts say that the settlement amount of 18 million is very standard in these cases. The SEC most likely settles most of these civil cases, and that's what's been done here. This was a rather smaller case that was against Adani, not one of the bigger ones. In any case, these misleading disclosures, the Adani said that they did not make these disclosures. What really happened was that all of this happened in India, related to events in India, and the US did not have jurisdiction or the ability to try the case. And the SEC, while not directly saying that, but with not admitting or denying Adani's guilt, has decided to settle that case. No admission of wrongdoing in settlement is one of the key findings of this settlement proceeding. This is not very standard because the SEC may not have had the evidence that it needed to proceed with the case. That's why this sort of finding comes. The civil case exit clears the path for Adani's global capital market raise. Global capital, of course, comes with certain conditions, and companies struggle to raise money, especially at the Adani Group's level, where there is even an allegation against them. That's been lifted, and the global capital markets are now open to Adani completely. Regulatory cleanup strengthens Adani's investor narrative. Of course, the same thing that we've been saying for a bit, that it's been moving forward for a bit. The allegations have been sitting over their head like a cloud. That cloud has now cleared over their head. The last proceeding that we got information about last night, in fact, is the OFAC probe. Now, this was into LPG imports into India, bypassing Iranian sanctions. Now, this was all allegations that were made. Adani Group has been challenging these allegations again with the US regulator and the US Treasury for a long time now. That has been cleared. The Adani has denied this wrongdoing throughout these proceedings, and also this settlement resolves any sanctions liability without prolonged litigation. While they've been denying it, but if they hadn't settled this matter and paid that 275 million, they would have prolonged litigation that goes on in the US for a long time. That again creates that legal cloud over their head where they cannot do business fully and freely. Now, the Treasury deal draws a line under the Iran-linked probe. Now, what this means is that this Iran-linked probe, because of sanctions violations, opens a whole new gate, a plethora of different legal issues that may arise. That's been closed for Adani now for the time being and permanently in this case. Now, the OFAC resolution also completely keys us into this legal wrap-up of what Adani is doing here. There were 3 pending cases against them. All 3 have been now closed against Adani. These 3 pending cases were hanging over them for 3 years now, 3 years, 2 years, and 1 year respectively. They've now been closed. This final closure clears the deck for global expansion push.
Thank you so much for that, Nimit. A lot of information to wrap around, I must say, but then many positives. In fact, after Adani Group closed US regulatory probes, experts are betting big on the group. While speaking to NDTV Profit, Swapnil Kothari, senior lawyer, Supreme Court, and HDFC Bank's chairman KK Mistry gave their insights on how the settlement will be a big relief for the investors and also a major boost for India's economy. Let's listen into their remarks.
I think in India, they have the highest standing in terms of credit. In the international market, this SEC matter could be playing on the minds of certain lenders, certain banks globally. And with this matter being put to rest, I think their borrowing costs would also improve, and there'll be more banks which would want to come forward and lend money to the group. So if they were able to raise funding from overseas at an even lower rate, then that will contribute in an even more meaningful manner to India's growth story.
A lot of people internally within the United States have complained about it, that these laws are way too strict, way too tight, and the interpretation of it is way too strict, so as to literally suffocate and asphyxiate people who want to do business, not only within the United States, but people from outside the US who want to do business. So that is where I think there'll be a lot of corrective mechanisms going forward by the United States to ensure that it still remains the most business-friendly country, so-called business-friendly country in the world, where literally the Adanis and the Ambanis and all the other conglomerates literally have no problems in lifting money from their banks, because that is what they want. They want their banks to lend out money to us. And if these are the kinds of situations that are going to accost me as an Adani group, I'm going to be thinking twice that, okay, be that as it may, I'll have to deal with the United States, but let me engage US lawyers in the first place to ensure that I'm not, I'm towing the dotted line. It's as simple as that. But it is overreach. Absolutely an overreach.
Viewers, it's now time for a national story, a story that has been ruling our algorithms recently. The mystery surrounding the death of Twisha Sharma is deepening with every passing day. Even as investigators piece together the final moments before her death, the hunt is intensifying for her husband, Samarth Singh, a Bhopal-based lawyer who remains absconding after an FIR was filed in the alleged dowry death case. The Bhopal police have now launched a full-scale manhunt. The Deputy Commissioner of Police has announced a reward of 10,000 rupees for any information leading to Samarth's arrest, and a lookout circular has also been issued against him. Meanwhile, chilling CCTV visuals accessed in the case show Twisha heading towards the terrace moments before chaos erupted inside the house. Soon after, panic appears to unfold, with two men seen attempting CPR one after another as family members rush in and out. The mother-in-law is briefly seen checking on Twisha before heading downstairs, and shortly after, three men are seen carrying Twisha down to the terrace area. The visuals are now expected to play a crucial role in the investigation. But that brings us to the end of this edition of Profit 360. Stay tuned. This is Malika Mishra. Thanks so much for watching NDTV Profit.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance
Presented by Canara Bank. Together we can.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. This is the show where we get you interesting companies, be it earnings, small caps, mid caps or any type of a hidden gem. Today also we have one interesting company, but before that, let me see if you can guess that company or not. It's the second largest player in the Indian tile industry. Of course, you must be getting a couple of options by now. They delivered a very strong operational Q4 numbers and because of that, the stock is also showing good momentum. Also, the third important, hint is the stock is up 32% from March lows, and I would like to put in one more bonus hint for you. Now, I'm sure you'll be able to guess it. The brand ambassador is Salman Khan. So now you're trying to understand which company this is all about. But to put that in perspective, this company is Calcutta-based company. It's from West Bengal. It is Somani Ceramics. This is the company which we are talking about. A little bit of rebranding also here last time which I saw the logo. But why are we calling this company? Of course, this is on the numbers, Q4 numbers. That's one of the most important questions to be asked. And the company has actually done well. The first question is why we are getting this company is the Q4 numbers. Q1 numbers, especially because of the rising costs, will that be impacted? That's the first question to be asked. Second question is the price hike. Will we see more price hikes happening? At least we have seen in the month of April already. Will it go more? Also, the third important questions to ask is the FY27 volume and margin outlook. How much growth is expected in the tile segment or the ceramic segment? And also the demand. Will it be muted from the real estate segment going ahead? Or is there something else to this story? Apart from that, the question will be the current plant capacity utilization and overall the capex outlook if the company is doing. I remember around 80 to 90% is that number, and also of capex, whether the company wants to do capex in this type of market scenario or not. So these are the key questions we will be asking this company, and of course the market share picture, because whenever there is a stress in the industry, there is a market consolidation and some benefits might come in here as well. And Abhishek Somani, the MD and CEO of the company, will be answering all our questions. But let's try to understand what the company actually does and understand which new segments the company might enter going ahead as well. It was founded in 1968 and it's India's second largest tile player in terms of market share. Also, it deals with tiles, sanitary ware, and recently you could say bath fittings also the company has gone into. But let's see how the capacities actually pan out. A tile capacity is roughly 75 million square meters per annum. Also, after tiles segment, we are having the sanitary ware capacity and lastly the bathware fitting. So three major drivers when it comes to the overall capacity. But apart from this, let's see what else is there details which should be in your radar, and that is the exports. They do it to 46 countries across 6 continents, and that is where it becomes a global player. Almost 9 manufacturing capacities are there. Also, they're spread out. It's not only Gujarat and the Morbi cluster, that's where the concern comes in, but Haryana and Andhra Pradesh is also there. So they have geographical diversification also. Almost 2,900 network of dealers and 514 showrooms in India itself. This is the key details coming in. But the tile volume sales which have happened, Q4 you take it or even FY26, it's not been that strong. Just 2% growth has. So a little bit of concern on the volume growth front as well. Sales mix, let's see how things pan out. The own manufacturing is just 26%. So at times it is asset light. That's why the ROC numbers might be on the higher side. 34% is roughly the, you could say the JVs and other segment also. That means outsourcing also happens. So it's a kind of an asset light mode as well. Q4 numbers, that is one of the main reasons we are getting the company. They have hiked price hikes between 16 to 70% in the month of April as well. High utilization has boosted the margins. As expected, that was a weaker quarter, but the company has done well. Also, 82% utilization is coming in tiles. Let's look at the other segment also, what the utilization level stands, and that's roughly 83% in the sanitary segment and almost optimum capacity in the faucets. It's a part of the fitting segment, but largely in FY27, the growth outlook, they're expecting a single-digit volume growth in tiles. They have been stating about that, and a double digit when it comes to the sanitary ware. Of course, this is having a higher margin as well. Also, 100 and 150 basis points of EBITDA expansion is expected in FY27. But what may work for the company? That's very much important to understand. As I mentioned, benefits of consolidation and market share gains. That's the first point. The second point, better pricing power. They're able to give out price hikes in a much better way as they are kind of an industry leader. Diversified manufacturing setup. मोरबी में impact जरूर आया है, लेकिन इनके धंधे में of course देखा जाए North India, South India also they have manufacturing setup, and that has not been impacted. Improvement in the working capital and the reduction in net debt. Of course, business is something important, but the working capital ratios and balance sheet is also improving. No major capex they have planned in FY27. That means a little bit of conservative stance, and maybe that's why the market may reward this company. So these are the reasons what may work, but what may not work. Kya concerns it? This is of course the demand for real estate. That numbers are not very big as well, so it's mixed. So some kind of impact can definitely be there. Both propane and LNG prices are high. These are the raw material costs when you build a ceramic sector or the tile industry. That is where the impact comes in. और ज़्यादा impact March quarter में नहीं आया है. The impacts have started coming in April and May. April has already seen a slow demand owing to the low Morbi JV volumes as well. So concerns are definitely there, and this is one of those sectors which is not widely tracked, or you could say is not that favorable as well. But that's our duty to find, whether any alpha is there in these sectors or not. But in a KYC show, what are the important rating parameters we should understand? Income statement, balance sheet, cash flow, these are the important ratios which are there from the financial statements. Return ratio is something we should be looking at as well. Shareholding, has the promoter's stake changed or FISDIs have lapped up? Street cred, of course, we'll try to understand short-term basis how much money has been done. Is there any issue on the long-term basis if you're holding the stock for a longer period of time? And valuations, we'll try to compare it with Kajaria Ceramics because that's the only apple-to-apple comparison, and the outlook as well. How things pan out going ahead seems mixed right now. But let's start with income statement, the first rating parameter, and see what's happening. The 3-year CAGR numbers have been largely flattish. Nothing much interesting, nothing very big of growth coming in. So a little bit of concern coming in. But the Q4 numbers on the other hand, that showed a good resilience. Why? Because people expected it would be under a pressure quarter, but the company did definitely a good turnaround. Just look at the jump happening from this 8.1% to 11.2%. So this is where the margin up move has happened. Of course, the capacity utilization is still on the larger side. And just look at it, the trajectory, and now a very big move happening at 11.2%, that margins coming in. So definitely the margin has done well. So it's kind of negating. Past might be a bit flattish, but there is, signs of reversal happening in, especially in the fourth quarter. The question is it an inflection, or there is a pain back in this in first quarter? So right now it's a neutral rating when it comes to the margin trajectory. Let's talk about the balance sheet. Also, the balance sheet is showing good strength. Why? I'll explain you. The borrowings, the net debt to ratio, if you talk about it, that is coming down. And during this time, the company is not expanding also. So your ROC numbers also expected to look nice. And the balance sheet management is really strong, and is the working capital days also. So net, I'm going to give this a thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet, but let's try to understand the cash flows. And of course, the cash flow improvement has also come in this space as well. From FY24, there is a good move at 247 odd crore rupees. Of course, the net operating cash flows, they have also improved. So net, there is a strength in the cash flow segment. But nevertheless, remember, take things with a pinch of salt, especially over the next 2 quarters. It will be volatile for this industry. Because of that, I'm going to give this a neutral rating. I spoke about company's capital allocation policy. I spoke about the return ratios, and now it's at a healthy pace, and it has maintained itself at least for the last 3 years between 12 to 14 odd %. And the way going ahead, the capital allocation policy, no major capex is there. So we might see these numbers on the slightly on the higher side as well. The way they have maintained it, it's a strong thumbs up when it comes to the return ratio, especially the return on capital employed. So 4 ratings are done. let's talk about the shareholding, and there isn't much to talk about it. Nothing has changed. Promoter stake वही का वही रहा है 2 साल में. FIs and DIs also largely haven't moved much. Slight, increase coming in from the FIs, which is very minuscule. For DIs, a slight dip, but net it has showing a strength across all the holdings which are there from the respective folks like promoters, FIs, DIs, and public. So it's a neutral rating when it comes to the shareholding segment. Let's move on to street cred. How things are panning out. Did the stock actually make money for you, or is this stress, or you could say, is there a stress in this sector? And yes, there is a stress in this sector. Why? I'll explain you. From 2025 highs, the stock is still down 25%. Of course, its peers have also been impacted. So has the company been. From March lows, of course, we saw a lot of mid-cap, small-cap going up. And over here, this company went up 32%. But if you are a long-term investor, 1 saal mein paisa nahi bana, stock is down 6%. And if you are holding the stock for 5 years, the stock is literally flat, and that is where the concern comes as a shareholder for you when it comes to the street cred. So from this analysis, I'm going to give this a thumbs down for this segment. But if the prices have come down, do the valuations become attractive? Yes, they do become attractive, and because of that, of course, Kajaria Ceramics, there's a 12-month forward P is just 28 times. Compare that with Somani, it is 17 times. So there is a good discount if you compare it with the peer. But let's just see how the 5-year average P also comes in. Somani Ceramics, it's at 19 times. So it's still cheaper from its 5-year average P also. And of course, its peers' valuations is also cheaper than the 5-year P also. That means long-term average ho ya peer ho, usse sasta ye company hai. And that is why the risk-reward ratio becomes very good for this counter, and that is why I'm going to give this a thumbs up for this. But last one, let's talk about, and that is the outlook. Outlook is very much important. I had shared with you the EBITDA and the industry growth or the volume growth for the company, but apart from that, there are concerns on the real estate demand, and that is true. Also, higher raw material pricing may impact in first quarter. March में बहुत कम impact आया था, April में ज़्यादा impact देखने मिल रहा है. The propane dependent units have been impacted in the Morbi cluster. That's coming in from the management as well. We'll try to understand a little bit more. But on the other side, 21 analysts have 100% buy rating as per the Bloomberg. And of course, we see there is an up move here, return potential of 29%. अगले 12 महीना में टारगेट प्राइस 575 यानी कि 575 can be the target price, the return potential from current levels to almost 30% so there is risk reward ratio favorable, and I had mentioned you that, and because of that, still to balance things out, I'm going to give this a neutral rating when it comes to the outlook. But let's try to understand what's the entire KYC rating. So Somani Ceramics, has the company passed the test of KYC? And largely it seems like it has. Income statement and cash flows has been neutral, but the balance sheet management has been strong, be it the working capital or even the debt reduction. Return ratios, ROC levels improved. Of course, no major capex also. You can expect these numbers to go up. Street cred, the stock hasn't given much return to the investors, especially the long-term investors, and that's a concern coming in. But valuations are quite attractive, so I've given a thumbs up. And outlook is still neutral because the analyst community is bullish. But on the other hand, the rising cost, the demand is definitely giving us a gloomy picture about the sector as a whole. But nevertheless, it's a big company, so it might find its way out and be a benefit of market consolidation. But total rating parameter, we have given this company 5 out of 8. This is the number we are talking about. Largely, it's neutral to slight positive in the historical numbers which we talk about. And to understand more, we will be joined in by Abhishek Somani. He's the Managing Director and CEO at Somani Ceramics, and interesting snippets about him. He has almost 3 decades of experience, and the way he started in the company, he joined just as a management trainee in the year 1995, and now he is the MD and CEO, and of course he is also the ex-chairman council of Ceramic Tiles and Sanitary for 2021-2022. And we are joined in by Abhishek Somani. He's the Managing Director and CEO at Somani Ceramics. Good afternoon, Abhishek. It's always a pleasure to have you at NDTV Profit, and of course a good set of numbers, especially the margin front that actually surprised the entire market. Just wanted to understand, will this momentum continue in the first quarter as well? Because I presume that higher raw material prices are expected to hit the company in the first quarter. Just wanted to get your view on the Q1 outlook on that.
Yeah, hi, thank you for having me. I think what has happened is that the fuel prices is the major input cost, which is 30% of our input cost is just one element, which is natural gas or any gaseous fuel. So to that extent, we've been able to currently pass on the prices. Almost all of the prices have been passed on. As you can well know that March, because of old inventory and some other inventory at older prices, we had to put in a lot of material in the system. A lot of the other manufacturers dumped even more than what normally they would have done. So the dealership networks were completely filled with inventory in the month of April. So April was a flattish month. May onwards, we should start growing. So tiles being such a inexpensive product compared to its other peers, which is any other kind of stone or wood or anything else, I think there is enough and more for us to look forward to, even with the price increases. Because if you look at a price, the amount of price we have increased, it's almost as much as what it had gone down in the last 24 months. So we're kind of at neutral levels from 24 to 36 months ago kind of pricing.
And Abhishek, speaking of price, any kind of further price hikes we can expect in the coming weeks or maybe in the next 45 days?
That will largely depend on how the gas and the Brent moves, because most of our gas is linked with the international gas pricing and the Brent pricing. So if that goes up, then that's something which we will have to do at that time. But currently, we have outlook of what the prices are in June. The prices have gone up a little bit for the western sector, which is the Morbi units, the all of Morbi. So maybe there's a very, very marginal price increase of a rupee or two. But yes, there could be a small price increase in June.
Okay, so marginal price hike you can expect in June itself. That's what the management is talking about. But let's talk about the FY27. Let's take the whole year in view. You have given an EBITDA margin expansion of 100 to 150 basis points. And of course, growth, single digit growth coming in at least in the tile. Just wanted to get, what's the rationale for this outlook?
I think first of all, the caveat is that nothing else surprises us in terms of fuel or any other geopolitical issues. But having said that, I think we're in a good shape because capacity utilization should go up. There is trouble and there is pain in the Morbi sector. I think about 10 to 15% of Morbi will not start at all, which means that much less capacity coming into the market. From that point of view, like I mentioned earlier, tiles is still the most effective flooring and wall material from a builder point of view, from a consumer point of view. So therefore, we've had a poor 2 years of demand growth. We were seeing demand growth in the last quarter. In fact, since Diwali, we've been seeing some steady demand growth. That should, if that momentum continues over the year, we are looking at a decent high single digit growth, and that would push up our capacity utilization. Like you mentioned earlier in your show, that our balance sheet is strong, we have good cash flows, and no further major expansions this year. Therefore, with the capacity utilization going up, that would all come to the bottom line.
Right.
And even if this quarter there is a particular low demand, because when prices go up, it takes time for the market to absorb that pricing, get used to that new normal. But like I said, the product is so cheap compared to the other peers, there will be a pent-up demand, exactly how we saw after COVID. So I'm not really worried for the long term.
Okay, so tile will have a pent-up demand as we've seen in COVID. But how the real estate demand trends looking like? Seems a little bit of muted sentiment here.
Yes, so the real estate demand, as far as we're concerned, what you're talking of, the muted sentiment, is for the new launches and the new sales. But please let's not forget that whatever we are selling now is for those real estate projects which were launched 2 years ago. So all those are coming into finishing stages. Therefore, for us, that's not a worry immediately. That could be a worry a couple of years down the line. But for now, we are supplying to all those real estate projects which were launched a long time ago.
Okay, so you're not worrying for the existing projects, at least for the last 2 odd years. But just let's talk about the numbers also, Abhishek. The capacity utilization levels were around 80% plus. You're expecting this for the first quarter or the second quarter? How much these numbers can they go hit that 90% mark, or like to wait and watch?
So capacity utilizations currently, last year we finished at about 79%, and we are looking at about 83-84% for this quarter, because some of our plants only started from May onwards, and April. I think about 2 of our plants were shut even in April, although that's only about 10%, 15% of our capacity. Therefore, I'm saying that it would be in the mid 80s range or early 80s range for this quarter, and then it'll start moving up as the year pans out.
Okay, so utilization levels is around 80 to 85%, and then it keeps moving up. Abhishek,
Correct.
Apart from that, capex plans, of course, the maintenance capex plan is something which the company does. So have you purposefully, kept the capex plans on the lower side? What's the entire rationale behind it? Because of that, your balance sheet is also decent and your return ratios also improve. So just wanted to understand your thought process.
Yeah, so we put in about 550 to 600 crore rupees in the last 36 months in capacity building, and therefore our capacity utilization with the sluggish demand was low. We have more than enough capacity, considering that I'm using only 79% of the capacity. I have reasonable headroom to use more capacity. Also, I think in the Morbi sector, there's enough and more capacity available for me to outsource from. So there's no immediate need of capacity expansion. However, we are doing some balancing equipment and about a 20 to 30, in fact, a little more, 30 to 35 crore rupees spend on balancing equipment to make some of our units even more value added. That process has started now, and it will start yielding benefits from Q3 onwards. So we are doing a lot to make ourselves more and more value added in most of our plants. So that's happening as we speak.
Okay, so value-added products benefit starts coming in from the third quarter. That's a very important statement. Okay.
No. The value-added product benefits are already there. We are trying to make more of our plants value-added. So it's not that we don't make value-added right now.
Right.
It's just that we are equipping some other plants which had headroom for become more value-added. That's what I'm saying.
Right. So value added in manufacturing, and that benefit comes from the third quarter. Interesting. But let's give me a perspective, Abhishek. Whenever there is a stress in the industry, and which is definitely there, of course, larger players like yours, generally what happens, you mentioned 10 to 15% of Mobi players might not exist going ahead. So when that happens, there's a consolidation at place, and when there's a consolidation, there's a market share gain for larger players like you. So any numbers to it, or how do you see this?
Too early, because it's still very volatile, the situation. I think this is yet to be seen as to how long this whole war would last, and how long these propane and LPG and gas prices will hold at these levels. Obviously, there is very much a lot of more stress at these levels, because every time at a larger base, we increase prices by, let's say, given just an example, 15% price increases, that would tantamount to about a 30 to 35% price increase at a low base for the smaller Morbi players. So this obviously puts a lot of pressure on their margins, a lot of pressure on the cushions which they had built in. So that goes away. So I do believe that there would be some amount of consolidation happening if this had to remain for a very long time.
Right, Abhishek, it's wonderful to talk with you. You've given us a good clarity on the industry and the company as well, and yes, a good set of numbers also. It's always a pleasure to talk with you, Abhishek. So that's the management of Somany Ceramics, and a very surprise positive earnings coming in. But yes, there is a cautious tone because of the changing geopolitical tensions, and there's definitely a big change in the cluster of the tile segment in Morbi in Gujarat. For so interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Welcome, you're watching Your Money Matters here at NDTV Profit. I'm Mahima Vajrajani, and today we're going to talk about two things. First one, in fact, three things, Firstly, we're going to touch upon motor insurance or two-wheeler, four-wheeler insurance, as we call it, as to what one should keep in mind before going for these insurance, how important are these, and what are the aspects that one needs to keep in mind. The second thing that we're going to talk about is something that's been trending a lot on Google Trends. That is, everybody is going ahead and searching for Indian rupee versus the dollar, because we've seen Indian rupee depreciating to new levels of lows every day, and people want to know as to what's happening there. So we're going to talk about that as well. And lastly, we are going to talk about how, considering the crude prices are rising today, the second day in a row we have seen hike in terms of petrol and diesel prices. So how should you plan your transportation? So rent versus commute, how are you going to do that? That's everything that we're going to talk about in this show of Your Money Matters. Now, to kickstart things, and to talk about motor insurance, we're joined by Venkatesh Naidu, who's the CEO of Bajaj Capital Insurance Broking, joining us now. Venkatesh, thank you so much, first of all, for taking out the time. My first question is very basic to you. If somebody's going ahead and getting an insurance for their vehicles, what are the non-negotiable things that they should definitely look out for?
Wow, that's a difficult question for the beginning, Mahima, but thank you for bringing me up on the show. Buying a motor insurance, as you know, is a very, very simple yet complex topic, right? Today, the entire temptation is, do you choose the cheapest insurance, or do you choose an insurance that is valuable for your situation, for your motor, right? So something that is absolutely non-negotiable, Mahima, is you choose your insurance based on your vehicle, your location, your need, okay, and your context, right? And that's something that's very, very important. What do I mean by that? Okay? So typically, if you look at motor insurance, you can buy something which is a very, very base cover. Okay, today, what is mandated by the government is that if it's any car, you have a OD cover or a TP cover. A TP cover is mandatory as governed by law. Okay. But what a TP cover offers you is that it protects others from you. Means if you go ahead and have an accident and if you affected somebody, it protects that person from you. Okay, what an OD does for you, an own damage cover, is that it protects your asset, your car, right? So something that is absolutely non-negotiable is a OD plus TP, because even today, out of 60% cars that are covered in the country, about 40% in absolute terms are the only ones which has OD and TP cover. 20% of the cars have only TP cover, and 40% has no cover at all. So an OD plus TP is an absolute non-negotiable to begin with, Mahima.
Okay. So when we talk about third-party insurance, right? These days, when we take a look at third-party versus a comprehensive insurance, comprehensive policies are kind of becoming more popular despite of their high premiums, right? So what exactly does third party cover that or comprehensive policies cover that third party doesn't, or vice versa? How does one compare the two?
So comprehensive, like I told you, covers everything. It covers everything from the damage to your car, okay, to if you cause an accident, the liability, the cover, the money that you need to pay to the person who you have caused the accident. Comprehensive covers everything. If you take a third party only, it only covers the person you caused an accident to. So in case your entire car gets destroyed completely, that is not covered under the third party. Okay? So that is called the own damage cover, and OD plus a TP is a comprehensive cover, where it covers your car, your asset, and the person where you caused an accident, if at all.
Got it. Okay. So the other aspect is with regards to zero depreciation. Do you think it's worth having zero depreciation in your policy, and how does it help?
So again, a very, very commonly, ignored proposition. Okay, most people today, like I said, are very, very price sensitive. They look at the lowest price insurance versus insurance that offers them value. Okay, and what's with all the online applications that are available, people make quick decisions, ill-informed, right? A zero dep helps you where typically if there's a wear and tear in your car, you buy a new car and it's say 2 years old. After 2 years, all your parts go through a wear and tear. If you do not have a zero dep cover, that depreciated value is what is refunded by the insurer when you take it to a garage. You take your car to a garage and let's say your some parts of your car is damaged. If you do not have a zero dep cover, the level of depreciation that part has gone through, that is deducted by the insurer. typically it is about 20% every year. However, if you have a zero debt cover, then the actual value of that particular part is reimbursed by the insurer completely. So the difference between buying a zero dep or not buying a zero dep is about 8 to 10% of pricing. So today you may choose to save 8 to 10%, but tomorrow if something happens to your car, the value of that particular part or asset in the car will be far more expensive compared to the 10% that you will incur today as premium. So I would encourage everybody to go to have a zero dep as a minimum aspect in their car insurance policy.
Okay, all right. The other aspect is with regards to no claim bonus, right? First of all, of course, it's very important for everybody to drive safely in order to, have that no claim bonus. But how do you kind of put this into perspective and the ways to kind of protect no claim bonus as well?
So no claim bonus, very simply put, is that you don't claim means you get rewarded for the fact that you're not claimed. Okay. Right. Typically, every year you may get a discount of about 20% in your premium. It can even go up to 50% in certain insurers, right? If you have not gone ahead and claimed. Now, typically, what people do is that they go ahead and claim for every small accident, right? You may just go ahead and scratch your car, but you take it to a garage, and the garage person will go ahead and inform you that why don't you claim insurance. You may end up paying 4,000 rupees to address that scratch, but in the next year you may end up losing an NCB of 10,000 rupees, 12,000 rupees. So my suggestion to everybody would be that if there are very small damages and if you can fund it from your own out-of-pocket expense, then go ahead and do that so you can claim on your no claim bonus and ensure that you get that discount every year when you go ahead and renew your policy.
Okay. Okay, got it. And how do you look at cashless claim versus reimbursement claims? What is better?
Cashless all through. Okay, cashless is the absolute convenience. Go through all the network garages. You get the best seamless experience. The insurer will deal with the garage directly. Go ahead and make all the payments. You're not subject to the nuisance of making the payment, raising the reimbursement and claiming a bill. However, in case of emergency situations where you've gone ahead and had an accident and you have no way to reach your network garage, okay, which is improbable in these days. But even if there is a situation like that, you may always go ahead for a reimbursement claim. You'll have to go through a certain process. Okay, there is reasonable time for claim of, intimation of claim. You'll have to do that to the insurer. There's reasonable time for claiming the reimbursement. You'll have to do that. Follow the process and you will get your claim. But cashless is the best methodology that you can adapt to. Especially in a situation where network garages now have grown across the country.
Okay. Venkatesh, what are the common reasons generally because of which your motor insurance gets rejected? If you can throw some light on that.
Well, exclusions is the biggest aspect, right? Like I said, you can either take a comprehensive insurance with all add-ons, or you can take the cheapest insurance with no add-ons, right? Today, customers are not fully aware of what they're buying because they don't receive the right guidance. Okay. Right. For example, let's take this example that somebody may go ahead, in the floods of Gurgaon. I belong to Gurgaon, so I'll talk about Gurgaon for a moment. And you go ahead and water enters your car, your engine seizes. Okay, and you go ahead and, give your car out to the garage, and the garage will say, hey, you know what? The engine cover has not been covered in your policy. The obvious reaction of the customer is going to be, hey, is an engine part of the car? Isn't it covered? No, the engine cover is an inclusion. Okay, so if you go ahead and do not add that add-on, then exclusion is something that will happen and you will not, get the biggest claim where engine is, a significant part of the cost of a car, right? So the first thing that you need to be very careful about is exclusions. Look at exclusions. Don't look at the cheapest price. Look at the price married with exclusions and be fully aware before buying the car insurance. These are the aspects that are going to be excluded from my claim. And if those are exclusions that you don't want to live without, then go ahead and ensure